Good to see you, Roy. Good to see you. Looks like we got a couple students here. Gillis, good. Welcome back. All right. Just do a quick little audio check here. All right, good. Well, welcome everybody to the Cyber Expo. This is our biggest event. This is our biggest event of the year, the Cyber Expo of our end of the year. I know 2024 has been very interesting. A lot of crazy things been going on. We had this big rallies in Bitcoin. We've been having the elections, COVID just kind of ending. Just so much excitement in the market, and it's something that we do once a year, and it's one of our biggest events of the year. And we'd like to have some of the greatest speakers here today to kind of introduce you. We got you can see we got a great lineup of people that are showing up here that are going to be talking for the next 2 days. If you can't make certain ones, as long as you're registered, we will be sending you out recordings for it, and you'll be able to watch it later on. Once again, it's very important that you learn before you earn, okay, when it comes to trading. And listen, there's no better time to learning now because we're getting into the slow time of the season. I mean, the Dow is down about 64 points. S&P is up 36. It's like this all day long. There's not really much going to be going on going into the Christmas season. September, October, November were the best times of the year to trade. Obviously, probably one of the best Novembers ever, after the election. And you could see that the market's been up huge and certain stocks are pretty big because of it. But now's a good time to listen to these presenters, get to know a little bit more about them, see what you like, and take some of their classes and get ready into January, because 2025 looks like it's also going to be very exciting. All right. So we got a great lineup today, but I want to introduce our first speaker, and Rick Sandler, and tell you a little bit about him. I'm really excited to have Rick here. I mean, I haven't had him here in a while. And actually, Rick, we're going to definitely have you on our podcast. I know we haven't had you on yet, but looking forward to having you on. But just to let you know a little bit about him, he's the founder and president of Hit and Run Candlestick. The company's been teaching people, as long as I've known. He's been doing it for over 35 years, trading mainly in the stock market. Rick's been helping to learn traders over the years, and so he knows what he's been talking about. One of the coolest things about Rick is that he started something called the Road to Wealth program. It's all about helping traders with small accounts grow their money step by step. For example, Rick once started an account with just $5,100. He turned it into 14 times that amount in less than 2 years. He's also about showing people how to set goals and stick with their game plan. Rick also runs a HRC trading room where he shares tips, answers questions, and helps people with their trading every day. He's also super passionate about teaching others, just like I am and everyone else here. And he's made a big difference for so many traders. So let's give him a big welcome to Rick Sandler. The stage is all yours, Rick.
All right. Hello, everybody. Hey, Fausto, good to see you again. Yeah, really nice to see you and hear from you again. We hung out one time at one of the Vegas expos there. So very nice to see you again. Hey, what a great intro too. Absolutely fantastic. So, and yeah, let's see. I've only got about an hour, so I better get going here. Let me bring up a PowerPoint. I am sorry, I do have one of those boring PowerPoints here. I do have that. So the road to wealth is truly winding, and you have to stay on the path, okay? You have to stay on your path. Hey, I'm assuming everybody can see my chart, is that right? Or see the PowerPoint that's up there? Maybe if somebody could let me know, just to be sure.
No, we just see you, Rick, right now.
Oh, how do I, share screen.
There you go.
Better share that one.
There you go.
Okay. All right. Road to wealth. It's a winding road because we, as traders, we all have losses. We all have winners, and not just during the day, but we'll do that. We'll have a losing streak for a full week sometimes. I mean, it happens. And one of the keys is to stay on that path. And that's what I hope to show you here today. So let me figure out how to use a PowerPoint there. Quick disclaimer, just right here, Investing and trading involves significant financial risk and is unsuitable for everyone. Okay. Excuse me. I've got kind of a frog in my throat, so bear with me if I have to drink a little water here. So this right here, this is my trading account. Now, I think it's very important if somebody is going to get out there and start talking about, hey, I want to double my money in a year, maybe even more. I think it's important that you back it up and you prove it. It's not just talk. So I share my trading account with everybody. Of course, I cross out a few of the important things, like my account number. So this is a new project that I started in 1st of October, and the account at the end of this statement was up 54%. So, we went from, it was started with $3,000, then it went to, $3,590, and then up to $4,600. So honestly, if everything continues to go the way it's going to go, the way I see it going, my plan is to take that $3,000 and turn it into 6K. Sorry, I can't write with a mouse. I can't write with a pen either. And then turn 6K into 12K. You see where this is going? Whoops, 12K. See where that's going? And then 12K. You're picking it up now. So I honestly think I can do this in a year. As Fausto mentioned, I did turn $5,000, just under 80,000, and it was under 2 years. It was like 18 months. I did do that, and then last year, $100,000 account turned into $200,000 account, and I'm still trading that, but that's all in the back end. That's all for bigger stuff, longer holds, maybe longer term kind of stuff. But this is trading, helping small accounts. And you don't have to be a small account. Everything I do here can be for a bigger account. You'll see. The point is transparency. So I'm not bashful to show it. And if this number goes down, I'm not bashful to show it, because that's trading. And that happens to all of us. It absolutely happens to all of us. Okay. The best of us. Not every month is a winning month. So the Road to Wealth account, let me move this over a little. The Road to Wealth account, my goal is to double it in 1 year or less, full transparency. That's wins, losses, buys, sells, bank account statements, daily reports. In our trading room, I give daily reports. I'll even show them. I show them the account. So it would be something like this right here. Something like that right there. Show them the whole account and what stocks we're in, what positions, good, bad, or indifferent. If you're a member of Hit Run Candlestick or a trial member, of course, we post everything in the room, but you also get it posted to your app. As a member, you'll receive this app where no matter where you are, out playing golf, fishing, whatever, you'll get the alert, bought, sold, whatever we did, added to a position. Let's see here. There we go. To sum up the way I trade, here, let me get my yellow. There we go. I'm a short-term swing trader, and I'm always trading with goals in mind. And this is something that I think I'm going to definitely help somebody today with, okay? I use candlesticks, which represents price action. If somebody says you use price action, odds are you're using candlesticks. They're both the same thing. I use moving averages. I love moving averages. You'll find that just about everything I do has a moving average involved with it. And the reason for that, it's always on the chart. They're very easy to manage. They're very easy to see, and they're very easy to scan for. I manage my account just as much as I manage a trade. It's very important for me to keep the account growing. And so sometimes I'll take profits when somebody will say, why'd you take profits? Remember, my only goal is to double my account. It's not to do any more than that. And I'm dead serious about that. We're going to talk about that a little bit more too. I trade long and short. I trade stock and simple directions. The truth of it is, I trade a lot more options than I do stock. I personally do not believe that you can double your account if you only trade stock, unless you're in something that cures cancer. And then zippity-da-doo, you're probably going to double your account. Unfortunately for the stock traders, every option trade I take is a stockable trade. You can trade stock with it. And I just trade simple directional calls and puts. So really easy. Timing. Timing is one of the most important things, not for me, but I think for everybody in the stock market. Timing, timing, timing. We're going to talk a little bit about that too. Now, I've got some charts that we're going to look at here in a bit. Hopefully, if I get done in time, I'm even going to go into live, pull up my live trading and take a look at some things there. But sometimes it's hard to get everything done in an hour. Now, the easy part, some of you may disagree with this. The easy part is, whoops, that is not what I wanted right there, man. Let's try that again. There we go. The easy part is charts and entry stops and targets. Now, I know that some folks that maybe are struggling, you're fighting that. You constantly, you stare at charts all night long, you listen to webinars, you're just trying to get it done. I got news for you. That's the easy part. The problem is going to be the hard part. And that's what's messing you up with this, because charts and targets are the easiest thing in the world. I mean, if you're looking at charts right now, along with listening to me, just every now and then, look at some of these charts that pop up right over here. Just look at that. That's all you got to do. Okay. So the easy part, we're definitely going to cover today. It's the hard part, unfortunately, takes more than an hour. It takes more than 2 hours. The hard part takes some time. It really does. Does it take a year? Well, for some people, it might. Does it take 6 months? Maybe 3 months. For people that really, really want to learn how to trade, and you put your ego behind you, just toss it out the window, you could get it done in 3 months, probably 2 months even, because some of the stuff is hard to get rid of, especially for those of us that say are my age, say grandpa age or grandma age. We've got some bad habits. There's no doubt about it. And it takes a while to change those. But the hard part is this thing, greed and fear of missing out, being bullied into a trade. Now, I don't know if anybody knows what that is. I use this term a lot, being bullied into a trade. Say you're in a trading room and everybody's buying XYZ, buy. Everybody's buying it. And everybody's making money. And you're sitting over here waiting for something. I don't know what in the world you're waiting for, but you're waiting for it. Well, what happens is the position we're all looking at goes up. And finally, what do? You buy it up here. Well, you just got screwed. That's called getting bullied into a trade. I didn't bully you into it. The members that's saying how well they're doing, they didn't bully you into the trade either. You just finally couldn't stand it. You had a case of FOMO, and then you got bullied into that trade. So don't ever get bullied into a trade. Wait for the trade to come back to you. Pull back a little bit, wait for that buy signal, and then buy. Okay, so that's important. When to take profits. We're going to talk a little bit about that. When to take a loss. We'll talk about that. When not to trade. This is one of the biggest killers for people that struggle. People that struggle when they're trading, traders that struggle when they're trading, they're always looking at this. Right? Yeah, that was it. They're looking at charts they're looking at entry, stops, and targets. And they're struggling when maybe what they need to do is stop trading for a day. Maybe the market is not in your favor. Maybe that's the problem. And I'll bet you pretty much that's going to be the problem. Okay. I've done this too long. I've got 36 years of trading under my belt. I've got absolute losses. I mean, huge losses over the years. And in the beginning years, it's not even, it's not even funny. But one of the tricks is to learning where, stay in your lane. Where do you fit? Okay. When to sit on your hands. Oops, is that right? There we go. All right. So road to wealth. The road to wealth road, let me pull this over here for you. There's a calculator, and I think everybody should use this calculator. And I think if Donna has the link to it, she can post it in there. It's free for everybody. Okay. There's no charge. This is on our website. We don't collect your name. We don't collect your email. You can just use it. Anybody, everybody, it's free to the world. Okay. Now this was made for me by the person that designed and created the scanner. And what I needed something to help me double my money is what could keep me on the track. Just like if you're driving the car, stay between the lines. Otherwise, there may be a problem somewhere. Stay between the lines. So let's do this. Let's take a $5,000 account. And all you have to do is enter your number in here and hit enter. Okay. Did you know that that's all you need to do a day? $23.80 a day net doubles your money. Now I want you to think about that for a minute. When he created this thing for me, it blew me away. I mean, I did it all on paper, but it didn't have the impact as this. All you've got to do is net $119 a week and you double your money. $476 a month and you double your money. Amazing, isn't it? You think about that, how easy that is right there. If you have $25,000, just put 25 in there, make sure you hit enter, and now it changes it. Now I'm not promoting day trading. I'm not a day trader. I'm not promoting that at all. I just, when I'm in a position, and if that position, where's my arrows here? Blue. If that position, maybe I better use a pen. Say if that position gets to 120, say it gets to 240, double. And I'm trading the Road to Wealth account right now is small. All right, so it's like $4,000, a little over $4,000 at the moment. So I might be able to buy only two positions, two contracts in some cases. In other cases, I can buy more contracts. Depends on the price of it, right? But I buy at least two. So now what I'll do is I will come in here when that number doubles or comes close to doubling, and I will sell one contract because that's all I have to do to double my money. Well, I guess we were talking about we could do it here too. So I'll double my money. Now I still have one contract. There's nothing wrong with allowing that contract to go higher and higher as long as it does. See what I'm doing here? It keeps you on the road. Remember what your goal is. If you have 20, for me anyway, this is for me. If I had $25,000, I only would want to double my account. I promise you, I have absolutely no desire to make it any larger. Now, there's probably some eyebrows that were just raised right there. Do you know something that I learned the first time I did this? The first time I did this, I started with that $5,000 account. And when I followed the rules, I didn't double it in a year. Oh, no. 14 times. That's because I followed the rules. It was like a couple of months, I doubled it. And then a couple of months more, I doubled it. Then a couple of months more, it doubled. It's because I followed the rules. Don't get greedy. And that was one of the most enlightening things that has ever happened to me in trading. Absolutely. Don't get greedy. I don't want to make $51,000. I just want to make $50,000. Nature will take its course. You just concentrate on this part right here. and watch what happens. All right. So something I want to talk about right here on this, and this is free. I urge everybody to please get it. It's not anything you download. Just go to the website, use it every day if you want. I look at mine every day. Now, this assumes 210 trading days, not 365 days. And the reason is this is, again, was built for me. And I think I'm pretty close to what everybody else does. You've got to figure that there's so many natural market holidays. And then there's holidays that you just want to partake in that the market might be open. Then there's sick time. And then there's vacation time. When you cut all that out, there really is only about 210 days to trade. So that's where this is all calculated. Now, down here, there's a position size. So let's go back to $5,000. Hit enter. So what are you going to enter in a position? Now, this is on you, okay? I can't help you with this. I really can't. I can help you with all this, but this is tough because the percent that I use for a position should not at all be what somebody that's struggling uses. You know, maybe you need to use 5%. You know, it's based on how good you are, is what it is. What's your win-loss ratio? Are you super comfortable with trading? If you are, well, you can bump that up a little bit. But at $5,000, if you use 5%, you can only spend $250 per position. And you know, somebody would say, well, geez, I can't make any money at doing that. Well, learn and earn. Fausto said one of the very first words he said on the intro today was learn and earn. Learn first, then earn. Learn. And as you learn, you get better and better and better. This number here will raise. Let's take this number to 25,000. Hit enter. See how that changed right there? Learn and earn. Pay your dues. Everybody has paid their dues. Everybody. So, you know, don't feel like, you know, you're anything special. Sorry, you're not. You got to pay your dues. So learn and earn. So anyway, you can plug in whatever number you want here, what makes you comfortable, how much you can spend on a position, okay? Now, here's the really cool thing. Did you know to meet, if you only put one trade on, to meet your goal, you only need 9.5% for that trade? That's all. Hey, for those that are trading options, you're picking this up. Light bulb just went off, didn't it? I know. If you have two positions on, each position only has to go up 4.76% to meet your goal. Again, oh, the gears are turning. I can feel it through the computer. Amazing, isn't it? Just to meet your goal. That's all we want to do. And by the way, you don't have to use a double in here. You could put whatever number you want in here and just use these numbers, and your goal doesn't have to be to double. It's mine because I like something at the end. When I want a trophy if I win. I want one. All right. If I go to the ice cream shop, by golly, I want an ice cream. And if that ice cream shop is closed, I'm going to another ice cream shop because I've already got my mind set on it. So anyway, please download this link and use it. Whoops, I need to get this off there. There we go. All right. Always know where you are. Always know. Always know what your daily goals are, your weekly goals, your monthly goals. Scaling is very important. You know, that's something I forgot to mention here. As you grow in size, say you start with a $5,000 account. When you get to 6,000, change that number to 6, and that's scaling. And it scales you up here, and it scales you up here. When you get to, say, 10,000, okay, there we go. When you get to 10,000, that scales you up here, and that scales you up here. Scaling is important. Very, very important. Okay. All right. Where are we here? A few rules that I think are very, very important. And you know, we do things for reasons, whether we like them or not. So what I'd like to do is just imagine, let's get in our car and let's take a drive to the bank. Okay. And why do we stop at stop signs or red lights? Well, one, if we don't, we're probably going to get an accident. An accident in this scenario would be like taking a loss in trading. If we get in a wreck, well, that's a big loss in trading. So we want to get to our destination safely. So we abide by those rules, don't we? Why is it? Why? Why is it that most people, by and large, they stop at stop signs and red lights? But why is it that people, when it comes to trading, they throw stops right out the window? They throw the rules right out the window. I used to be the same way, okay? We got to have these rules. Why do we look both ways before we go on a green light? Because we don't want some knucklehead to run into the side of us. But when we go to trade, why do we not consider what the price action is doing? Why do we, oh man, it's broke a little bit below trend, but that's okay. I have hope. Not going to work. Some knucklehead's going to run into you. Why do we slow down at school zones? Well, that's a gimme, okay? I mean, other than one obvious, you don't want a ticket. Why do we slow down speed bumps? Because we don't like to go over speed bumps fast. It hurts our car. It's simply, we want to safely get to our destination or our goal. Setting goals. Goals provide direction, motivation, and a sense of purpose in our trading. This right here, I just pulled this off Google. I looked up goals definition. I pulled this right off Google. And when I read this, this is me all over it. And I think you could ask anybody in the trading room. That is me. I am extremely goal orientated. You can ask my wife. Very, very goal orientated. Anyway, this is just a slide. We've already looked at this, so we'll just get right over there. Okay, I want to talk about the T-line. Years ago, the T-line saved my trading career. The T-line is nothing more than the 8 exponential moving average. That's all it is. And it truly saved my career. There was a time when I was about to give up trading because I couldn't do it. But there was an awful lot of people doing it, and I couldn't figure out why or how. So it took me several months of no trading, just flipping through charts. And there's something I discovered is the 8 exponential moving average was magic for me. Now, it might not be magic for you, but it was magic for me. And I discovered that when stocks were on top of the, let's see, make it green, I guess. There we go. When stocks were on, when a price was on top of the T-line, we were actually doing pretty good. Trading was good. When it fell below the T-line, why I stayed in it, I'll never know. But by golly, I did. Until I discovered the T-line. This would have been me before I got religion here, okay? Like I say, it saved my life. And so when I started using it, my trading turned around. And then throughout the years, a few other things came into place. And that's something that we call the trendicator. And it's a green or red. It's green and red is what it is. It's go or no go. And it's bullish or bearish. It's extremely simple to use. And there it is right there. And I combine that with the T-line. So it's very, very simple. When it's red and when the T-line is below it, don't trade long, period. Period. Okay. Right? Period. When it turns green and the T-line is on top of it, you've got the 2 thumbs up to trade. Rock and roll. This thing's ready to go. And look at that. Just look at, this is Jets is what this is. Now, price action might have gotten you in and out, you know, if you're tight or whatever, but look at that trend. It never broke. And by the way, I use the trendicator as my trend. I don't draw too many trend lines. I'm not a big trend line drawer. The trends are already there, and I'm lazy as can be. Not gonna lie about it. I'm a guy, okay? I shouldn't say that. Not all guys are lazy. But there's my trend, and I'm gonna stay with that. Okay, let's look at, I forget what slide is next. There. All right. So this, whoops, this yellow line is the 3 exponential moving average. So I use these 3 moving averages. They're kind of my world. And as long as, let's turn this into a pin, make that yellow. As long as the 3 is above the 8 and the 8's above the trend indicator, you've got a bullish trend. If it's below, you've got a bearish trend. Do not go long here. Do not try to pick a bottom. I'm very anti-bottom picker. I'm very, very anti on that. I don't like it at all. Even if say you get a candlestick that pops up right here, I'm not a buyer of that. Not until we get our trend. I'm more likely to be a buyer over here. And you'll be able to see that see these little pullbacks, that yellow line right there? Those are entries right there. Entries, 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 entries. The only way to make that push back is if the candlestick has pushed back. You'll see that in the T line as well. See how we've gone flat right there? That's an entry right in there. Our flagship patterns, these are proven patterns that we have proven over and over and over. And it doesn't matter how good they are. It doesn't matter how good a pattern that anybody shares with you. No pattern is perfect. None. The magic is within you. That is truly the magic. All trading magic is you. There's some chart patterns that are pretty cool, pretty nice. You can visually see them. You know, there's all kinds of indicators that help out. I'm not a big indicator user, but you know, there's a lot of great traders that use indicators. But when it comes down to it, the buck stops with you, and the magic is within you. That's very important to remember. That's why number 2, or the hard part, the second part, that's the hardest part, and that's where the magic really comes out, because the first part, entries, exits, profit taking stops, that's the easiest thing in the world. That's all visual. One of the best entries, I think, in the world. I'll tell you, I think this is the best entry in the world, and it's just what we call a 3-8 trap entry mechanism, and it works both on long and shorts. What we're going to be, I've got a few charts that I'm going to look at here. These are 3 of my favorites: rounded bottom breakout, a trending pullback, and a blue ice failure. This would be bearish. These 2 are bullish. And like I said, this is what we're going to focus on mostly. I truly believe this is the best entry I've ever seen. And it is just an entry mechanism is all it is. You still have to find the chart, but we can share some of that here too. So for a bullish trend, these are some simple things that I want in a trade. So my market is the SPY. I follow the SPY. That's what tells me, is the market bullish or bearish. Okay. Now that doesn't mean that I don't look at the diamonds or IWM or the Qs. I do, but if I've got to have something to start with, my number one, my go-to, and the SPY is it. Okay. So I want the SPY to be in a certain trend. I want the 3 to be above the 8 and the 8 above the 17. Now we call this road to wealth trend. Okay. That's what that is, road to wealth trend. And then I want the chart that I'm looking at, considering I want it the same way. I want it in my road to wealth trend. I want to trade within a trend. And then the entry will be the 3A trap. We're going to look at that. And then I want to ask myself, do I see a profit zone? Do I see where I can take profits? Now, keep in mind, I'm going to use my calculator to tell me how much money I need to make. So I've got to be able to see, well, can I make that money in the first move up, or, the first move, whether it takes 1, 2, or 3, or 4, or 5 days. All right. I'm going to control the stop because I don't want big losses. There may be I think there's a slide coming up. We'll wait for that. So that's what I want for a bullish setup. For the bearish setup, I want just the opposite. I want the SPY to be trending down. 3 less than the 8, 8 less than the 17. Then this is the 3 EMA less than the 8 EMA, and the 8 EMA less than 17 EMA. Now, why? I get asked all the time, why do I use the 17? Why not use the 20? You can, okay? Trading is about what you do, and it's not what somebody else does. It's what you do. So whatever you do, be comfortable at it and do it over and over and over and over. I could not decide whether to use the 20 simple or the 21 exponential. I discovered the 17 was kind of covered them both. That's why I use the 17. It's not like it's some big aha moment or anything. Not at all. It covers the bases is what it does. The chart that I'm going to trade, I also want it trending down. I'm not just like I'm not a bottom picker, I'm not a top picker. You're never going to hear me pick the very bottom or the very top. I'm not that guy. I'm not that guy that does that. Okay. So then when I enter the trade, I want a bearish 3/8 trap. And again, do I see a profit zone and control my stop? Okay. So let's come over here. I want to check on one thing. Oh, cool. Okay. Here's the rounded bottom breakout. This is probably my favorite chart pattern of all time. And that's because it's made me more money than anything. I suppose anything that makes you more money is going to be your most favorite one. So, and what that is, it's simply, let me set this up for you. This is the 200 period moving average. Let's make this a little bigger and let's make it blue. That's the 200 period moving average right there. I want it in a downtrend. This is what we call the dotted deuce. Dotted deuce. I want it in a downtrend. And this right here is the 50 period moving average. And I want it in a downtrend. And of course, price here. See how our red dots are down red? They're not right here. They're not long. This is short. Don't be in this chart. I'm not going to bottom pick here. We popped up. We did not confirm a rounded bottom breakout. I'll show you what confirms in a second is. So I'm not going to chase that. I'm not going to chase this candle because I'm not a bottom picker. I'm not going to chase any of these because I'm not a bottom picker. What I want is my trend to be in place. Now, remember, the market has got to be in place too, okay? So I want the market, SPY, to be bullish. Okay. Now, let's focus on the black line. That's the T line, the 8 exponential moving average, and let's focus on the green dots. Notice the green dots started getting green here. Bullish but not tradable. Bullish but not tradable because we're not above the 50 period moving average. Now, I know everybody wants to buy early. Look, that is one of the biggest mistakes of traders that aren't making money, okay? If you struggle, stop trying to be in a chart so early. Trade within a trend. Let that trend get going. So here we come up. You can see right here, the T line is above the 50 period moving average. And right there, we're kissing it. I mean, on that day right there at the close, I would say tomorrow, as long as price can just hold in place, we're going to be above the 50. Now, let's take a look at this right here. Make this one green. Actually, make it magenta. Right there would have been any one of those three candles. Well, probably not that one. So let me back off here. There we go. Any one of those two candles could have been bought right there. And that would have, you would have been in confirming range of a trend. Notice the blue line now, that's a 3/8 trap right there. So what we're looking for is price. We'll keep that blue. Price, we'll make that black. Trapped between the 3 EMA. And by the way, I use 3 EMA high. Okay. Some people like to use the closing price, the last price. It would be the current price, whatever time of day you're in. I like to use the high. It throws a bigger net, and it allows me to be the judge if I want to be a buyer or not. It doesn't. It just throws a bigger net. It gives me more charts to look at, and I like that. Not everybody likes that. So these charts here, many of these should be 3/8 traps based on my setup. So and when you get a breakout here, that's another place I like to buy. I like to buy that breakout right there. So anywhere in here, that breakout, because that means momentum is working. Now we go up, see how we pull back. This happens all the time. And if you didn't buy it here, this is another opportunity. Look at that 3/8 trap. That would be a 3/8 trap breakout. And look where we're going. Okay. So rounded bottom breakout is price trapped between the 50 period moving average and the 200. It's a relief rally trade. And I'm only looking for it to go to the 200 or the dotted deuce right here. That's it. It becomes a different trade setup above the 200. Now, I'm not saying it can't go, it just becomes a different trade setup. But the entry mechanism is so sweet. Just trade within a trend and an entry mechanism. It's easy peasy. Look, like I said, charts, stops, entries, targets, that is the easiest thing in the world. The hard part is what we teach in the trading room, what we go over during the day. This is what takes a couple of months, 3 months, maybe 4 months, maybe. I don't know who you are. Okay. Stops. So let's not forget that. Let's do this here. Let's say you buy this, say in this area. In this area here, right there. And all of a sudden, something happens and it starts dropping down. There's two possibilities for stops. Well, let's do it this way. Two possibility for stops. Okay, now we'll need an arrow, I guess. So if you like it, if you're buying it and you like the chart between the T line and the 3, or on that breakout, well, you wouldn't be liking it below the T line. In fact, you wouldn't have bought it, not based on these rules. So maybe that's your stop at the end of the day, or maybe you just put a hard stop in below the T line and massage that a little bit with, do you see a tail in there? Something like that. So it's massage that area a little bit by a few pennies. You can put your stop right there. Or if that dot was to turn red, that would be a stop. That would be a stop for me in many cases, because that means that we could, well, there's a green dot. Everything looks hunky-dory right there, doesn't it? Not so much. Not so much, not so much. So if that dot turns red, that's time to be out. So stop 1, stop 2, depending on you as a trader. Whoops, I think there we go. A trending PBO. Trending PBO. Look at that trend. I mean, wow, right? Wow. Just absolutely amazing. Just using our trend indicator automatically. All that is a moving average. That's all it is. And I I think a lot of programs you can turn it red to green. I use TC2000, and on TC2000 you can do it very easily. A lot of programs, people have created code to do that. Basically, what it is when price is under the 17, the dot turns red. If it's above the 17, the dot turns green. That's really all it does. It's made for me. I'm kind of slow sometimes. I'm not the brightest tool in the shed sometimes. So I like the colors. It tells me, oh, hey, this is semi-bullish or semi-bearish anyway. But look how this thing pops up. And let's get a circle in here. See how we pop up? And look at that possible entry, 3-8 trap. Moves up. Maybe you're making money. You close it out, whatever. Maybe you're not in it. There's another 3-8 trap. We move up. There's another 3-8 trap. Here's 3-8 trap breakout. 3-8 trap right there. Up we go, up we go. 3-8 trap right here. Taking profits. Remember? We're going to use our calculator. We're going to plug in what our account size is. This is what we need to be considering for profits. Don't let greed come in there. Greed will kill you, I'm telling you. So what you do, maybe you're in this here. You come up here, you sell half your position, put some money in the bank, abide by your goal rule. We call these goals, by the way. We actually call them goals. You'll hear people in the trading room say, hey, I just put 5 goals in my pocket. You'll hear that all the time. And you still have half that can motor on up until you take off more goals up here. The mechanics of trading is the easiest thing in the world. Simplicity, all right? I don't use any indicators, by the way, other than volume down here, and I didn't put it on the chart on these charts because I want these charts as simple as possible. I don't particularly trade by volume. I just simply use candlesticks, price action, and my trend, whether it be bullish or bearish. Here's another trending. There's trending. Yeah, here, look at this. So see how we pop up here? 3-8 trap. Up and back, 3-8 trap. It actually just went sideways for a few more days, but it's a 3-8 trap. Really, I mean, a slow grind up, isn't it? 3-8 trap. Kind of a slow grind up, 3-8 trap. But notice the green dots here. They remain green. Price is not failing. Trend is still working. The momentum is still in place. 3-8 trap right here. All that's 3-8 trap. 3-8 trap wherever I stop the clip here. 3-8 trap on that. How simple is that? I don't know. I can't see any if anyone's asking questions or anything, I don't know where to look for that. But man, can I get a hands up? So simple on that. Watching my time here a little bit. Blue ice failure. Whoa. Blue ice failure. So a blue ice failure, it's the 50 period moving average is the blue ice. Okay. This is one of my favorite shorting setups. And I may have time here. We're going to go look at a live chart. So here, see how the red dots, and then that's below the 50 period moving average. We rally up over here. We pull back, we rally up. You know, we make a high, we make a failed high, and right there. See where we start down? 3-8 trap. 3-8 trap. 3-8 trap. 3-8 trap. 3-8 trap. 3-8. These are all entries. If you entered up here, you're still in it. But these are all entries here. 3-8 trap. Remember, if you entered here, you're still in it. If you're entered here, you're still in it. Unless you made some goals. Remember to put some goals in your pocket, because your end goal is to double your money or to make more money. Okay. I just use the term double your money. That's a big thing for me. That's a big deal for me. Okay. Blue eyes failure. There's another one. See how we broke down here? This could have been shorted right through here. And then it rallied up, might have scared you out. But keep this in mind. If it scared you out, notice that blue line. Well, this is set up bearishly. So actually the blue line might have popped over that. At that point, you'd have to switch to a bullish chart. This is my bearish chart. The 3 EMA is the low. Okay, that's probably should have mentioned that earlier. Sorry. 3 EMA low. EMA low. Sorry about that. 3 EMA low is what I use. Okay, so right there would have been a nice 3/8 trap entry, and down we go, down we go. If you entered here, you're still in it. This might have gotten you out. I mean, it might have, you know, a big candle like that on the 200, that might have gotten you out. But if you entered here, I'm pretty confident you would have made your goal, multiple goals actually. And then it tried to bounce up and couldn't go anywhere, and then back down. So, hey, I'm at the end here. Actually, I still have time. I would like to take this away for a second, and I would like to go live if that's all right. And let's talk about you know, some trades. Let's look at these. PYPL here. Look at that. 3/8 trap setting up. Nice trend. 3/8 trap setting up. I do want to check on the market though. Market's holding up. Okay. So let's check on BBWI just popped up. Look at BBWI. There's a nice rounded bottom breakout that we talked about. Beautiful rounded bottom breakout. Right? If it would have been bought right in here up to the 200, well, that's a 26% stock trade. Just think if you had options on that, man. Wow. Yeah, we broke out of the 200. We're putting in a nice little flag. That's going to be a 3/8 trap trade. Or it'll be a 3/8 trap or a 3/8 trap, just slight breakout is what it'll be. Take a look at TCOM. I don't like that chart. I mean, I just don't like the makeup of the chart. How about love? Look at love. Nice big move up. Let's look at the trend here. Arrow. Look at that trend. I'm going to go from the red dot right up to the green dot. Look at that trend. Rise. There's your 3/8 trap entry area. And we're in that 3/8 trap entry area again. Now, not all 3 traps are meant to be bought. All right. So I think I would want a little more confirmation on that one. Tell you the truth. A little more confirmation. Anyway, let's see here. ANET. Well, ASAN, I guess. That was going to be a 3/8 trap breakout. Look at the 3/8 trap buy right in there. 3/8 trap buy. ANET. Kind of a jumpy chart, but it looks good. SWKS is one I was looking at earlier. I'm eyeballing this one. It's going to need to get over that 50 period moving average right there. But this is one I'm watching. All right, let me get back to I guess the PowerPoint here. So I want to thank everybody for being here today. I really, really do. I have a fast track Road to Wealth class coming up on December 17th. It's $50, includes 1 month membership with Hit and Run Candlesticks, complete full membership. And if anyone is interested, I don't know how you get the link. Maybe you guys have it. I don't know. But if you're interested in that, would love to have you there. And again, it comes with 1 month of all the whistles and bells as a full member, everything in there. Also, if you're not doing anything tomorrow, I've got an open house tomorrow. If anyone wants to come over and just spend a day in the trading room and see what we do in the trading room there. So anyway, that's I've got 5 minutes. I don't know if there's any questions or if I don't know where we are, what we're doing there. But if anyone has any questions, I can go look at charts, explain more, or take it from wherever.
No, Rick, listen, that was amazing. You know what I really liked about what you were talking about? I love that feature on your website where you just basically just showing how you're managing your money and everything like that. What I think is great, I think you and I have a lot in common is that, like, I don't teach people how to make money. I teach them how to stop losing it. That's the biggest problem. Yeah.
I think everybody can make money in trading. It's
Yeah.
just we all lose money. All of us has losing trades. All of us have losing days. The trick is to compress it and keep it smaller than our winners.
And
So,
survive. You just got to survive. You're going to lose.
Yeah.
I tell everybody all the time, so it's just
Yeah.
funny just listening to you, going through that. You see you focusing on a lot of it. I tell everybody here, and everyone knows me here. A lot of students here know me. I tell them, listen, like when you get hired for a job, they don't expect you to pat you on the back every time you do a good job. That's why they hired you. It's like they don't want you to hurt anybody or make any mistakes. But thank you very much, Rick, for being here. Listen, we got to get you on my podcast.
I would love to.
We'll get you up. We'll get you up. In the beginning, I'll get Rich to get a hold of you and Greg and all them. And then, but thanks for having me. Everybody take advantage of his $50 promo. It's dirt cheap, and like I said, the worst thing that happens, you learn something. You know what I mean? Yeah. But listen, you have a happy holidays. Thanks for being here for our Cyber Expo Spectacular.
You too, and and everybody out there have a wonderful holiday.
And it was great seeing you. I know it's been a long time since
it has been. Yeah.
Absolutely.
All right. Thanks, Fausto. You take care.
Thanks a lot, Rick. You too. And everyone, so let's get ready here. We got about a couple of minutes for everyone just to stick around. And then we're going to have Larry Gaines in here. Really looking forward to have Larry here. We had him on our podcast too. We had a great response. Everyone loved them so much. Let me just change it here. One second. Oops. There we go. Hold on one second, everybody. All right, there we go. Just really quick. So so we got Larry Gaines coming in about another 2 minutes. So give everybody a quick break. Larry's got his PowerPoint up there up and running. We're going to talk a little about that. So before we get started, so hopefully everybody's just keep everyone in mind. We got a lot of presenters coming up for the next 2 days. If you're not able to stick around for all of them, I know it's a long 2 days. I know you got some trades. I mean, as Larry's been talking, and Larry's going to be talking, and Rick's been on. I've been watching some of the stocks that we've been doing. I don't know if you guys noticed, but we broke 100,000 on the Bitcoin. So a lot of stocks are doing pretty well that are trading with Bitcoin, like the IBIT and all those ETFs. And they've done really well. Hopefully everybody had a chance to subscribe to the channel, watch some of the videos I did post on it on social media. I did do a big one yesterday on Bitcoin about the 95,000, about that big order got filled. I'm refreshing, and you could see it was a major support level, and it bounced over there about 5,000 points. So there's always going to be opportunities where to get in and out of it. And like all these presenters here are going to be telling you, you got to know how to control losses. You got to know when you don't want it. You're going to take a loss. You just got to stick it out. You know what I mean? Just have to sit there and be like, you know what? I got to hold on to it. You know what I mean? I'm at support. There's no reason to sell it here. Maybe it's time to average down, whatever it is. But that's what's nice about being in the game, understanding how to play it. And that's why we're here to understand, from the other presenters, other speakers of how they would handle it, And remember, we all trade I would say about 70% the same. 30% is different. And the only difference that we trade differently is we trade different markets and have a little different style. But the 70% the same is a lot of the discipline, the psychology, and all that stuff. And that's what's great about it. So anyway, let me introduce our next presenter, Larry Gaines. He's the founder of Power Cycle Trading. You probably heard of him. He was on my podcast not too long ago. Very excited to introduce him, being the founder of it. And Larry has over 30 years of experience in trading, and he's worked with some of the biggest players in the world of the commodities and finance. He started his career as a trader as crude oil, from what I've known, and from what he told me after having on my show. He's managed, which is amazing, over billions of dollars in trading of international oil companies, where he's been executive vice president for. Or after the years of a professional trader, Larry's decided to focus on helping everyday traders like you to succeed. So he started Power Cycle Trading back in 2009. His goal was to make traders easier and more profitable by teaching them the strategies to manage risk and, and to increase their success. One of the days, Larry specializes on the options trading. That's really what he focuses on. He's developed a system that has worked for all types of traders, whether if you're an intraday trader like me, a swing trader, a long-term investor. Larry's also built a very supportive trading community where he shares his tips and tools every day in a virtual trading room. Larry has helped over millions of traders throughout his program, his webinars, his newsletters, and his passion for teaching really shows, and you'll see it just by listening to him today. So please, let's give him some warm welcome. Larry Gaines, the stage is all yours. Thanks for being here.
Hey, Fausto, thank you so much for having me here. So let's get started. So what I'm going to dive into today is, how you can trade uncertain markets, some really low risk, high return option strategies that you can use. So, when we're trading, we're always going to have some kind of market uncertainty. And, right now we've got everything kind of firing on all cylinders. So, uncertainty is kind of diminished, but it'll pop its ugly head before we know it. So the following presentation is purely for educational purposes. Any stocks, options, futures, or options mentioned does not constitute advice and should not be construed as a recommendation. So, I've been trading options now for, over 30 years. And what I've really found that the most valuable go-to option strategies that can literally help any trader or investor out there, and especially when we get into, really high uncertainty times, are to use to incorporate into your trading the option butterfly and the long condor. They're kind of what I call my trading secret weapon. So the big advantage of these strategies is their unique option framework. So it's kind of designed to take advantage of both, your time decay and volatility, which are two of your most main option pricing components. And these kind of strategies can be used, in any market environment, which makes them really great when we do, get more uncertainty popping in and more volatility. So it just comes down to if you know when and then how to use them. So because they're structured to require only a small amount of your, really hard-earned capital, your trading rooms or returns can be explosive. It's kind of like lightning in a bottle. You find that perfect trade and you want to bottle it up and, use it over and over. So it's kind of like that. Now, these kind of strategies can work, no matter what the markets are doing. We could be in an uptrend, we could be downtrend or sideways market. Really helps to take the unsettling guesswork out of your trading, eliminates the stress of you having to be perfect on a stock's direction or overall market, and will really help to eliminate the time decay expense that you're going to encounter from decaying long options. So that's a really kind of a passion of mine, is get that time decay, let's kind of neutralize it. So with these two strategies, we can really do that. Now, they can also be structured for very, very low costs or real low capital at risk. And that's what makes them great in any kind of market. But really, when we get in uncertain market environments, we can really lower that risk. And they can give you returns then on that lower capital of risk at 10 to 1 or even higher. So I'll show you some pretty cool trades that we did that we got some great returns, using these types of strategies. Now, when we look at the butterfly and long condor, they're also great when you mess things up. So we're always going to have a trade that goes against us or starts to go against us. And by using these two strategies, we can then, cover our, what really fast by just neutralizing the trade and reducing the trade risk by incorporating either a butterfly or condor around your current core trade. Now, by constructing either the butterfly or condor spread around a strike that is under pressure from another core trade, maybe you do a credit spread or have a debit spread on, it's really become the best way that I've found to not only neutralize your risk, but it's going to lower your risk of your initial trade. I had one member, Pam, she said, I wish I'd known how to do this hedging before I lost so much money on credit spreads. So if you have done credit spreads, you're probably, familiar with the fact that, you have all these great little winners, chipping away. And then all of a sudden you have that big one that goes right through your short strike and you're in a heap of trouble giving back a lot of your gains. So with this kind of strategy, you can actually neutralize that kind of spread pretty fast. We'll talk about that here in a bit as well. So when we look at the butterfly or condor, they're kind of simplistic to begin with. So they're just based on vertical spread. So in this example, let's say we have a long call, and then we want to offset that risk. We could sell another call against it, and we just made it call debit spread, right? So in this example, we've got a risk of say $300, which would be your debit paid. All right. So if it closes above your short strike here, that 1020, we're going to keep, make our full profit. So this is, you can see it's a $10 wide spread, which would be $1,000 on an option contract. Remember, one option contract is equivalent to 100 shares. So $10, so it's a $1,000 wide spread in this example. Your debit cost was 300. So your potential profit is the difference, right? So you could potentially make 700 on your risk of 3. So pretty decent risk reward return on that. Now, but if we wanted to lower that risk even more, we could do that by selling a bear call credit spread against it to offset that $300 risk. So we could do that by selling a call right here. We could sell that call, that 1020 short strike, buy another call above it, the 1030, to make it balanced. So another $10 wide. So now we've got a spread with $1,000. We brought in a credit of 200, okay, right here. So in this example, we would potentially, if it closes below our short strike, we'd keep the $200. But look at potential risk. We've got a risk of 800. So this is what we call a negative risk ratio. We're risking 800 to make 2. That's how credit spread typically works. We call it probability trade. But if we combine the two together, we've just created what we want to, what we call a butterfly. So if I add that to the original debit spread, let me do something here. We've got a butterfly, and now we've reduced our risk down to $100. Okay, so we had that initial call debit spread here, right? Then we added the credit spread, and now we've got a risk of 100. So if it goes out here at what we call the top of our tent, this would be a max profit of 900 on our risk of 100. So that's a 900% return. We're risking $1 to make 900. So just a fantastic way that you can adjust a trade or leg in, leg out, whatever. So that's kind of the simplicity of, a butterfly. Now, the other part of the trade strategy that I love is what we call the long condor, not to be confused with an iron condor. So in this one, it's similar to the butterfly, but we're spreading it out or widening out the profit zone. All right. So instead of, having a butterfly where we're really threading that needle right here, we're going to spread it out and sell the call credit spread further out of the money here to make us a bigger profit zone in here. So these are the two strategies that we'll, really kind of cover here today. And what I thought we'd do, we can go through some examples, take questions, whatever, but that's the core concept. Now, here's the other thing that make the butterfly and long condor dynamic. It's when we get down to options, the thing that we really want to be focused on is the time decay and volatility, or theta. And when we're looking at the butterfly and long condor, these are really important. The option pricing and the concept of time decay or theta, or time decay, and how that impacts the price of the option. So let's kind of take a quick review of that to kind of get your footing on what that means to the price of your option. Now, when we look at theta, what it does, it tells us, it's the Greek that tells us how much your option price is going to go down over time. So this is the rate of time decay of your stock or your security option. And at the expiration, this goes to 0. So implied volatility and time will always go to zero at the end of the day or at the end of expiration. So we want to take advantage of that with these two strategies. So here's some kind of go through the kind of simple math. So let's say we had XYZ is trading at $45 and we're looking for a potential move down to just say 43, a really short term, small move down. Now we could do a butterfly where we're targeting, what I like to do is target, have our price target and have that set as the body of the butterfly. So we're going to target 43. So in this example, I'm going to go out, I'm going to buy say a December 44 put. I'm going to pay $2.38. That would be your debit cost there, or $238 per one option contract. And then we're targeting a downside move of 43. So then I'm going to sell the December 43 put. I'm bringing in $1.67 credit. And then I'm going to sell it again, the 43 put, bringing that in, and I'm going to buy below it the 42. So now I've just made a butterfly. So I'm long the 44 put, short the 43, and long the 42, a narrow butterfly, put butterfly for a downside move. So what I've done here is I've taken my debit cost 238 plus $1.06 for that 42 put, plus or less the credit I received from selling those two 43 puts. And now you can see I've got a total risk on this spread of $10 per spread, or per one butterfly. Now, the potential profit is just take the spread width, say 44 right here, less 43, that's a dollar wide spread, right? Less the cost of the trade, 10 cents or 10 bucks. So potentially 90 cents or $90 per spread would be your profit, or a risk reward of, risk a dollar to make nine. So 900% return. So that's kind of the simplicity that you can have from it. Now, when we get into the butterfly and condor, there are a number of different variations that you can use. And so I thought we'd go through the different variations and I could talk some about that so you can get a better idea. So, one major goal, in my opinion, for, every trader is really you should select trades based on what's going to give you the most consistent positive returns with low defined risk and always the greatest return. So I always look at risk first. And then what I'll do is back into potentially what I'm going to make on that risk. So that gives me my reward to risk, or risk reward. Okay. So I look at my risk first, back into what I'm going to, potentially make. And then I decide if that's a good enough, risk reward, payoff that I want. So one of the best ways to know, which strategy to use is to understand the different option strategies that are available out there to you. And then, pick the one or select the one that's going to be best suited for the market environment you're trading and for your specific goals. So, everybody here is going to have a different capital count. John might have, 10,000 or whatever, and Fausto might be trading with $100,000 account or something. So you're going to have different risk parameters that are affecting your trade. But the one thing is, when you do butterflies or condors, you can do it with any size account. You could do it with one lot order, or you could do it with thousands. I've done, butterflies, thousands of contracts, for hedge funds and things like that. So it's a really simple strategy, but a great one to put into your portfolio. Now, when we look at the butterfly, or the butterfly family, I kind of call it, there's a lot of different variations, but they all have that basic commonality of your selling time and volatility with the spread. So we can do what we call a long call or put butterfly, that variation. We've got what we call the broken wing put or call butterfly. We've got what I call the ninja or unbalanced or ratio butterfly. We've got what we call the iron butterfly. And here's a really cool one, the lotto butterfly, which we'll look at that one. And then you've got a whole different category of hedging. So defenses that you can use to, cover core positions as credit spreads or debit spreads, whatever. And then kind of that other variation off of it, the long condor. So these are the different variations that really give you a lot of ways to, attack a market or trade a market based on what it's doing or showing you at that, any given point in time. So let's take a look at a few so you can get a better idea of how they work. Now, one more thing to point out is that we can adjust our risk, reward, or profit based on the wingspan of the butterfly. So if you were, let's say you're collecting butterflies, you're going to probably really want a really wide wing butterfly. It's going to make you easier to capture a butterfly than if you're just using a small net. So a butterfly is the same way. If we want to really have a big profit zone or area that we can cover, we're going to have a really wide wing butterfly. So it's going to increase our potential risk, but it's also going to increase our potential profit zone of where we can, capture profits. Now, if we really want to tighten up our risk and reduce it, we can then narrow a butterfly, which will, really lower the cost of capital that we're putting out. And if we get it right inside that tent, we can make a huge return on that small capital investment. So those are kind of how we can control risk reward on the butterfly. Now, here's the first one I'll show you is kind of what we call a narrowing butterfly. So this is going to be a $10 wide, or which would be $100 per spread. The other thing is the butterflies are great for, index options or either ETFs like SPY, QQQ, the Russell. We do a lot of butterfly and condors on, these, ETFs and indexes. So here's an example of a narrowing. So here's SPY, and it's trading right here at 267. So in this example, wanted to do kind of a butterfly targeting up here just to 273. So this was going to be a Fibonacci level coming in at 618. I love to use Fibonacci, market activity, option open interest, things like that. So we were getting a price entry right here at 267. So entering right there. And then we were targeting this area here, this 273 area, for a butterfly to directionally go to. So it's going to be a move to that area. So did this with a $10 wide butterfly, which would be 10 cents, okay, or $10 debit. So here was our target was going to be to 273, and it was trading at 267 when we set it up. So went out and bought the 272 call, sold the 273, sold the 273, bought the 274. So we've got that narrowing dollar wide or $10 wide butterfly. Cost of the trade was 10 cents or $10 debit. Potential profit is the spread width of the dollar, 100 less that cost. So potentially make 90 bucks, which would be a 900% return. Now ended up with taking out $70 per spread on this over a 2-day period. So still a great return, right? 700%. So that's the beauty of it. You can make some just fantastic returns on very, very low capital that you're putting out. So this one went out currently just pretty close to right there, 273, right in there. And so this went out from the spread initially was at 10 cents, went up to 80 bucks or 80 cents. And so that was a $70 per profit per spread or 700% return. So, a pretty decent return on, 4 contracts that was over, 280 bucks. So that's right there, pretty close to the top of the tent there. All right, so your big advantage, you get the advantage of that time decay from the, short volatility and time, and those two components go to zero at expiration. So that makes up a big potential percentage of the profit that you make. And then you get the volatility class from the implied volatility, potential higher returns on that trade. All right, so that's a kind of a look at a real narrowing if you really want to tighten up your risk. Now, we typically do wide wing butterflies, and the reason we do wider wing because it's going to give us a bigger, wider profit zone. We have a bigger zone that we can profit from if we make it real wide. These again are going to be structured for very defined risk and great for hedging. I like to use them what I call for targeted directional swing trades. Those are trades that you might be in for a day to 2 weeks. The sweet spot's kind of about 1 day to 2 weeks out. Great for what we call pinning trades, where we think there's going to be, at expiration, the market might go out at a certain strike price. This is how we play those kind of actions. And then fantastic for high volatility markets, because when you're getting a high volatility market, what happens? The implied volatility goes up, which is a benefit to the butterfly and condor. But also we can reduce our risk with these two strategies. So we can get really small, lower our risk in a volatile market. Also fantastic for high price stocks. When you get stocks that are, over $500, $600 or $1,000 per share, they get expensive as far as you as a trader try to, buy 10 shares or 100, it gets costly. So this is another way to do it. Have no time decay, and we can get returns of up to, potentially 20 to 1. And I'll show you some pretty cool examples here on that. So here's an example of one that we had set up on QQQ. This was the first short trade, and this was a $10 wide or $1,000 wide spread doing a wide wing put butterfly. So kind of going through the setup of this trade, it was trading here at 314.60, and we were looking for a potential move down to 304, 305. So we were trading right here where that arrow is. I like to use what I call momentum to kind of give us price direction. So we had a cycle, what I call reversal indicator right here. We get that reversal, and then we have our negative momentum, and then we start breaking a key area of support. And that's what was breaking this 314 area right in here. So we set up this butterfly. Let me show you how this worked. So then we were targeting to an area down around 304. And so we set this up. So let's walk through that, how this turned out. All right, so what we did here, going through the structure, we had trading at 314.60, and we were targeting down to 304. That was going to be our kind of profit target based on fib levels, etc. So we bought the 314 put, sold the 304. Okay, so we're trading right there. So did that. You can see it's $10 wide spread. And then we sold the 304, bought the 294. So that's also $10. That's why we call it a balanced butterfly. So we've got this spread like this, $10 wide. Total risk was your debit paid of $2.10 or $210. So the spread is $10 wide or 1,000. So the potential profit, if we were to go at expiration right at the top of the tent or the butterfly body, would be $790 per one spread, which would be a 376% return, or you risk $1 to make 376. Now, if you did this versus you went out and shorted, let's say QQQ or something, you did it that way, you would have been making, $10.60 per share. You only get a 3.36% return versus this has potential for a 376% return. So just a huge amount of difference there between what you get and the amount of risk. So this one went out pretty good, pretty close, not exactly perfect to our top, but it doesn't matter. If it goes out just anywhere inside here, we're going to make a good return. So it goes out right here at expiration. So this is going out right at 306.17. So you can see it went from 210 to 782. So this ended up being up $572 per spread, which would be a 272% return versus if you just were doing shares outright 3.6. So again, we get that big advantage from time decay, volatility collapse, very low defined risk and high return on our capital that we're putting at risk. All right, so that's a kind of what we call the wide wing butterfly. Now, here's a really good example to show you the how great these are if you want to trade not only a high uncertainty or high volatility market, but they're great for placing trades on high price stocks where you can do it for a lot lower capital than you would if you bought the shares. So here's an example on Amazon. So at that time back when this was done, this example, Amazon was trading, close to $2,000 a share. So this trade was setting up a long trade on Amazon, but instead of having to buy the shares, we did it through this option spread. So the kind of the trade setup would look like this. Had come down to this 200 period moving average, and it was just really churning on Amazon. So you can see back when this was trading, it was trading here. This was back trading at $1,782. All right, 1,782. Now, to make this equivalent to option, if you bought one option contract, it's 100 shares. So if you went out and you bought 100 shares, you're out $178,200, right? That's a lot of capital that you're putting out. But as I'm going to show you in this example, we could do the same kind of trade with the same potential upside by doing it with the butterfly. So we were targeting this area here, this 1830. Always have a target. That was our target based on Fibonacci option activity, things like that. All right, so here's what we did on this trade, and we did it at a super low capital at risk. So the target was going to be 1830, okay, from 1782, we're 1830. Now, if you hit that target at 1830 with the stock, you would have been up $48 a share. So you'd made a 2.69% return. but you've got a huge amount of capital that you putting out at risk, right? Now, by doing this as a butterfly, look at the cost of this trade. We were able to do this targeting 1830 by doing a $10 wide butterfly, the 1820, 1830, 1830, 1840. So that's a butterfly, $10 wide. Look at the cost of the trade, 80 cents, right? 80 cents or 80 bucks. Now that's the total risk that we have on this trade. It's a debit cost. Spread with 1,000 less 80. So if it went out right there, boom, you'd make $920. That's over 1,000% return, or you're risking $1 to make 11.5. So that's the beauty of it. Now, the one other thing that's really cool is that I'm going to show you how implied volatility and time really affect this trade. So the next thing is, here it was trading early in the morning. It was trading in the AM on the day of expiration. So it was trading at 1836.55. And so you can see it's right here, right there. And so 1836 area. So the spread, though, was still at a decent profit. So it had gone from 80 cents or 80 bucks to 230. All right. So it's up $150. That's still a really good return, though. That's 187% return. Okay. 150, 187% return. But see all that black area? See that black? That's what's potential profit made up of the time component and the implied volatility component that's in the spread. Now at expiration, which is going to be later that day, those two are going to go to zero, and we're going to get to suck out a lot of that profit. So if we're still trading around here or anywhere in here, we're going to be putting a lot more money in the pocket based on that time decay and volatility decay going into our pocket. So here it is about 3 or 4 hours later in the day. So early in the morning, it was up 150, 187% return. Now later in the day, closer to the expiration at the end of the day, this trade now had gone from 80 bucks. Now it was trading at 695. So it was trading at a profit now of $614 per spread, or 769% return versus your share. So went from in the morning, up 150 bucks or 187% return. And just, a few hours later, now this thing was up 4 times that much. So that's the beauty of it. You can see there's very little black in it. That's stripped out all that time and volatility. So that is the beauty of it. It's just got so many different, benefits to it. Now, here's another one that we did just recently. This was on Apple. This was doing it with a long call condor. Okay, so we're looking for a directional move up. And this was, the way that we structured this with Apple. And, just one more thing. I have an alert service that sends out these kind of trades. So that was one of the alert trades that we sent out. Now, going through this trade setup, we were looking at Apple for a move up, and we set this up, based on this condor. So Apple's trading right here at 228.80. This was back on the 21st of November, trading right there. We had our, stock reversal indicator, momentum up. So the direction was potentially to the upside. We were looking at our fib levels here. This was breaking through the 50% retracement level. So we triggered the trade right there. And then you can see we went through that 618 and had a move back up towards that prior high. So we structured this with a call condor to capture this move up, but to kind of cap the trade to where we could bring in some premium. All right. So we had a pretty fantastic trade setup on this going in and pretty much nailed it. So here was the trade that we did. And so again, we were trading, it was trade 228.80. So we went out, and this was by the 29 November series. We bought the 230 call, sold the 232.5 call debit spread. So that's a call debit spread, right? Like that. And then we set out further, we sold the 237.5, 240 call credit spread. All right. So we were able to capture some premium out here, cap this trade upside area there. So we were trading between these areas, kind of capping that range. And so we had this trade set up here, long that call debit spread, short the credit spread. So you can leg in or do it all at once, leg out, a lot of flexibility. But here's our potential profit. Max profit would be if it goes out between those two spreads. So you can see the cost of the trade was 82 bucks. Our spread width was $2.50. All right, 250 less 82. So potential for us to make $168 per spread. If it goes out here, that'd be a 204% return. Plus, it's a positive theta trade by having the credit spread side offset the debit spread side, which has negative theta. So this trade went out about as perfect, right where we want it, right there between the two spreads. So this was on expiration. So you can see it was traded at 235.74. And so this went from $82 up to 249. And that was a $167 per spread profit or 203% return. So, if you did one spread, you made 167. If you did 10, you can do the math, right? But it's a great way to trade because we can also keep our risk super low. If and that's going to be the max we'd lose is the debit cost there. So beautiful setup on that. Now here are some other ones that these are really cool. This is what we call our lotto ticket. So this is a butterfly trade that we can use for what we call pinning. And this was from one of my members, Bill. He really kind of summed it up nice. He said, the butterfly strategy is one of my favorites. It's the big winners that eventually make the difference in your trading account. With all the so-called low-risk option strategies being sold to the public, an account without the potential to hit that big one, once in a while not betting the farm is a slow ride up a long hill. But this strategy is easy as ABC. And so it really is. It's kind of ABC kind of strategy once you get to understand it. Now, here's one that we did. Again, these are alert trades that were sent out. And this one was incredible. This is one that we did on Tesla, which is a really great one for, butterflies and condors. Now, Tesla was trading right here to kind of walk you through the setup. It was trading right here at 189.35, right there. Okay. And so we had a target. We were looking for a move to 200 for an expiration on a monthly. And so we were 2 weeks out, but there was a lot going on right at this 200 strike. So it was a fib level, option activity, et cetera. So this was our target right there. All right. So then we set up the butterfly with the body of the butterfly at that target of 200. But look how cheap we were able to do this butterfly. All right, this is what we call a lotto trade because the risk on this trade was 12 cents or $12, right there. So trading at 189.35, we were on the 8th, and this was for an expiration on the 16th. So this was about 2 weeks out when we set it up. So we're going to target the butterfly body 200. So we went out and bought the 197.5, sold the 200, sold the 200, bought the 205 and have $2 wide spread. So did that butterfly. All right, $250 wide spread, 12 cents, $12. That's the max risk. Potential return is at the butterfly 10. If it goes right up there at 200 expiration, this would make $238, which would be on your risk of $12, 1,983% return. So these are, absolutely trades that are possible to make these kind of returns. So that's why they're so kind of exciting, and that's why we call them a lotto trade. And if you're wrong, you lose $12. All right, so that's what it looks like from the risk reward parameters. So here's what it went. This one perfectly pinned, which is unbelievable. Actually, they typically will be somewhere around it, but this was a perfect pin. So what we'll do is you'll have, when you have multiple contracts, you'll scale out and leave a little bit right to expiration so you can get that perfect pin. But, we'll be getting out ahead of time in case, it flips back and forth. But this one went out perfect. So you can see it went from that 12 cents or $12. So this was a max profit of $250 or $238 per spread for the trade. That was a 1,983% return. Over that 8-day period. So really beautiful setup there. Now here's another one that we did. This was on GLD, which was very similar, not quite as good, but pretty close. So this is another one that we did as a alert trade, sending out this one for a potential pin. And GLD, when we set this was up, set it up on the 8th of August. It was trading at 222.85, and we were looking for a target up here for it to go out at 230. So we set the trade up, trading right here, we had what we call our cycle reversal. Momentum was starting to shift up. And so there was a lot of option activity in this area of the 230, not what we call price action activity as well. So you can see this prior high right there. So that's where we were kind of shooting for that 230. All right, so we set this trade up, and let's take a look and walk through it. So what we did was a butterfly, again, targeting the upside, move to 230. When we set it up, it was traded at 220, 285, and we bought the 227 call, 227, sold the 230, sold the 230, bought the 233. So this was a $3 widespread, right? $3. So our risk was $300 widespread. Our cost of the trade was 29 cents or 29 bucks. So potential to make $271 per spread if it goes out at the top of the tent, a 934% return, or we're still going to make great money if it goes out anywhere in between. So we didn't nail it perfectly, but we came pretty close. So this was one that turned out really great as well. So you can see here, we still had some pretty good profit left in it, but we went ahead and got out right there. So you can see this went from 29 cents down here, $29, up to 232 right there. And so we had that spread profit of $203 per spread on that risk of $29. That's a 700% return in that 8-day period. All right, so that's what we're looking at there. So really fantastic way that you can keep your risk super low but have these fantastic levered returns. Now here's one that I'll show you that we're looking at possibly doing here. We've been going back and forth on this one, but this is one that's coming up that we're looking at. Let me pull up the chart. I'll show you what we're thinking about. This is a butterfly that we might be looking to do on gold again, GLD. Let me, if I can get my chart here. Here it is. So let me pull up gold here, and I'll just kind of show you an idea of what we're looking at right now. Here's GLD, and had a really good breakout. And there's a lot of good activity going on here at the 250 strike, and then up here at that 250 strike. There's a lot of option activity on the monthly option. So what we're looking at doing here is possible butterfly where we could target that 255 strike. And so here's how this would set up. I'll just happen to have it open here, so I'll show you what it could look like. So on this trade, and you can, the other great thing with the butterfly condor, we can leg in, we can leg out. So here's where it currently is trading. One second here, I've got it right here. So this butterfly, we would target the 250 strike, and if I can get my option analytics over here. All right, so we're going to be looking at potentially targeted trade up to 250, 255. But we could, get into this trade at about 65 bucks, right? It's going for about $65. That would be your total risk. And then your spread, it's a $4 wide spread, all right? So potential to make, it's a $4 wide spread less your cost of your trade is 65. So that's $400 minus 65. This trade, has potential, if it goes out right there on this setup, to make $335 per spread on that risk. Let's say you get in at 65 bucks, so this has potential to make a 515% return. All right. And then if you're wrong, you lose 65, or we can leg in, leg out. We can make adjustments. We can just do all kinds of really cool stuff using this type of strategy. All right, so that's one that we're looking at. I was hoping GLD was going to pull back, but it doesn't pull back. But that's the one we're toying with setting up here. We were going to look at it probably today. All right, so that's kind of what you can expect out of these. They're just fantastic ways for trading the market. And like I said, great for when we're in higher implied volatility times, or, you want to get that risk really kind of fine-tuned. So if you'd like to learn how to master these kind of high reward, low risk strategies that work in any environment, market environment, I've got a great package for everybody here today. Appreciate you coming. And if you'd like to take advantage of it, let me give you the link here and feel free to ask any questions about it. But this is a super great kind of option bonanza package that you can use. It's going to have everything you need for your option trading. So use that link there. You should be able to click on it, powercycletrading.com/trade one. And this will give you currently what I'm going to be showing you here. So this package here, what you're going to get is everything here for $197 for everybody here on the webinar today. So with this, you're going to get all these additional bonuses. Now the course is my 6-hour butterfly course that I did not too long ago. And so this is just a course focused strictly 100% on the butterfly and the long condor, all the different variations. So if you go to my website, the course is valued and listed for sale at $397. But if you do it today, at this event, you'll get it for $197. All right. And use that link there. So powercycletrading.com/trade one. Just click on that. Now with this, so this 50% off, but with this, I'm also going to give you my Start Trading Options, another option trading course, kind of intermediate course. So this will get you started. That's $197 on my site. Plus, I'm going to give you a 30-day trial membership to my trading club. So I've got a trading club that gives you access to our trading room each and every day during the day. Q&As, everything, a lot of different great benefits here. So 30-day free trial. Now, if you stay on, it's $97 a month, or we have other programs or packages. And then we'll do also a follow-up support Q&A. We'll send you out a link and you'll have this a live Q&A that you can attend that will be recorded as well. Plus, I'm going to give you my additional option tutorial, okay, another option guide, and my option manifesto. So this is 15 different option strategies that you're going to get to show you a lot of, how ratio spreads work, things like that. So a really great package with additional bonuses there of over $700. So total package worth over $1,100. So right now today, $197, 82% off. And with the butterfly course, you get the full PowerPoint of the course, handouts, and the videos of the course. So it's a 6-hour recorded course on demand for you, 456-page training manual. So kind of what I call my blueprint course of how to use your butterflies and condors for income, directional trades, and hedging. So here's just kind of going through kind of how the course is broken down. So part one, I always like to start out, kind of go through the Greeks that are vital. So you kind of understand the concept of the option Greeks that affect the butterfly condor in this example or this course, how theta decay works on these two trades, how volatility impacts or how volatility crush plays into, the profits for a butterfly or condor. And the importance of the option pricing is really really important to understand how option pricing works and go through that the first part of the course. And then another part of the course is using what I call my Fibonacci price target mapping, which is how we set up our butterfly targets and condor targets. And this is a combination of Fibonacci, standard deviation analysis, and support and resistance levels that we look at based on moving averages. So really pretty cool stuff there that you'll learn in the course, how to select your targets more defined for profit and for hedging. And then part two in the course, get into all the different variations. Okay, so this is what really makes the course great, because I go through every variation of a butterfly to show you how, why, and when you would use it. So from either going from just using a call butterfly or a put butterfly, or how to use a wide wing butterfly, or how to use a broken wing butterfly, how to use a ratio butterfly, how, when, and why to use that one, what that is, or how to do a broken wing ratio butterfly, iron butterfly, and then the lotto butterfly, vacation, and then long condor. So go through every variation of it. So a great course so you can understand, how to, use these trays in your portfolio, and then you'll find out which one you probably like the best to use. So then it goes through, what are the best time frames you're going to use for your butterfly or condor. So go through how that you set that up. What are the best stocks, ETFs, index options, and futures you can use. How you get those 10-to-1, structures of profit to risk, that I showed you. One was almost 20 to 1 on that Tesla trade. And then how we take advantage of that volatility crush, theta decay. And then a good part of the course, we go into how we do monthly expirations. So we have one coming up next week, and these are a lot of fun. This is where we basically do these pinning trades. We concentrate and focus on the monthly option expiration. So this gives you, 12 times a year, we can come in and look for some pretty cool, potentially lotto trades like that one on Tesla or GLD, those kind of trades that can really, make a huge return. So these are what we call our pinning trades. And so go through in the course how we set up our price targets for that. Okay. And then we go into the course, I go through how to use that long condor, how, why, and when would you do the condor spread for, upside moves or downside moves. And this strategy will give you returns of, 100 to 300% returns. So another really great one to use. And then part 3 is just dedicated to hedging. So of all the different option strategies, these are the 2 best that I've found for hedging. Okay. So go through what I call the progression of hedging, how you can start out with shares, hedge that, hedge calls into puts, into, all the different flexibilities and ways that we can convert different hedges and make them even more attractive, from going from a call debit spread to condors to butterflies to ratio butterflies, things like that. And then how to do or use the butterfly and long condor to defend either a vertical debit spread or your credit spreads. Okay. And so then go through a step-by-step checklist of when to put them on, take them off. Have another kind of area of the execution, adjustment, risk management, and then how these things work as far as what is your assignment risk, expiration risk, auto exercise, how those work. So, you're not worried about any of that. And then you get a nice trading library that you can go back and look at, prior trades. So really covers all your bases there for, the butterflies, but more so for options in general. And so a little feedback here is from Pam. One of my members said, excellent class, as usual, under promise, over deliver. Pam said, wish I'd known how to do this hedging before I lost so much money on the credit spread. So that was, one thing that she really got out of it, how to defend a credit spread. So just kind of a quick review. Here's what you're going to get on the bonus package. And again, use that link there, powercycletrading.com/trade one. And so you're going to get this option beginners course. So this course is a really great place for you to start. Benefits of options versus stocks, need to know basics, puts versus calls, how option expiration works. And then this course will show you how to use covered calls and also how to use a covered call with protected puts, a collar strategy, and also the vertical debit spread. So really great kind of intermediate beginners course to get you started. And these are all yours, forever. You'll get your login. You'll have access to these as long as you want. And then with this package, you'll get 30-day trial membership to my trading club, which gives you access to my virtual trading room each day during the week, 9:30 to 10:30 Eastern, Monday through Friday. So come in, ask whatever questions you have on any of your trades or see what we're doing in the trade room. Then I do a video newsletter every day after the close, members trading archive, educational material. Then we do weekly Q&As every week, live and recorded. And then anything you have on my website, you'll get a 6% discount. So really a lot of great stuff there. And just, here's from David. It said, been enjoying the daily sessions, making money to increase my retirement account. Consider Larry for a truly rewarding educational experience at Power Cycle Trading. So that's what you'll get there. And then bonus 3, you're going to get, follow-up Q&A, which we'll send you out an email on that one. This will be live and recorded. But you're going to get that 30-day trial membership, so you can come into the trade room and you can start this whenever you want, so you don't have to start it right away. Bonus 4, this is a really great how the pros use the Greeks. So this is another little short course videos and PowerPoint with, how to use delta, gamma, theta, option pricing, standard deviation. So just another thing that you can put to your library of options. And here's my other bonus, my 15 option strategy guide. So this is really cool. So if you've ever wondered, what the heck is a ladder spread or calendar, diagonals. So this takes you through 15 other different option strategies that you can look at and potentially want to use in your trading. And last but not least, I give you this simple kind of printout you can put on your desktop that shows you the Greeks and how they're used. So all in all, just a full package of great stuff that you can incorporate into your trading, to get you started with options. So that kind of covers everything I wanted to show you today. Now, if you have any questions, I've got some time here, so feel free to ask any questions that you may have. One more thing I was going to show you with another trade that we did here today, showing you how flexible. We had a trade that we had set up, I believe it was yesterday. We did a short trade on XLV, and then we adjusted it today to a put debit spread, and going to be looking to probably adjust the trade into a condor. So let me show you kind of how this is going to work. And this was a alert trade that we did. I'll pull XLV up. So this is a short trade that we set this up yesterday, actually. Let me find my chart here. Okay. So this trade we've got with XLV, we're short this XLV. And we initially did this with what we call a put counter diagonal. Okay. And then today we adjusted this put counter diagonal into a put debit spread. So I'll just kind of show you what it looks like, and then what we're going to, we have a plan of action that we can do if we need to. So this is where we initially established this trade yesterday. I'll kind of walk you through it, and then I'll show you where we are now and what we're thinking about doing with it. So with this trade initially, what we had was what we call a put counter diagonal. So we initiated this trade yesterday and went long the 20 December 144 put. Okay, our cost of the trade getting to that was about $1.02, and then sold against it, to spread it to lock in some. See here, it's got a negative theta of $4. So we sold the 13 December, that's Friday's expiration 143 put against it. So we had this, what we call a put counter diagonal. So we initially set this up, and you can see there's no theta. See, it's got positive theta of $12. So that's perfect. Now this is what this trade looks like. This is what we call a put counter diagonal. So this has potential profit of about $75 if on Friday it goes out at 143. And our risk here was 70, so 100% return. But what we did today was we want to ride this for potentially bigger move to the downside. So what we did was we closed out. We had to take a loss. We closed out the short 13 December 143 put, closed that out with a small loss. That adjusted up our debit cost to $1.36. All right. So it might be a little bit hard for you to understand initially, but this kind of wanted to lay this out since I had some time. So now we are long still the 20 December 144 put at an adjusted price of $1.36. That's $136. That's up about $47. And then we sold against that the 20 December 141 put. So we made this into a put debit spread. All right. So now we've got a risk of 87, reduce our risk. We've got a positive theta, see that, $50. And we've got the potential to make 213. All right, so $213 potential profit on our risk of 87. That's currently where we are, 213 divided by 87. We have now potential to make a 244% return. But this is what we're going to look to do next. We can turn this into, if we wanted to, either a butterfly or condor. So if we get a bigger move down, which we may or may not, then what we can do on this trade, we could sell a vertical credit spread against it. I could sell maybe the 140, 137. That's currently going, I could bring in $23 right there. Boom. Now I've got a put condor. I've reduced my risk now down to $64. Nice positive theta. And if we go out between the spreads, this will make $236 on that risk of 64. So you can see how that return even jumps even more. So potential to make on this one, if we do this adjustment, we're just going to wait for now but this has potential to make, over 360% return. So just a really cool strategy. And then once you take the course, you're going to see, how to make these adjustments and understand these trades. So I hope this was beneficial to everybody. And again, I just want to say thank you for having me here today. And we can go from there. If there are any other questions, feel free to let me know. All right.
All right, Larry, thank you so much for
Hey.
being here. Larry, it's been I was very educational. Everybody take him up on his offer. And once again, Larry, it's like I said, it's always been great to have you. And thanks for coming
Thank
on
you
the
so
podcast
much.
that time. Got to have you back, which was awesome. So everyone take advantage of his little promotion. There's the link right there on the webinar, on the chat right there. And everyone just copy and take it. All right.
All right. Thanks so much, Fausto.
No problem, Larry. No problem, Larry. So we're going to give you guys just a couple of minutes, and we have Melissa that's going to be joining us just in about a little less than 5 minutes. So just a couple of little updates on what's going on with the market, everybody. So as of right now, I'm not a big fan of trading during the holidays, and I know Melissa's going to probably talk a little bit about that because she's been a very big contributor on a lot of the financial stations. You've probably seen her on a lot of them. But we're going to, we got the market that Dow is up about 33, S&P's up 49. The exciting part about it is, we had a huge rally on the Bitcoin. So a lot of the stocks like iBit is up huge today. It's up literally about 4.5%, up 4.5%. Tesla, I know that Larry was talking a little bit about it. That stock has done phenomenal. It's up another $10 today, up about 2.5%, been on a rocket, even up to the beginning of December. This thing's up almost 350 to 410. I mean, just a lot of these things that some of you have to realize that when we transition to a new administration, especially this one, I think historically, I've been through so many elections and I have always seen different transitions. I have never seen this big of a rally on certain stocks. And, the honeymoon is obviously not over. There's still things that are moving along with it. And I think it's going to be like that up until he gets the inauguration back in January 20th. So a lot of fun there. Just stick with what us presentators are talking about, certain stocks that we're looking at, certain industries. And like I mentioned, before, we all kind of trade the same, about 70% of it. A lot of it is psychology, discipline, and everything else. The other 30% is we have just different styles. Some trade options, some trade futures, some trade Forex. But it's all what fits in your schedule, depending on what parts of the world you are, what kind of works for you, and what you like. Listen, we all have different personalities. Some of you adapt to them, some of you don't. But you want to make sure that it's something that works for you. And, depending on where you are in a part of the world, if you're a morning person, if you're an afternoon person, if you're West Coast, East Coast, Europe, whatever it is, there are better times to trade certain industries and certain exchanges than others. But so we definitely have a nice little move there. And once again, remember, we are going to be here for 2 straight days. We still got a few more speakers that are going to go up. We're going to go up until 4 o'clock. I'm going to be coming on right at 3 o'clock after Trade Station comes on. And then we have all day tomorrow. So if you can't be here, just make sure you are registered. Just go out and share us, like us, friend us, subscribe to the channel. And we will be making highlights of all these speakers. We're going to have the long version, the short versions. So if you just like something you want to hear what their expertise on, we'll have those quick highlights to it. And also we'll have them on our YouTube channel and all social network channels. So anyway, let me while we're here, and I see Melissa sitting there waiting patiently, and we'll just do a quick intro for her. All right. So let me tell you a little bit about Melissa Amaro. So basically, she's the founder of StockSwish. So I'm thrilled to introduce her. Like I said, she's the founder of the company. She's an expert in the stock trading and has created a very unique method called the Golden Gaps. And that was really cool. I remember reading up a little bit about it, which helps traders identify where the big institutional monies is and is going into the markets. Her strategies has been a little bit of a foundation of her teaching and how she helped countless traders improve their skills and results. A little similar to what I do regarding about how to follow those orders and how to see it. I know she lives local, so we kind of definitely crossed our paths of people trading the same way we're trading, and she kind of trades a little bit like me. So I'm really looking forward to hearing her. She's also been a creator and a producer of her own TV show, which is called Make a Million with Melissa, which is awesome. Definitely get a chance to watch that show. I know she'll talk a little bit about it. On her show, she shares her insights and strategies for success of stock market. She's a regular guest on major networks like Fox News, Fox Business, Cheddar TV, where she discusses these markets and stocks and her current events. Her passion, just to let you know, is teaching and helping other successful traders to drive her work to the stock swish. And she's built a very international education company. Basically, she's given traders the tools they need to succeed. So let's give her a big welcome to Melissa Morano. And thanks for being here. I know it's been a long time. So Melissa, let me just pass the stage over to you. Thanks for being here.
Testing. Can you hear me?
Yeah, we hear you loud and clear.
What a lovely introduction. God, I don't even know how I'm going to talk after that.
Well, you're well worth it. You've been around for a while. And you know what? I've been following you for a long time. I know we've done things. And you know what? You're definitely happy to have you here, and I think everyone's gonna be very excited to hear what you have to say. And I like the way you're styled because it trades a little like me, especially being a local person like me too.
Yes, a fellow New Yorker, toughing it out here in New York. Interesting times, although today is pouring raining in New York City. But anyways, thank you so much for having me. And if anyone has any questions, I can just look. I think I can see in the chat. As Fausto said, my name is Melissa Armo, and I own my own company called The Stock Swoosh, and I trade actively. I run a live trading room every single day. Today, actually, our big trade was Amazon, and we had a Google option that went crazy today. So again, the market is just roaring. In fact, the market is doing something called power trending today, which is actually really, really rare. So most days, the market does not power trend up or power trend down. But today is one of those days where if you're in a strong stock or if you're long the market, you're up, okay? And we're gonna talk about that a little bit today. But I'm gonna talk to you about trading on the side of institutional money and gaps. This is what I do, as I said. As Fausto mentioned, I do appear on TV and I talk about the stock market. I talk about the economy. The reason the market is actually up today and is flying and making brand new all-time highs is because of the fact that we had data out today, which ironically was not good. The data said that inflation is still high, and the market's reacting positively to that because next week we have a Fed meeting, and now the market's convinced that the Fed is going to drop rates again. But I'm not so convinced. I'm not so convinced of that. So it'll be interesting to see. And again, trading is based on people, their emotions, their thoughts. You know, since the election, the market has continued to skyrocket because people are feeling more positive, more optimistic. They're hopeful that with a new administration, things are going to change, things are going to get better, and we'll see what happens. But I do short and go long, which we're going to talk about today too. If you have questions, you can email me at melissa@thestockswoosh.com. You can call me at 929-3200-GAP. You can follow me on Twitter, which is now X, at The Stock Swoosh, or Facebook, YouTube, or Skype. So I put the stats in here for this year. So far, 2024, but I did not put through actually since the 20th. I've been super busy trading and took some time off for the holidays. I only have in here through November 20th. But today, like I said, we did Amazon. That was the trade of the day, the play of the day today. I will update this before the end of the year, but we're up $823,787 in the live trading room. Year to date through 11/20. This is with an average risk. I risk about $3,500 per trade in my day trades. These are all day trades I call in the room on margin. So in other words, you need a margin account to do these trades. What do I mean? I mean, if you're going to short 1,000 shares, then you need to look at the cost of the stock divided by how much margin you have. At most retail places, you get 4-to-1. If you want to go prop, you can get 10-to-1. So that's another option for people to look at if they want to do margin trades. I also do options. I'm up over $3 million a year. And again, this is not through the last couple of weeks because I haven't updated since before the holiday. But I risk more in my options. So I'm risking around an average of $8,000 per trade in my options. And I know Fausto was discussing Tesla. I called the 400 calls in Tesla Friday out to the 20th. I mean, I didn't know it was going to go there in 24 hours. It was an insane call. Insane. The stock hit new highs today at 415. You could still be in that trade. I definitely still think it's higher. I mean, you know, when you're trading, you cannot hold everything to a piggy target. That being said, there are some things that do warrant holding it to a piggy target, or what I call a dream target. How do I know? I know based on my analysis of the gap, which is, again, what I teach in my class, which I teach once a month. So there is no class this month. Going forward, it's the holidays. I had my last class for the year this past weekend. The next class is in January. So if this is something you want to learn after you talk to me today or hear anything, you can reach out after the fact. So again, this isn't even through the last couple of weeks. For options and day trades, over 3.8 million for the year. And again, how much you want to risk is dependent on the size of your account and whether you have a margin account or an options account. People love to trade options because they can open up an account with $2,000. They can buy one contract and they don't need a margin account with that. But really the benefit of doing options is not that you can open up an account with less than 25 grand. The benefit of doing options is that, like I mentioned with Tesla, you can take a trade and hold it overnight with a fixed risk, and you can get there for a longer move, an elongated move, a bigger move, okay? So again, here we are. It's December, not quite halfway through the year, but almost. I mean, a couple of days, it's gonna be Sunday's the 15th. We're halfway through December. It feels like this month has gone so fast because Thanksgiving was late. And before you know it, guess what? 2025 is going to be here. So 2025 is almost here. Are you ready and prepared to have a great year? I mean, I'm not a big person on New Year's resolutions. I'm more of a goal setting person. I set goals for myself. You know, if you want to set resolutions, that's fine. But I think that goals are important. And it's never too early to start setting goals for the next calendar year. So if you did not have a successful year trading in 2024, which many retail traders did not, a lot of people lose money in the market. More people lose money than make money in the market, and it will always be the case. You have to get a plan of action if you want to have different results in 2025. And many times people blame themselves and say it's the market, it's the news, it's this thing, that thing, it's their discipline. When at the end of the day, it's really mostly that they don't have a strategic system that they can use that has more wins than losses. Again, I showed you the stats. I have more wins than losses. I have trades that I take that lose, actually. Again, they're in the stats, but I have more winners than losers. And like I just talked about with the Tesla, I have some winners that are very large winners, and then they cover the losses. And then that's how you can move forward. And you start to put together what can be a really awesome career if you really want to do this full time. So again, it's about becoming an expert. In order to become successful in the market, you have to become a specialist. Like if you wanted to be a football player or a basketball player, or a baseball player, you wouldn't be good in all sport, any sport. You would focus on that specific sport. Like if you wanted to become a doctor or a surgeon or something specific, you have to have a specialty. It's the same thing with trading. It's really no different. And again, that's why the amount of money you can make is enormous, okay? But many people miss the boat and try to be a jack of all trades and a master of none, and then wonder why they're losing. And then also, I think a lot of people overtrade. So you have to become a specialist in one specific strategy, a strategy that reads institutional money. And for me, that's based on gaps, and it's based on really what I call power money. How do you think the market's going higher today? It's getting bought. Simple. That's it. And a lot of people actually are making money right now, going long, even crappy trades, even stocks that are in downtrends. People are going long everything and anything when the market rallies. The market sometimes lifts everything in the market. That doesn't mean people are taking good trades. Do you understand what I'm saying? You have to be able to make money in any market conditions. And even if the market is bullish, you can't go long everything. And again, it's going to be interesting to see, like I said, what happens next week on Wednesday when the Fed meeting comes out. Because there are people that could actually get trapped because the market may shake out and have a negative reaction going into next week or even the end of the year. We'll see. But anyways, power money moves the market. Power money moves stocks. This brings momentum and opportunity. And that's why you can trade and make a lot of money trading without even taking enormous size. Like I said, you could take one contract. So every trader in every level must learn the skill set. And it can be acquired through education. Learning is important. Now, I was talking about Amazon. It's actually ridiculous where this is today, but we did this back after the election, 11/7. So this is the options newsletter. So if you want to come and subscribe to the newsletter, this is what it looks like. So I send the letter out. The symbol was Amazon here. We did the 210 calls that expired the 15th. Let's just look at the chart here. The 7th was here. Gosh, this feels like a while ago. We did it here. So again, I trade gaps. So in this case here, this was a bullish gap. So what is a gap? A stock gaps when the closing price today is different from the next day's trading. And in this case here, since the price closed at 4 and opened at a higher price, it was a bullish gap. It gapped up. Open, rallied, and again, here's the lift. You could have got in and out here. You could have held it into here to the left. You see where it went up almost to 215. So this was the trade. It cost $2.75 for one contract. 30 contracts under advanced trader risk, you could have made 118% at $9,750. What if you risked 1,100? Again, a lot of people, you can take one contract. You could have paid $275 and you could have still flipped your money around very quickly and made over 100%. So it's not about size. It's about getting a good quality trade and having a winner, okay? And again, in this case here, whether you got out here, or even here you could have got out, it was a good trade, okay? It ran up through the strike, and again, it got bought. Now, again, a lot of people ask me questions about this because they want to trade full time. Well, I only trade in the morning between 9:30 and 10 a.m., 10:15 maybe. I check options if I'm in them, like I write down looking at what the market's doing, but I only day trade in the morning. So I have a very specific time that I'm focused on during the day. So a lot of people want to trade for a living because it's a nice career because you can work from home and you can make money in a short time period. But number one, you need a winning strategy. You need to learn first. And a lot of people want to take trade ideas, just want to get blanket ideas from people blindly in chat rooms and things like that. At the end of the day, if you don't understand what to do, if you don't understand and have a comprehension of why, like I'm doing the trade, for example, whether I'm short or long, it's going to be difficult for you to actually get anywhere with it. So learning is important. And we're curious. As human beings, we're very curious. We want to know why. And it will also allow you to take more risk, particularly, the kind of risk that I'm talking about. Number two, you need a supportive mentor. So I offer this for people because I'm calling the trades live in the room every day. You do and follow, okay? Do and follow. Like I said, we went long Amazon today. And then number three, you want to become an expert in one thing. You implement the strategy, get good, and then you add size to win. Because you have all the time in the world to add size to trades. It's about understanding it, like I said, getting in the habit of doing it, and then moving forward from there, feeling like you're getting up every day and you're winning, which is so important for people. It helps their emotional state, their mental state. It helps people stay calm when they're trading, which is actually very important. You need to be alert, but calm, focused, and ready to go, and ready to pounce when the move comes in. This is kind of just insane, actually, when you're looking here, the fact that we did the 280 Tesla calls and the stock ran up today to 415. This was like a month ago. We did this on 11/6. I mean, it's hard to believe, but this is an example of institutional money. This is an example of power of money. We did this trade, like I said, back on the 6th. We did the 280 Tesla calls, and it was a 477% return on investment. So it was pricey. These are pricey, some of these ones we're doing, but they're absolutely paying. If you did one, you could have made $6,200. A lot of times people with small accounts want to basically do all kinds of crazy things to make money. That's the wrong attitude. If you have a small account, you should be even pickier. I mean, I'm picky about my trades with a big account, but you should be picky, picky, picky if you have a small account. You need to hit that bullseye and get it right more than you don't, because these are the types of trades that you want and you need. So you could take an account where you have $5,000 in it, risk $1,300, and then more than double your account in one trade. And I'm absolutely calling these trades lately. Again, they're there, so we're taking advantage of them. And if you risked 7 contracts or 9,100, you could have made over 43,000. These are, month-making trades, just like the trades that I've been calling in the last week. But let's take a look here at the chart again. Here it is right now. This is going to continue. This is just going to continue up. So we did this here. Snug as a bug right here, and then it popped. Boom. See it? So again, look at where this stock has gone. Again, we're going back. Today is the 11th, just a little bit more than a month. This is a great example of the power of institutional money. Why? The stock's getting bought, okay? So again, you wouldn't have something like this unless the stock was getting bought. Do you follow what I'm saying? There's only one thing and one thing that can move a stock. It's money, and not a little bit of money, but a lot of money. And again, this is what I call power money in the market. So how do you, as one individual, make money in the market? Because you're not going to move Tesla. You're not going to move the market. You're not going to move anything. You're not even going to move a penny stock. You have to determine who is in control. That's it. It's just, that's what you have to do. So you either have a bullish control or a bearish control. So you either have the bulls in control or the bears in control. That's it. And sometimes you have what's called a sideways trend or neutral trend, which doesn't last long. And it doesn't happen that often, where the control is trying to make up its mind. Most of the time, though, the control is very obvious and evident. And again, if you trade on the side of the control, you can make money. So Tesla, again, is a great example where you would want to be long the stock. Again, you have to get the direction right to win. If you get the direction wrong, you're going to lose. This is Netflix. This is flying today. This ran up today as well. What's the control going on here? Again, the bulls. The bulls are in control of Netflix. Okay. Another one we've been trading as an option too. We've been doing calls in this. Again, I buy the call and sell it for profit. I buy a put and sell it for profit. We actually did a really nice short this week. We bought puts in AMD. That worked. And again, it fell, even though the market's been raging up. So let's talk about, like I said, number one, you need a strategy. What is buying? It's called golden gaps. It's a term that I created when I developed my system, because it is like finding gold in the market, because I can predict where stock's going to go before it happens. I'm not predicting the gap itself. Adobe is earnings tonight. I don't know what it does. I don't even know if it's a good gap to play up or down. So I'm not predicting what is Adobe going to do in the earnings. But if I see it, I will be able to use the information and analyze the data in the chart to determine if tomorrow morning I want to go long Adobe or buy a call in it or buy a put in it or short it. Okay. So again, what is a gap? A stock gaps in the opening price today is different than the closing price of yesterday's trading. A gap is a break in price action from one day to the next. So almost everything gaps every day, actually, to be honest with you. It's very rare that something would not gap. Like technically something could close at 32.02 and open the next day at 32.02 and be flat. But most things technically gap on any given day. Now here's what we did. This was Target. This was a nice trade. Stock closed here, gap down. So this was an earnings gap. Stock closed up here above 155, gap down here in the morning. Again, this was the 20th, under 130. So we did a put in this and we shorted this as a day trade. So again, this is a gap. Why? The stock closed at one price and opened at a different price. And in this case here, the price was lower. So it was a bearish gap. Okay. So I'm never, ever, 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 ever going against the direction of the gap, even if I rate it and it rates bad. So for example, if I rate this and it rates that I could short it, that it's going to fall, then I short it, whether I do a put or a short. If I rate it and it doesn't rate per my 26-point system, then I know it's going to reverse and I'm not going to go long it. Okay. So this is an example though, that one that did work in the direction of the gap and we did the trade. So again, my system is based on golden gap. So what is a golden gap? A golden gap is a gap that rates 20 points or more per the golden gap 26-point rating system. You can take the trade in the direction of the gap. You can do the trade as a day trade or an option. I like to do both. Some people are in my room doing both. Some people are doing one or the other. It's whatever works for you. Now, despite the fact that we have had some really fabulous long trades lately, like I said, I talked about AMD that we did this week, though, which was a short. I really do prefer to short. I mean, one of the reasons I prefer to short is because stocks fall faster than they rally. And again, it'll be really interesting to see what happens next week and then also what happens in 2025. While people have high expectations for a big year in 2025, it doesn't mean that we're not going to have volatility. And again, you have opportunity when there's volatility coming in, if you can get the direction right, to short, okay? And you can also make money very fast when stocks fall. Again, here was the target that we did, closed here, gap down. This was a nice trade. And again, this is a big move for the stock. So again, look at it from here to here, from tip to tail, it fell $10. The control here is on the side of the bears. It was a short, okay? Here was the AMD. So we did this one too. Stock closed here, gap down, open, dropped. So this was on the 9th. Today is Wednesday. This was Monday, Tuesday, Wednesday. You actually could still even be in this trade. I mean, it was a good trade. It was a good exit this morning or yesterday, but this fell. And this fell, again, pretty fast. You know, when you look at it, and pretty big. From the high of this bar here, it's 135, and it almost came down here $10 just in that 3-day period. So we did a day trade in that, and we also did a put. But again, what do? I rate gaps using my 26-point checklist. If you come and want to take my class, you will learn this checklist. This is how I'm able to predict where a stock is going to go in the day. I read the price action and I'm reading it in the chart. So I'm looking at the price action, rating the gap in the morning, and then determining that I want to do a short or a long or a put or a call or whatever I want to do. And then I take the trade and I let it ride out. And I'm doing day trades quick. And I'm doing options where I'm giving them a little bit more breathing room, where I'm holding options a little bit longer. Like I do options that I may not get out the same day. So I'm trying to get a larger move with options, although I am doing the weekly option expirations. So I don't know if anyone has any questions for me as I am just looking here quickly. I think, do I have till 1 o'clock? Fausto, are you there? Just want to make sure.
Yep, I'm here. I'm here.
Do I have till 1?
I'm sorry, what happened?
Do I have till 1 o'clock to
Yeah,
speak?
you have until 1.
Okay, good. I just wanted to make note of the.
Yeah, 12:55.
Okay, good.
All right.
Perfect. All right. Any questions? If not, I'm going to keep going. Beautiful. Okay. So the rating system helps me determine who is in control. Okay. Who is in control. So again, you only have 2 choices. Okay. You only have the bulls and the bears. That's it. So again, if the stock's falling, you would want to be short. If the stock's rallying, you would want to be long, right? Makes sense. So again, anytime you're looking at doing something, many times when people are taking trades and many times when people actually lose money in trades, it's actually because they're in the wrong direction. It's really just as simple as that. So if you can figure out the direction a stock's going to go, again, before it occurs, that's how you're going to make money, because you get in before the move happens. And usually I'm actually in things very, very early. So again, talking about gaps. Gaps happen in the market on a regular basis. However, some gaps are better than others. Some gaps are nothing gaps, and some gaps are very powerful displays of institutional money. The most important gaps in the market are gaps that signify a change in direction or a bigger move in the same direction. That's what we're seeing right now in the overall market. The market is having a larger move in the same direction. It's breaking out. Understanding which gaps are meaningful and which gaps are not meaningful in the market will help you to know what to do and when a change is occurring. That is how you will know when the power money will flow to pay you. So again, nothing goes straight up and nothing goes straight down. And that's what people find very, very confusing about, particularly reading the overall trend. And I'm not a person that buys pullbacks or shorts resistance, but I know a lot of traders do that. But the fact is that's a setup. That's not a strategy. And a lot of people that were waiting for a pullback in the market missed a lot of the bullish move that has occurred since the election or even before. Okay. So I'm trading momentum. Again, I'm trading the gap. I'm not trading pullbacks. I'm reading the footprints of institutional money, and then I take the trade and I get in. And again, a lot of people they're just so confused about direction. Momentum is key. This is how you can risk $1,000 and make $2,000. Again, I'm not risking $3,000 to make $500. I don't think that's a good quality trade. It's a trade that I would not take, even though, for example, that would be a trade that would be positive. I don't think that's worth the risk to reward. So usually when I'm day trading in my room, I'm looking for one good trade a day. And again, if I take 2 trades a day, I'm probably having a bad morning. So I probably take the first trade, take a stop, and have to do a retake in it. Ideally, you just want one good solid trade a day, and then you add size, and then boom, you're profitable. And it's about the consistency. It's about the wins. Everybody that's ever traded probably has made money in trades. People can make money in bad trades all the time. People can make money in dumb trades. You saw that with some of the Reddit stocks that were in the craze a couple of years ago that have just completely fallen off a cliff. It's not about that. It's about the fact that you need to have more winners and losers, because otherwise you're not going to have longevity in the industry. Like Fausto was talking about earlier, both him and I have been trading for a long time. We have seen people, traders that we've known that are friends, and also people that have businesses like we both do, that have come and gone and disappeared into the night. The fact that I've been trading now for 17 years says a lot. And again, you want to be able to have the staying power to be able to do this. Otherwise, you're refunding your account and blowing it up all the time and refunding it and blowing it up all the time. And not only does it take a toll on your finances, it takes a toll on your mental state. It takes a toll on your mental state so much that you don't even believe in yourself anymore, or have the confidence, even if I call a good trade. You have to feel good about what you're doing and that it's worthwhile. And again, that you're putting your money into a good trade. And that's why I say I have 100% conviction. If I have 100% conviction, it's going to work or it's not going to work. And if I don't think it's trade's going to work, then I don't want to do it, you know? Anyways, if you learn how to read the footprints of big position players before the momentum occurs, you can take the position in the right direction and get out after the move happens for profit. But you have to understand how to trade with a side of power, and you need to know how to find it, which is the important piece. And understanding, why is this stock going to fall today? Or why is the market rallying? You know, and this isn't about the fundamentals or reading earnings reports or any of that. I wouldn't have time. If I had to do all that stuff, I wouldn't have time to sleep. I'd be getting up at 3 o'clock in the morning to go through stuff. All I'm seeing is the chart data. It's technical analysis. So you have to have live charts and live feed. Knowing how to read what institutional money looks like is essential to becoming a successful trader. And you can win big trading on this side of power. And again, a lot of people actually don't even use charts to trade. I know this from teaching people for a number of years. It's crazy. People trade blind. They will turn on the TV. They will listen to what someone says. Money managers do this because, again, I appear on TV with a lot of times with money managers, and they are saying things that sometimes I disagree with, or sometimes I do agree with, and they're not even looking at a chart. They don't know how to read a chart. They don't know what a gap is. So you will be far head and shoulders above tons and tons of people that are trading in the market, or even many of these money managers, if you understand what is really going on here, reading power money, reading the gap, and again, reading momentum. And you can use a system like mine, even if you want to do long-term swing trades or leaps, which are long-term options. Now, I'm not doing those, but you certainly could use my system for that. Again, because it's reading where something is going. Like, I just showed you that Tesla. We were in that at 280. The stock's run up 150 points almost from there. So again, let's talk about institutional money. Becoming a successful trader and investor requires becoming a specialist in defining where the institutions are buying or selling a stock. Learning advanced technical analysis is required. So it's technical analysis, which is reading past price data to predict future price data. That's what technical analysis is, okay? And again, this comes from experience doing it, time in the seat, like I said. What does this mean? It means reading price action and charts. Comprehending how to read, define, and trade with this power will have a huge positive impact on your profitability as a trader. And anything you can do to keep you in that positive mindset will help you. That's why people shouldn't be so obsessed about size. Again, you can trade my system with 100 share lots or one contract. If you're showing a consistency of wins and greens, that's what you need to feel like, oh my God, this system really works. And then you can always add the size later. Elevate yourself in your trading and your profits to a higher level of consistency and success by learning how to read the footprints of institutions trading in the market, because it's very powerful. It is how you can more easily make money and have more wins. And then again, have these absolutely huge, enormous wins where the stocks are flying. And again, looking at some of these trades that I just did a month ago is crazy today, because again, Netflix is well above 925. We did the 775 Netflix calls back on the 6th. Again, this was in November. This really wasn't expensive for the stock at this price point. It was a 775-ish. $10 for one, you could have bought 9. This was a huge trade. 520% return investment, and you could have done one and made $5,200. So let's take a look at the chart here. This was on the 6th. Again, people really do love trading options with me, but here it was. So here we did it. See where we are, snug as a bug, closed here, gapped up, dropped, rallied, took off. Here's the momentum. Again, here's the momentum. Green, 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 and you're up. So again, take it over here, and you could have even held it longer than since I got out of it. And by the way, we are also in this today. We're in this too. So just some amazing examples here of institutional money. But again, this is another example like Tesla where it's buying. Okay, so you need conviction to trade. But again, where do you get that? You get that from understanding why. So as much as people love to make money and they want to just take trades and get ideas, people trade much, much better once they understand what to do. So again, I had my last class of the year over the weekend, People paid for the class on Friday. By Monday, they had already paid for the class in the trains that I called on Monday this week. That says a lot about the success of the system. Of course, everyone is risking different amounts, but that is what people need, that positive reinforcement to know that what they're doing works and they can take that energy and move forward into something positive. I've talked to so many people in the years that have had the business now, which has been 13 years, and people just are living in the past trades that they took that they lost money, past classes that they paid for that they didn't learn anything out of, and then they paid a little bit of money for a class and then lost a ton of money in taking bad trades from people that they followed that didn't know what they were doing. Everybody does things like that when they start out. No one's born knowing how to trade, but you got to move past it. And you can't have the attitude that nothing ever works, that no class ever works, that no system ever works, that you're never going to make money, that you're never going to learn anything quality, and that you're never going to learn from anyone. If that's your attitude, you're just hurting yourself. You're holding yourself back. And again, we're getting into the end of the year. This is a good time when you're starting a new year fresh to let things go. I say have amnesia. Have amnesia about everything you did for the past. So it's just amazing to me because, again, I take time talking to people that decide to become clients and then following up with them after the course to find out what they think and what's going on. And it's very interesting. Again, a lot of people just are shocked and surprised how well my system works, even though they signed up and paid for it, because they've done umpteen classes in the past and they've not gotten their money's worth out of it. Every class you probably ever took, even ones that you look back and see, you say that wasn't worth it, you probably took one little piece of information. And you also, even if you didn't, even if it was a total waste of time and money, you got that experience. And that can help propel you forward. You know, when I started out trading, I took one class, and then after that, I didn't learn how to make money. But I did learn about charts, and I did learn technical analysis, and I used that information to develop my own system over the course of 3 years. But it was a very hard road. There's only two ways to do it. You're either going to develop your own system where you need to bankroll yourself with a lot of cash, which I was able to do when I developed my system over years, but it was very stressful for me, okay? And I was working a full-time job at the same time too. Or you pay someone to learn their system. That's it. That's the only two ways you can make it happen. And again, everybody goes through this process of the ups and downs, but you have to, be committed and you have to be motivated to keep pushing forward. Because if your dream is to trade and you really want to do it, there's no reason for you to give up. And again, this is a good time of the year, to move forward and really get somewhere, have a new attitude, start on a good foot, do a new class, do a new program, and again, change your attitude if you've been noticing that you've been feeling negative about trading or the market, and not to hold yourself back. So how do I do it? I use a 26-point rating system. It's a checklist, like I said. And when you think about it, you're like, oh my God, this totally makes sense. Look for the institutional money, play it with it. Trading momentum, that makes sense. Stocks fall fast, that makes sense. I mean, when you think about everything I've said today, it makes total sense, okay? A lot of traders want to do things and they think are tricky, that they're going to risk the farm and take some big one crazy trade and make all this kind of money. It's going to make all their losses back from the last 25 years. That's not realistic either, okay? So again, quality counts. Quality is important. And again, that's why people pay me to come and learn the information, because the information in the class is quality information along with the trades that I'm calling. And part of that takes commitment. And it also takes you using your brain. The best asset that you have is your mind and your brain. And again, all of this comes into part of it. We need to be healthy. We shouldn't trade if we're sick. If we don't feel good, or you were up late, or you were drinking the night before watching football or something like that. You need to be on your game. But what I always say, I can be perfect for 30 minutes a day. I can be perfect for 1 hour a day. When I trade in the morning between 9:30 and 10:15 in the morning. It's challenging to trade all day long from 9:30 to 4. And that's why I don't do it, because you won't be as sharp, 5 hours into the day as you are in the morning. Okay. So getting along here, what I'm saying, we were talking about gaps. Gaps are the most powerful show price action in a chart. Gaps have large moves. Gaps can move up or down. Some of the biggest momentum moves in a daily chart come from a gap. When I trade, I'm looking for in trading momentum. Then whether you have a small size or a large size, you will get a good risk to reward, because everyone has a different account size and you have to live within those parameters. Okay. Any questions here as I'm going along? How's everybody doing? I don't see any questions. Are we good? Fausto is good. Perfect. So let's talk about fundamentals. Okay. Like I said, the Fed meetings next Wednesday. You can have an opinion. I go on TV, I give my opinion. Somebody else gives their opinion. Turn on the CNBC today, someone gives their opinion. What does that mean? I mean, opinions change, it's different people. You have to look at what's actually reflected in the price, the live price right now. Again, like I said, you need live data feed and it has to be good. You need a good internet. You could have the Fed come out and do exactly what everyone expects. And then, which is lower rates next week. But guess what? The market could fall off a cliff. Why? He could say something else. He could say, oh, we're lowering rates today, but we're going to slow down in the spring of 2025. Or he could say this thing, that thing, the other thing. So again, making decisions just based on economic data, stats, earnings. Very often you have an earnings report come out and it's fabulous, it's great. And the stock gaps down and falls off a cliff. So you can't even just match everything up like that. So that's why price is so amazing, because you can look at the price, you can see the price, you can say, this is going to happen based on this, watch it happen live, quick and fast, and not waiting to see what everybody's going to think and their opinions on this, that, and the other thing. Okay. So again, like I was saying, institutional money is in control of the market and stocks at all times. Even if you think it's not, it is. A big flow of money going in a certain direction is what moves the market. Stocks creates momentum and sets the trend in charts. And sometimes I go against the trend. So I'm not always with the trend. Now today I am with the market. I'm not short the market, I'm long. But sometimes I am against the trend. When you are looking for institutional money or really reading the side of power in a stock, you want to be on the side of the power in order for you to make money trading. Institutional money is in charge of the market and stocks at all times. Okay, so what do you need to be successful? Number one, you need a good strategy. Number two, you need a mentor. You need someone you can do and follow. Somebody could go and ask questions after the fact. Why? How did you know, Melissa, that Tesla was going to go to 400 when it was at 350? How did you know this? How did you do that? Why did this work? Why didn't this work? Following someone in the room. Again, it helps tighten up the learning curve when you can trade and take live calls while you're learning through the process and going through and asking questions. Again, it helps to repeat the information. It's all about consistency. And so again, the reinforcement of the live room after the class or even before the class, like people who are signing up for the class in January that haven't done the class yet, that are in the room, they're trading ahead of time, and then it's going to be reinforced in the class in January. You want to be consistent with results. You want to take your hard-earned money and you want to take good quality trades. I developed this system because I wanted to look for trades that had high odds. There is no 100%. And if anyone tells you that, that's crap, okay? You are going to have losers in any system at all. You're trying to have more winners than losers. So my system has any given week or month between a 70 and 80% win ratio. So you figure, okay, well, if I take 10 trades with Melissa, I figure about 7 to 8 are going to win and 2 to 3 are going to lose on average. So that's why I use stops. And those are good odds. There is no 100%. And again, while we are having, many big calls right now, many big trades right now, which helps cover the losers, you have to use stops and stay within and define your risk to keep you on a consistent path where you're moving up. And again, your account is growing instead of having to refund it and take losses and do all these kinds of crazy things where people are doing crazy trades. It also helps with your mindset. Again, if you're more relaxed, if you're more consistent. So here was a day trade. We were talking about this earlier. We did in the target. Stock closed here, gap down, open, dropped. Short it. Entry was 127.50, got out at 125.50. I thought this was a good trade, but I was laughing then because, again, it went all the way down. Now, I was in the put. It came all the way down. It fell. It almost got to 120, got to 120 and change. But I made $3,000 in a day trade in this, and this was a trade on margin, and I called it in the room. So I did it. I got in, got out fast, which is what I do every day. The put continued, and this did go to the dream target, or what I call the piggy target. Again, this is an example of a gap, and we shorted it. And again, institutional money did what? They dumped it. They sold it off in target, okay? All you need is one good trade a day. And again, whether you do it as an option or as a day trade is up to you. It's the focus, the quality, getting up in the morning and rating the gap. I'm prepped and ready to go before the open. I know I like this, or I like this, or I don't like anything today. And maybe I don't want to trade that day. We also did AMD. This was also another one here that we did on the 30th, but we did this week too. Here was the trade though that I have in here. We shorted at 149.95, exited at 148.50. And again, stock close here, gap down, open, dropped. Do. You also could have bought a put here, got the drop. Profit was $4,060 on the day trade. Again, you would have needed a margin account to do this trade. Same thing this week. We did a put this week in this, and we did a day trade this week in this. So this has been a really nice mover as well. Anyways, people come into my trading room every day and they expect to win. That's their mindset. We're shocked when we have a trade that loses. While it happens sometimes, we've been having a very good year. That kind of environment is amazing to be in if you've never been in a room like that. People log in, expect me to call a good trade. I expect myself to call a good trade. I'm almost shocked if I call one that loses. I mean, again, I understand that's part of the business, but I've been doing this a very, very long time. And again, sometimes you look at it and you say, well, why didn't that work? Sometimes there isn't a reason why it works. You can overanalyze things to death. And I've stopped doing that a long time ago. I have my system. I place the trade. I look at the target. I do the setup. I get out when I'm up, and that's it. You can't obsess about things, even trades that lose. And again, that's why you have to stay within your stops. But the mindset I'm talking about, where you expect yourself to win every day, is where you want to be. And that's the environment of a trading room that you want to be in. A lot of people trade the market and they take trades with a 50-50 crapshoot attitude, or they think they're going to lose. They're actually worried that they're going to lose. And they take the trade anyways, and they risk their own money. And then they wonder why they're losing and don't have good results. That is crazy town. I don't know why. I don't even know how people deal with that stress, but people trade and they do that all the time. So the mindset in my room is very unique and very different. People expect me to call good trades, and I expect myself to do the same. Someone's talking about a stock price is only worth what a buyer is willing to pay for it. I'm not sure what you're trying to say there for that necessarily, Damon, or what point you're trying to make. Here's IBM. We did this IBM here. We did this on 10/24. Oh, shoot, I don't have the chart back long enough in here. I only have this month, but we did this on 10/24. Sorry, I don't have the chart. I only have through December here. But we actually shorted this at 219.10, added at 218.75, and got out at 216.40. You can pull this up yourself. We shorted this on the one particular day. And again, this was a nice move to the downside on that day. Now, again, you could have done a put if you didn't have a margin account to do this. And again, this is one of these ones where we're trading stocks that you know the companies, you're familiar with them. We're not doing penny stocks. We're not doing low float stocks. We're not doing cheap stocks. We're doing stocks that can move $1, $2, $3, $4, $5 on a day, $10 on a day. Very, very important. Anyways, I was talking about also booking profits early, like for example, in the target, and it kept going. I want to be out quick. Then I don't have to worry about data, the Fed, whatever. It's about chunking it out in the live room. Take the trade, get the move, get out. Take the trade, get the move, get out. You want to book it. Same thing with options. While we hold trades and can get big moves in options, no one should be holding anything to a piggy target. That's how you lose. That's how you give back too much profits. And it's about just having the consistent wins. And my newsletter is a very active letter. I'm calling a lot of trades. And you can't go wrong booking profits. You can't lose when you're booking the money. And ultimately, it's about working smarter, not harder. So like I said, I trade in the morning, and that is the most important time of the day. And then you can have the rest of the day to yourself. You can do whatever you want. So the idea of working 10, 12 hours, I did that in my previous career, my mortgage job. And I was exhausted. It was exhausting. So you get weekends off if you're a full-time trader. And again, my full-time trader position is really part-time hours while I check my options trades during the lunchtime period or before the close. I'm not sitting staring at my charts all day, unless for some reason it's a big day where I'm watching things. But it's a great career if you can make it work. 100% worth the effort, time, and money that you are willing to put into it. If in fact you're willing to put the commitment and the money and the time and the effort into it. Again, people are very often wishy-washy and back and forth with their commitment levels. And it could be because of experiences of the past, or it could be because they don't even know if they really want to do it. That's a decision that only you can decide. Do you want to do this or you don't want to do it? If you do, you got to be all in, because there's no half-assing it. You will lose and you won't be successful if you half-ass it. And again, most people lose that trade the market. Now, again, we're in a period now where the market's very bullish. It's not going to last. It's not going to last. And then all the people that think they know what they're doing, that think that they're brilliant, that are making money, are going to lose. And then they're going to wonder why, because they didn't have a strategy that worked to begin with. Again, these times like this right now, for example, today where the market is power trending, do not last and are very unusual. And you have to know that. You have to be well trained and well versed and smart enough to understand that the time that we're in right now, you want to take advantage of, but that you have to be able to trade it under any market conditions. So Annie was talking about shorts. I love to short. Okay. Panic comes in when a stock falls, which is why I prefer to short. So we were talking about learning a good strategy, following a mentor, and then focusing on one thing. So I don't trade a million different strategies. I'm not doing Forex, Bitcoin, this thing, that thing. I just trade gaps. If you become an expert in one thing, that is how you can be successful. That will help you be consistent. That will help you have less losses. Then you will become an expert in it, and you will know things that you don't even know. Like sometimes, like I'm telling you, some of the targets I've seen on some of these charts that weren't even numbers that were not even there. The experience of doing something over and over and over and over and over again for days and weeks and months and years, the same strategy, which is what I've been doing. You can't put a price on it. And a lot of traders jump around to too many things and they never get good at anything. And then they wonder why they don't make the money. So one of the cornerstones to everlasting trading success is really consistency. Without it, it's just so hard to stay in the market for any length of time. People leave, they come back, they lose, they take breaks, they come back. You want to stay with it. You don't want to give up. You can do this. And again, I rate the gap, and that's how I'm determining it. That's how I know what stock to trade each day. That's how I know the direction to trade it. I'm always looking for the power of money. This is just, this is a good example, like I said, of a short, just like the AMD that I've recently, but this was a good one here recently we did that was an earnings one. But you can be a professional trader. It's not impossible. There's good systems out there that you can learn. Mine is one of them. But the checklist helps tell me what to look for in the price of the stock. I get up in the morning and I rate it and decide if I want to do it or not. I don't take any trades at a pre-market. I wait until the open to do the trade. And again, I've repeated this earlier about how power money is in charge and you really have to respect it. And it's actually a great thing. The amazing thing is that as negative as traders and analysts talk about the power money people, they're the reason that one individual can be successful in the market. And I'm sure there were people that exited the market that were long the last 2 days when the market fell, or there were people that shorted the market and that got tripped up today when we broke out and made new highs. People always say, oh, they did this, they did it. No. People weren't looking at the right things. If they weren't in the right direction, or if you were in a trade and was down, you have to hold the conviction to stay with the trade, or you have too much risk on, or you didn't understand why it was there. I love every trade to go to the piggy target, and I love every trade to go the second that I take it, but that's not reality either. Sometimes I take a trade, sometimes I take an option, and it may take longer to go than I want. It may not go the day I do it. It may take a day or two. Okay. So again, I'm doing the weekly options. And again, this was the target, but it's all about the gaps. It's all about reading power money. It's all about seeing things clearly, and the power money moves. Now, I started talking about 2025 and setting the tone for 2025 and getting into that personal space where you are ready to develop yourself and really do something called level up. I'm sure you've heard this before, but this really applies to everything in our life, not just trading. But specifically, you will need to have this attitude to be successful trading. Why? There's too many people that are trading the market that want your money. When I take a trade, when I'm long the market, someone else is short, and they're losing and I'm winning. You see the difference? And different stocks, or I could talk about Target would be one of them too. Too many people trade in the fly and are not getting anywhere. And they're just not interested in learning. They're not getting good. They're losing. Getting good is the only way you will ever make money. And you're not going to get good at something until you learn a good strategy. You're not going to get good if you're flying all over the place with a 50-50 crapshoot attitude. You only get conviction if you get good. Otherwise, you have no conviction. And again, you could be trading blind then with that, where you take a trade and you don't even know if it's going to work. Well, what are you doing? That's so insane. Do you understand? Don't do that. Don't do that. Okay. You wouldn't tell your grandma to take a trade if you didn't think it was going to work, her last dollar in her savings account. You have to think about this like you care about the trades that you take, and you care about being successful, and you want to be successful, and you want to get somewhere with it. So anyways, my strategy is called the Golden Gaps. How do you make money in the market? Trade a strategy and system that's profitable. Golden Gaps are highly profitable strategy because they focus on large momentum to trade. What stocks do I trade? Stocks that gap and rate 20 points or more per the 26-point golden gap system. And when do I trade them? Early in the morning in the open when they set up and trigger. Again, I'm not getting in the pre-market. You must have a structure in place to make any money at all. And again, my checklist helps people stay consistent once they learn it and they apply it. So I rate the gap in the morning. This is what you learn in the class. You learn the 26 points. It's on the daily chart. Tells you what to trade for and what to look for every day. And I'm looking for the early confirmation, big move, precise entries. And again, I'm calling the trades in the room. If you're getting into the end of the year and you want to prep for 2025, like I said, now is a good time to put a plan of action in place. Trade gaps that rate. I'm looking for 20 points or more as the cutoff. So I don't have to have a perfect 26. I'm looking for 20 or more. The higher the gap, the better the quality gap. Then I'm looking to get the best entry, teach the entries in the class, and then you need a money management plan. How many trades are you going to take? How much you're going to risk per trade? Are you going to do day trades? Are you going to do options? All of this, you get organized and you write it down. And you write it in a notebook and you write it on the sheet. And I do think 2025 is going to be a big year. What do I mean? I think it's going to be a great year to trade. That doesn't mean I think the market's going to be bullish all year. Maybe it'll fall. It's going to have volatility. If anybody traded in 2016, 2017, 2018, when Trump was president back then, we had wild swings in the market, up and down. Trump would talk about tariffs. The market would fall off a cliff. Then it would rally again. And there's all kinds of things going on. There was a lot of opportunity then, and we're going to have it now. And we've already seen it. We've already seen it. It's in the market. It's in stocks. And someone was telling me, someone actually signed up for the newsletter last week, and he was doing futures. He said, you know what? I don't want to do futures anymore. Trading stocks is more fun. He's making more money. And that's the truth. People trade futures because they can open up a small account and they think it's easier. People only think that's easy because of the fact the market's been running up. And again, that may or may not last. The market is not easy to read and predict every day. And I don't trade the market every day, even though today we did. The fact is that stocks have large moves and they're fun to trade because you get the big moves and they have bigger moves in the market. And again, the market's been very pricey. Even to do as an option, the market is very, very pricey. This is me. I did a live class in September in New York. I don't have a live class planned for 2025 in New York City. So my class for January is online, but I met people. They came to New York City. They met me. It was a real experience for me. And it was a great experience for them. And so, you know, for me, I'd meet people all over the world. People flew to New York City and came and taught, and I taught my class, and it was a good experience. And I tried to be there for people, but I am a real person. I really live in Manhattan, and it's a wonderful, wonderful place. And I'm so happy and thrilled that I'm able to do this, that I pushed through, because when I started trading, I didn't know what I was doing. If I quit and if I had gave up, I wouldn't be where I'm at now in my life. So you are closer than you think that you can do this. It's just whether or not you have the commitment level that you really want to do it and want to get serious about it. But it's a great time of the year to learn and train. Again, the opportunity is there, and the time of the year to start out 2025 and learn something new and do something new is a great opportunity. And again, to change the energy with what you're doing to make it real and positive for you, because this is real and you can do it. This was a nice email I got from Gary. He did the class last weekend. Just Saturday and Sunday. And the cost of my class is $79.99, and he almost made back the cost of the class in these trades. And then he emailed me later. He did the AMD put, and he actually made $9,000, but I didn't plop that email in here. So it's a good success story, a recent success story from someone where people, they just are on and on and on about losing in classes and this thing. People need to think of a long range, learning something now that you can use and replicate for the rest of your life. And again, it's an investment. Taking a class like mine is an investment in you and yourself. This is a picture. Does anyone recognize this? I'm sure Fausto does. That's Bill Ackman. I saw him in a restaurant the other week. You know, it's just, you know, living in New York City where I live is just fabulous, fabulous, fabulous environment for me. I live among billionaires, which is just incredible. And when you're looking to learn from people and follow people, you want to follow successful people. You do not want to follow losers. You do not want to follow people that don't know what they're doing. You do not want to follow, I hate to say it, but people that are poor. You want to follow people that are wealthy, successful, and brilliant. And you know what? Those are the people that are making it in the market. And today is a great day. It's an example to those are the people that are buying the market today. You know what I mean? I mean, again, this institutional money is one. It's hedge funds. It's professional traders. It's big banks that come in and move the market. So if you think about it on a practical level, on a professional level, it totally makes sense. So empower yourself today to trade. If you want to do this, I teach my class. I teach it once a month. It's a full course on how to strategically pick and play stocks that are professional bearish gaps. So my class is in January 25th and 26th. I'm running a special through Sunday. You would sign up now. You can start trading now. You can start trading tomorrow if you want. It's 2 classes and 3 subscriptions. This is a Merry Christmas special. Normally it's $79.99. I'm doing a sale, $69.99, as long as you sign up by Sunday, December 15th. And then you would do the next class, which is in January. But you can start trading now. You can get the trades today. So this is a great special, and you would get the market report, trading room, and newsletter subscription with the 2 classes through the end of 2025. What else? Damon's talking about trading. Very good. How's everyone doing? I think I made it with time.
Yeah, Melissa, you did great. And I'm dying laughing that you're telling me to hang out with rich people. You know, there's a lot of, it's funny you say that, but, I always tell everybody, like, reason why I also leave New York is because it's the financial capital of the world. And like you said, you bump into people all the time, you learn from these people, you feed from them. I mean, I live in Long Island. I live in Manhasset. Some of the biggest traders in the world live in my town. They're in my country club. So, you're not going to beat them. You got to join them. So
Exactly.
So I mean, we have a lot in common. That's why I love having you on, because sometimes we hear from a different perspective of someone that lives in an area, understands it. You don't get it. It's like, it's like us going to an expo for people who want to learn about being actors, and like, oh, you got to live in Hollywood. That's what you got to do. And that's, it's like, why? That's where most of them are. So you got to be part of that whole environment.
Yes. Well, happy holidays, Fausto. If I don't talk to you, have a Merry Christmas and a Happy New Year.
You too. And thanks for having me. And like I said, we got to have you back on our podcast, and love to just have a dialogue with you and just talking about all the good times and everything else. And let's try to meet up sometime soon. All right.
Sounds good.
All right. Thanks for coming. All right, everyone. So we got about 3-4 minutes. So you got that promo link right there from Melissa. Just go out there and click on it, and you got it registered. We'll have Norman Hallett coming and joining us in about 4 minutes. So you got time to kind of like maybe hit the restrooms, fill up your cup of coffee. If you haven't bought a new Cyber Trade University cup of coffee cup, you could buy right off our website. We just launched them. And also, don't forget the Cyber Mouse. You always can use that. It tells you the best times and worst times to trade. You saw Melissa just telling you when the good times and worst times to trade. We have a lot in common as, basically trading the same way, following order flow, and just hearing what everyone else saying. And you see the market doing great. There's been a lot of buying going on, and sometimes it takes for the market to go down before it can go up, and, the great traders just got to know when to sell, and you got to know when you break those big support levels, and just got to move on. And there's times you got to hold. Listen, I did a trade today. I made a mistake as we were watching. I got a little, got a little bit, off my game a little bit, and I sold the stock. And as soon as I sold, I didn't sell all, I sold a little bit. And sure enough, it bounced back up. But, you got to know what your limits are, because there are times when taking those small losses, if you don't know how to take them, then becoming a lot bigger. And, and there's no better person to kind of talk about the discipline part, is who we're going to go into, be with Norman Hallett. And he'll cover a lot about that and so on. But don't forget, everybody, just make sure you subscribe to the channel, like us, friend us. We just post up that YouTube link right there. I did a video yesterday on Bitcoin. Bitcoin had a huge support level at 95. We just bounced almost 5,000 points. You don't have to trade Bitcoin. You could trade the ETFs. It's one of the hottest industries that are just going on right now. And you just got to basically follow those orders, and just see what those orders are. It was AI stocks, last week and the week before. They've been making quantum stocks, been moving up pretty nicely. You got to go with the industry. Sometimes, Tesla has been doing phenomenal. You saw Melissa was talking a little bit about that. I like to talk about Tesla. And the thing about it is because everyone knows it's a brand name stock. Everyone knows about it. But you know what? You don't have to trade Tesla. You could also trade the ETFs. And my God, there are so many ETFs out there. You could just see what you just talked about. You could leverage on certain options trade. But to get to that point, you got to know how to play the game of trading. And that's why we have all these great presenters for the next 2 days. And we're almost done here. Like I said, we got 2 more great speakers. You have Norman, you got Jesus, Nava from TradeStation, and I will be closing out the end of today. And then we got our keynote speakers are going to be coming in tomorrow. Looking forward to have Mike Cow that's going to come on from CNBC, one of the biggest contributors from on Fast Money. You've seen him. I just like I said, I met with him. I hung out with him at the summit down in Florida, the Bitcoin summit, and look forward to having him. So it'll be awesome. So anyway, let me introduce our next biggest guest. Okay, so. Listen, I'm really excited to have Norman. I had him. You probably watched my podcast. You've probably seen him here. I had him many times before, but I don't really, I always got to make an intro because he is definitely one of the, how can I say, one of the main reasons why traders need to have discipline. So he's the founder and CEO of the Disciplined Trader. He's a leading mental trader, in traders. It helps people improve their focus on discipline and also succeed in the markets. His discipline trading, mastery program has helped thousands of traders all over the world fine-tuning their strategy and sticking to their trading plans. A little bit about Norman's background. He actually was a stockbroker in a career, just like I was, and we mainly all started. He worked at Payne Weber back in the day. And he's also the author of The Mental Fitness of Traders, the book that has been downloaded literally over 1.5 million people worldwide. But Norman's not just about trading. He's got a really engaging personality, which you'll see. And I know him for years. I love listening to him. But his background, it's been around since the 90s. He hosted basically a popular radio show back in the 90s called The Risky Business, where he shared some of his great insights in trading, and he managed, basically how to manage risk. His passion is to help traders and succeed in trading just like him. And I trust him. That's why I had him on here today and look forward to hearing what he has to say. And I think you're going to learn a lot from him. So with that said, let's give a warm welcome to Norman Hallett. Norman, thanks for being here. Norman, I can't hear you.
Oh, there is it. Now I'll give you an official thank you. We need to exchange cups. I want one of your cups.
All right, you got a deal.
Oh, yeah, I need to make my logo bigger. You're right about that. But I got an expression on the other side. I'm a wise and disciplined trader, which is the introduction to. What do you got on the other side? Oh,
now you make me feel bad because I don't have it. I should actually, you know what? I should do the same thing. I should leave my words of wisdom like you have. That'd be a great idea.
Probably only have 500 cups on the original order. So, on the next.
Right. Exactly.
Well, thank you. I'm going to share my screen here. And I always promise, let's see, let's get it shared. That looks pretty good. I'm going to start at the beginning. I always like to do focus on the mental game when I'm with Fausto, because he and I know, we're both from New York, from Long Island. Life can be fast and exciting, but you need control. And I think probably we learned that at an early age. I know I was a high school and college wrestler. You kind of look like a wrestler yourself, but Fausto. But you learn certain control, and all of the great speakers. I looked at the list of great speakers. They must owe you because. It's quite a good list. But I'm the guy. I'm the glue. I'm the guy really that makes all of this work. And I don't know how to better say it. I mean, you can do it without me, but it's a little bit tougher and almost impossible for some if you cannot get control of the mental and emotional element of trading. And I'm going to go through 7 simple steps. The first 2 are the first 5 are simple. We'll zip right through those. The remaining 2 I want to spend a little time on because that's where you get the lasting control. This is where professional traders hang out. You may hear them on these presentations with a lot of energy and a lot of speed. We learn to do that in our presentations to bring some energy. But when we trade, it's a whole different story. We're usually pretty quiet. I know people don't believe me when I tell them I can be quiet, but when I trade, I am focused. And in order to focus, you know, you need that subconscious control. So let's get into it. Since we have the next 55 minutes or so together, let me just check one more time. Yeah, 56 minutes. All right, here we go. First, I'm going to cover who's going to benefit from this and a little bit about me. I'm going to just zip through that because Fausto gave you a pretty good indication of where I come from. I'm going to give you a little bit of a promise about this particular presentation. Then I'm going to go through the first 5 steps, what I call then the 2 secret sauce steps, which are even simpler than the first 5, but very, very important to understand. And then if you want my help, I want to give you something that I gave to willing traders during Black Friday, and I'm just I'm reissuing it just for this presentation. So you're going to really want to act on it. You know, Black Friday is already over for a week or so, so almost a week. In any event, let's get going. When we say staying on track, when you last experienced the fear of losing, what were the circumstances that led up to the fear? I just need you to put that question in your mind. The last time you experienced the fear of losing, because the fear of losing is tied to so many other fears. I'm going to sway in and out of that, but I want to mention that up front. What are the circumstances that led to that fear? I mean, did you take a couple of losses and then miss the next trade because you were hesitant? Did you start to revenge trade? What's your issue? Be honest with yourself about this, because unless you're honest, you're not going to get the kinds of responses or answers, because they're going to be within this presentation most likely. All right, so who's going to benefit? Really anybody that looks like this when they trade. We all kind of look like that when we start out, at least. And if you're still looking like that after 5 or 10 years of trading, just focus in on what I'm about to share with you. To be clear, futures traders, Forex, stocks, share traders, options, bonds, day traders, swing traders, position traders, and now I would say I'm training somewhere in the neighborhood of 10% crypto traders, which now exist in the futures market, and they have some avenues in the shares market, the ETFs and so on. So crypto is a big area now, but what I'm about to tell you, the mental and emotional constructs that I'm going to teach you apply, of course, to anything, but because without control, this is all, you're just kidding yourself. So why you want to listen to me? Because my wife recognized me as somebody with value, and she's smarter than I am. My wife is one of the best known in the world for her development of subconscious trainings, meditations for all kinds of individuals. She's been on the cover of psychology magazines all through her career, but for the last 15 years, she's been working with me to help traders specifically. So I have to give her the credit up front. I've written several books. These are the couple that are still available. This was a presentation at one of the expos, but I'm best known for what got me on the map are my 4-minute drill for traders. If you ever just Google that or go over to YouTube, you'll see over 200 4-minute drills where I speak like I'm going to speak to you today, right between the eyes. I mean, unless you are ready to be honest with yourself and put the ego aside and just let me dig in and help you, because we've all been there. We've all been there, and only 10% of us have taken that step that the last presenter described and whatever. We know what to do, when to do it, because we've taken our hits and we drew the line in the sand and we said, this is our time, and if it's your time, just keep listening. Fausto mentioned Payne Weber. I was a commodity trading advisor for them, where I was managing millions for 20% of the profit. That was very lucrative, but it involved a lot of selling. So I was only with them less than 2 years until I started my own Hallett Commodities. And then most recently in 2000, the Disciplined Trader, as Fausto mentioned. A little bit about my wife. She's recognized as an innovator in the field of the subconscious training over 32 years. Going to the next paragraph, she started the fast start accelerated learning program in California when we lived in San Francisco. But since 2000, she's focused primarily on helping stock futures and Forex traders with me. She's got all kinds of, didn't need 2 more pages to list all her credentials, but if you look her up, you'll find a lot about her. What is the promise for this particular presentation? What do I hope that you get out of it? And I really believe that you will if you just focus on what I'm saying. The promise is I'm going to give you all that you need to eliminate the fear of losing from your trading. What's more, by eliminating the fear of losing, you'll be proving to yourself that there is a simple process to reverse other detrimental trading habits like overtrading, hesitation to pull the trigger, revenge trading, which was our biggest issue last year. Before that, it was lack of patience, getting over losses, and waiting for that A+ trade to develop. You know, Fausto and I, we've talked over coffee at some of these expos. We always seem to go into the idea that you have to be patient to wait for the setup to hand you the trade, as opposed to letting your mind wander and doing something else. You got to wait for the A trades. Your vision will be clear that you can be the successful trader that you know you're capable of being. Look, I don't think you'd be doing this if you didn't think that you could succeed in it. I'm sure if it's like me, it's knocked you down a few times, but at some point when you get up, I mean, getting up is good, but continuing to be knocked down, especially for the same reasons, you start to enter that, that Albert Einstein thing, that if you keep doing the same thing and getting this and expecting a different result, then that means you're crazy. I'm not going to call you crazy. I'm just going to call you misinformed to yourself or whatever. But so this is my promise. Look at the elements and apply them. All right, let's get into the first 5 simple steps. Okay, the first step is really being comfortable with your risk. I do a lot of prop trading lately, and I train traders with prop trading. But it really, whatever you're trading, you have a certain amount of money, capital that you're dealing with. In prop trading, say you have a $50,000 account that you're dealing with, that you're testing for. I take that $50,000. I'm sorry, you have a $50,000 account that you're testing for, but you only can recede in that account $2,500. In other words, if you break 47.5, you're going to be blown out. And in your own account, you may have deeper parameters. If you're trading 50,000 of your own money, you may be willing to lose 10,000 before you really do some serious assessment. I think that number is pretty deep. But whatever it is, you need to adjust. You need to understand your risk. What I like to do, if I have a $2,500 span that I'm willing to speculate with and willing to say goodbye to, I take that $2,500 and I divide it by 10. Okay, so $250 is what I'm willing to risk on every trade. And if you have a trading plan that will deliver you 60, 65, 70, 75% in winners, that percentage will serve you over the long term, of course. You can get 3 or 4, 5, even 5 losers in a row in an excellent trading plan. But that shouldn't throw you out of the box. So you need to plan for your risk. By taking a $2,500 risk span and dividing it into 10 parts, I know that I can take $250 risk in each trade and be very comfortable where I'm not worrying about the risk. There are a lot more emphatic terms to worry, but I'm saying that if it's a 50,000, if you're trading 50,000 of your own money and you have a 10,000 you're willing to lose, then you don't want to lose any more than $500 per trade or whatever. But you want to give yourself an opportunity to win by letting the average work for you. So controlling your risk, being comfortable with your risk, that's the key. Being comfortable with your risk. Now I said 250 for 2,500. Some may not be comfortable with that. Some may want just $100. Okay, and they want 25 times. That's fine. Find your level to control your risk. Okay. The second tip that I have for you is to be confident with the why, the WHY, the why of your trading plan. If you don't know the depth of your trading plan, how it was constructed. I mentioned that I've written several books on trading plans, and what I go into in every one of the books that I talk about is this idea of being confident with the trading plan that you're going to trade with. If you're using Fibonacci, for instance, it's important to know that Fibonacci is a universal equation. It's a universal. You see it in the universe, in the Milky Way galaxy, in a snail shell, in the way broccoli expands. It's a formula of expansion that is true throughout the universe. And so we apply it to trading because trading it breathes in and out in a and since it's run by humans, it's very interesting and proven that it expands and contracts in a very similar way to everything else in the universe because we're the ones that created it. So if you have that in your trading plan and you're using Fibonacci and it doesn't work and you have a couple of losing trades, it's very easy to say to yourself, well, it's a universal truth. Over the long term, this will work. And have that trust because you understand the depth of what you're doing. So whatever elements that you have in your trading plan, you must understand the why of your trading plan and believe in that why. Because if you don't, this is why you see somebody with a great trading plan or a great presentation, you buy and it doesn't work for you because you really didn't look into the elements. You didn't understand the why. And so when it gave you 2 or 3 losses in a row, you lost confidence and just multiplied and turned to another ill like revenge trading, this kind of thing, or over trading. This happens often when you have early losses. So I'm saying to you, be confident in why you're doing what you're doing. So confidence in your trading plan. Let's go to number 3. This is an interesting one that I don't see much, but I advise it for every trader out there, no matter what you trade. You want to look back on the effectiveness of your plan so that when you move to the future, which is you're in the present now, and you're about to, when you have that positive expectation, which you really want to have as a trader, really helps you with that positive expectation. In fact, it's necessary. You need to sit down at your computer and say, today's going to be a good day. Doesn't matter what yesterday was specifically. But what I suggest to you is that you confirm the fact that your trading plan has value and that will work by looking back at yesterday's action and taking a look at that chart and saying, if I had followed my trading plan the way it is written, I would have been very profitable. You take that confidence and you bring it to the present and project it to the future. This is where confidence comes from in trading. This will allow you to overcome any ills that happen, those moves against you that you get scared and you get out and you should have stayed in and let your stop work for you. You'll have trust because you look back and you saw that yesterday, and I mentioned yesterday because so many times you get 2 or 3 days in a row that don't work. You say to yourself, is this trading plan even working now? Has the market changed? You call your friend, wasn't this a tough day to trade? Whatever it is, it's only you and the market and your plan, okay? And so if yesterday would have been a losing day for you, you want to look back another day and maybe 3 days if you need to, because most valid trading plans, good ones, will be profitable over 3 days or 4 days. But look back, you seldom have to do this, but look back 3 days if you have to, so that you can tell yourself, if I had followed my trading plan for the last 3 days, I would have been profitable. This way, in the present, you're saying, well, let's go. All I have to do is what I did yesterday, or what I could have done yesterday if I was trading, whatever it is. And if you didn't follow your plan yesterday, something, you have to excuse yourself. You have to recognize why. And I always suggest doing a specific meditation. We have those that can reverse that situation for you and put your mind in the right place. Because focus is all you have in trading. Your trading plan and your focus to follow that trading plan. Inspect the day before, have confidence that it works, and move forward. Okay. So we talked about the being comfortable with the risk. Okay, that's the beginning. And then confident with why your trading plan tells you to do what it's telling you to do. And then you want to be confident by looking back a day, 2 or 3, if necessary, to give yourself confidence in today's trading. The fourth issue is taking a break or rebooting. I I think traders trade too long. They trade for too long a period of time. When I met a trader yesterday that trades all day, and I said, boy, you trade. And no, he trades the day session, the night session. He was trading literally 14, 15 hours a day. I said, well, I'll tell you right now, nobody can keep their focus for that long. I will let me just give you the corollary to that. The less time that you bracket your trading, the less time that you trade, less time of the day, 2 hours, 3 hours, 4 hours, the less you trade, the more focused you're going to be on doing the right thing in a short period of time. This is why when a trader comes to me and says, well, I only have 90 minutes to trade before I have to go to work or whatever, I say, fabulous. That's exactly what you want. You want a focused short period of time so that when you can apply your tested trading plan, it's going to work for you because you're totally focused. Okay, so I trade from 8 o'clock to 8 o'clock to 12 o'clock Monday, Wednesday, and Friday, and I won't put on a trade past about 11:15 or 11:30 because I know it's going to bleed into my 12 o'clock deadline. Now, if a trade is on, from 10 o'clock and keeps riding, I'll ride it out. But the idea is that I do everything to stay in that structure, because when you do that, the more you commit to a short amount of time, shorter than you're probably trading now, the more focused you'll be, the most successful. The number of trades you take is not important. It's the quality of the trades that you take. Okay. And if you have a day with no trades, that's in many ways, just as good. In fact, I honor that more. You didn't take a trade that wasn't on your trading plan. It's not that you couldn't make a decision or that you were hesitant. No, not taking a trade is a decision. It's a decision not to trade. And that's just as important as taking a trade that you should be taking. So all of it is good if you do it right. So yes, now if you insist on trading 8 hours because you have no life, and then you need to take a break. You need to divide that into 3 or 4 parts. And when I say 3, I don't talk about 5 minutes. I'm talking about a half hour where you do a meditation, you go outside, you do something that is something other than just sitting in your chair, closing your eyes for 5 minutes and going back to it. You've got to cleanse. You've got to do it. It's another, but really you shouldn't have to really do that. Limit the time that you trade. Limit the time that you trade. I think you're going to be very surprised on what you're capable of doing when it comes to the idea of focus. Okay. The fourth element here, or is this the fifth? 1, 2, 3, 4. This is the fifth. Is to identify and stick with the 8+ trades. There is Fausto. This is the closest I could come to Fausto on a rocket ship. Because this is what happens. This is what happens when you've done enough testing. I mean, Fausto is a testing freak like I am. We test before we do. Don't tell us to do so. I'll look at it, I'll entertain it, but I need to test. I need to test it in real time. It takes me months to test new thoughts or ideas. I have somebody else test it, but I give them the parameters. It takes them months because I want it tested in real time for some specific reasons. When you see a bar, you never know what happened in the candle. So what I'm saying to you is that you need to stick to your best identified, tested trades. You're much better off taking only 3 8+ trades than you are 1 8+ trade and 5 A trades and 2 A- trades. Again, it is not the number of trades that you take, it is the quality of the trade. So you need to identify, and what is to me, an A+ trade involves an A+ trigger, okay? Now an A+ trigger is something that when you apply, when the trigger happens and you put on your position, you get the result that you want within the next 2 candles, maybe 3 candles, very short period of time. You want, and not the full extent of what you want, but the initial pop, enough to take a scalp. I love, when I'm prop trading, I always teach you need to take a scalp. You need to have that because because they hold loss of open trade equity against you. And why do they do that? Because professional traders hold open trade equity against themselves. This is why people jump out of windows. They don't jump out of windows because they had 10 losses in a row, and no, that's not why. Because they had what they wanted and they let it dissipate and they broke even. And now they're in a loss and they stay in it because they want to get it back, because they don't want to be the guy that when they look on the gal, they look in the mirror and they say, I was the person that let go of that $1,000 profit in a $10,000 account. That's why people jump out of windows. So I'm saying to you, when you have a construct where you take, say, two contracts that in the initial stage where you have an A+ trigger and you know you're going to get a pop, that's going to happen enough to give you that scalp and then move the stop to break even. And then you can relax as you defend the runner, as I call it, if and when that happens. So there's got to be a process that allows you to be right a lot of the time. And that starts with an A+ trigger, one that gives you what I call a pop, not one that over time will eventually, no. Most day traders, you want it now. I saw a comedian that was a very funny guy that just says, Amazon tells you that when they came out with the 2-day when the post office came with 2-day delivery, then Amazon came with overnight delivery. Now they'll give it. Now I order something at 8 in the morning and it comes to me by noon. And the comedian says, I want it in my hand before I think about it. I mean, traders want to know that doing the right thing. And I have, listen, that's a mental construct that's within all of us, that we want to profit. I don't want to tamp that. I want to encourage that by encouraging you to do the right things to get there. Okay. And so if I can review these 5 simple steps to eliminate, if I never see you again, to eliminate revenge trading and fear of losing, be comfortable with your risk. Okay. Divide your risk parameters by 10 or 20 and stick with those parameters on each trade. As long as you have a trading plan that is 60% or better, you're gonna do fine over the long term. Try to find one at 65 or 70 if you can. Be confident with the why of your plan. Unless you understand the guts of it, it's all gonna fall apart. This is why some of your friends making all the money in the world and you get it and you can't seem to run it. That's likely why. You got to understand why you're doing what you're doing, and you want to look back. This is something that most people, when they've never heard of this, I've been teaching it for years, and it's been it gets more and more effective as the markets get more and more volatile. So look back at the effectiveness of your plan, and of course, taking breaks. Again, if you're taking long break, if you're trading 8 hours a day, make sure you take a few breaks, and I'm talking half hour or so. But try not to do that. You can do a lot of profitable things in a very short period of time if you are focused. And the final one is that you want to identify and stick to your A+ trade setups. And when I say setups, I mean the whole from beginning to end, but especially the trigger, especially what gets you started in a trade. I think that's going to show you that you're doing the right thing a lot of the time, and feed your understanding that you can be a long-term successful trader if you just line up these mental constructs. Now I want to get to the 2 secret sauce steps that I believe are really even simpler than what I've described. I'm going to take a quick drink of water. Let's all take a righty. All right, here's the 2 secret sauce steps, and I'm going to dig into these a little bit because this is really where the lasting change comes. What I've showed you are kind of structural changes. They will help you to stay on the wagon once you're on it. But I find that if you utilize the secret sauces, that you can make the transition, and then these other points that I've described keep you easily on that agenda. Okay. So first, understand that we have a conscious mind and a subconscious mind. The conscious mind is the person is the voice that you're talking to all the time. Gosh, should I take this trade? Or boy, I bet maybe I'll double up on this. And, I'm coming off a double bottom. I know that's a little strong. I'm gonna take a little extra risk. Your conscious mind is advising you, but where does it just doesn't pick up. It just doesn't pick up its advice from the air. You have given your conscious mind the advice that it's going to regurgitate back to you. If you've had a couple of losses and you're saying, boy, this is again, this is a new plan. I just cannot seem to get in. I don't know. Is all this going to work? And then then you have a small win and another loss. Oh, every time I get a loss, a winner, it always comes back with it. If you're feeding your mind those doubtful thoughts, okay, and this is where you're coming from. You're trading without solution. Okay, you're trading without really knowing what to do, or some of the constructs that I've mentioned, and some of the constructs, frankly, that Fausto teaches. If you're talking to your mind in those detrimental ways, when a trade comes up, your conscious mind defends and protects what you have fed it. Okay, and when that trade setup comes up, you hesitate, because when your conscious mind says, well, hold on a second, you've had some doubts here, we've had some, maybe we'll let this one go, and if it works, then we'll get our check. And of course, the one that you don't take is the one that goes sky high, and you would have gotten all over your losses times 10. That's going to always happen to you. It did for me in the early days. But I'm just saying to you, you want to be in all of it. You want to, and how do you change this? You have to change what your subconscious mind believes is true for you. That's what it is. Your subconscious mind believes everything that you say, and will hold you to that, and will defend that. Okay, so this is a picture, literally, of the subconscious mind. And if you look at these wormy things here, this is an actual micro photograph, and these are actually energy pathways. These are actually holding thoughts. I don't know if I should take the next trade. Oh, well, maybe maybe I should take the day off. Oh, maybe I'll take one more trade. Maybe it'll give it. This is all the doubtful information that you're feeding your mind, and this is the neural net that your mind has created based on the repetition of these same like thoughts that you've given it, and therefore you're now acting based on this neural net. This is what your conscious mind will refer to when you get into a particular situation. Now, there are neural nets, there are thousands of them, maybe even millions of them, for every possible situation that you've encountered and given credence to or lack of credence to, and did it in any kind of repetitive way to create a neural net. Okay, so this neural net is guiding you. This is the one that's making you miss trades. Look at it. I mean, horrible. But you can change it. And how do you change it? Yes, I think what you do is you feed your mind with the right suggestions. I am a wise and disciplined trader, and I do the things that a wise and disciplined trader does. When my trading plan gives me a signal to get into a trade, I take it without hesitation, because I have a tested and proven trading plan. I am a wise and disciplined trader, and I do the things that a wise and disciplined trader does. Now, if you sit there and you close your eyes, you take a few deep breaths, and you listen to a meditation that is repeating these kinds of positive thoughts, generic but specific, generic to everybody can listen to it. It's not saying, hey, Bob, although the more you can do that, the better. We do that for custom traders. But I'm saying that even in this generic form that I talk about, you will create, with just 5 repetitions of a particular subconscious training, say overcoming fear of losing, being more patient, etc., overcoming fear and greed, reversing revenge trading. We have specific meditations on each of these. You feed even just taking a 7 to 10 minute meditation once a day for 5 days will build enough neural pathways to create this same neural net, only with the information that serves you. In fact, if you continue to feed it for another few days, it will replace the old neural net. The old neural net will die. It will shrivel up, just like a muscle will shrivel up, will atrophy. It will literally atrophies without any more conductive input from these energy streams of thought. So I'm saying to you, it is easy to do with meditations. You just have to give yourself the right suggestions. We have that for you. There may be others you can find, but we do it specifically for traders. And then there's something called the emotional freedom technique. This is the 7th point, that it is a much more modern way of doing the same kind of thing, but it really involves again, energy pathways. You know, listen, I have my degrees in math, and I think Fausto does too, at least in engineering. Most of us are engineers in the past. But you know, when somebody comes to me and says, you know, energy for your body, and if I can't see it, you know, if I can't see it and test it, I don't believe it. You know, you know, that's just the way I'm built. And you know, if you're like that, know that what I'm about to say is proven. It's proven, and it took me a little while, but now I see it transforming traders in a very interesting way. Now, if you think about Eastern philosophy in generally in health and medication and whatever, Eastern philosophy is they're in the preventative stage. You know, you've got herbs that strengthen your body. Here in the West, we're fire putter outers. You know, we kind of wait till you have a malady, and then we give you a pill for it to take away the pain. Or they're more preventative in the Eastern philosophy than we are here in the Western philosophy. So this is a construct from that Eastern that involves energy flowing through your body. Let's call it. I don't know why the name is escaping me, but they're vortexes of energy. Acupuncture, needles go in there, and where you have a vortex of energy that's stuck, they stick the needle in, they throw a current through it, and it frees up that energy to allow it to flow so that you can act normally and positively. So, you know, whether it's acupressure, acupuncture, this kind of energy flow ideas, it's running through your body, whether you believe it or not. It's been tested. I've seen it, and I've seen it in a scientific way, not even the way I'm showing it to you, but just to show you additional proof. EFT, the emotional freedom technique, sometimes called the tapping solution, is the go-to therapy for post-traumatic stress disorder. That's post-traumatic stress disorder is probably the toughest mental condition to flatten and or even think about reversing. Okay, to take away the pain and so on. But the emotional freedom technique, because of this energy flow concept, is what makes it the go-to therapy for the soldiers coming back from service. It works a little bit like this. If you look at the chart right here, you see these vortexes, top of the head. We all know about the one on the side of our head. The under the eye, you probably don't know about these things. I didn't. Under the nose, the chin, even under the arm. So what we do when we have Zoom meetings and they're repeating after Tisha and doing this particular procedure, you know, when I have them they have to lift the arm and tap under their arm. It's weird the first time, but when they see the result, I mean, they say, come on, let's keep tapping. This is a process that literally within what you do is you hold a thought in your mind, or you repeat a particular outcome. I'm a wise and disciplined trader. I'm a successful trader. I don't succumb to fear because so on and so forth, because my confidence is overwhelming. I've tested my plan. Whatever Tisha has you say, or whatever the therapist who is dealing with you for the emotional freedom technique, as you're talking, as you're saying these positive things, you're tapping these areas to free up and allow that energy that you're creating at the moment to flow through your body. I know it sounds crazy for some people, but I'm telling you, this is an area that you really need to get in touch with, because it's real. It's real. It's much better to prevent something than it is to get something horrible and then start curing it. Listen, and yes, if you're listening to me already, maybe you believe I can't get out of my own way when I'm the fear of losing. But EFT is also something that we use literally in trader emergencies. I can't get myself to do this. I keep trying, and we give them this EFT. EFT can give you an immediate reversal of the situation. This, combined with the long-term solution of meditation, using the meditations to create the neural nets, this is the combination that only we offer and that we can deliver to you. You know, you can go and find pieces of this all around, but being specific to traders, our suggestions of being specific to traders is very, very, more specific you are with these suggestions, the more you can act specifically. So I wanted to show you those two areas of the of the subconscious conscious mind, how that works, and the energy flow. EFT, or the emotional freedom technique, the Eastern Western science of separating emotion from thought. You see, when emotions and thought, when there is an emotion, there is a thought. When the thought is emotion, you can't, they come together. So the greater the thought, the greater the emotion. Okay, the greater the emotion, the greater the thought. This energy flow, this release of energy, separates thought from emotion and leaves you with, sometimes at the end of a 5-minute tapping session like this, people will almost forget, they will forget what the problem was. It's amazing. It's amazing. So I don't want to, after I've harped on it, I don't want to harp on it, but just saying that these are two of the things that you can do from a long-term standpoint that makes it happen. This is actually a picture. This is from these are 6 of the sessions that we offer in our Excel program. This is pulling the trigger without hesitation, overcoming thoughts of fear and greed, which is the one she's doing now. And this thing is about 8 minutes long. So if it's 2 minutes here, this tapping session is not even, I think it's 6 minutes. Trading to make money mindset. This is the one that I really like. It's really running your trading as a business in your mind. In other words, when you take a loss, it's like throwing in advertising in a business and nobody called. You won't do that again. So you need to frame things like a business. You can't take things personally when you trade. Sustaining discipline, it covers many areas at once to sustain it over time. So we usually like you to do this one last. Exercising patience. For years, this was the biggest issue. This was the biggest turnaround. Got the most testimonials from exercise, from turning impatience to patience to waiting for that A+ setup. And coping with losses, that's a big one. I mean, there's one thing about taking your losses. That's an issue. You don't want to move your stop. You want to have a constructed trading plan where you know that if you put your stop in the place that was tested over time, it's going to work. You don't want to start lifting that stop and doing some crazy things. Okay, so that's strength to take your losses. That's different from coping with losses. Coping with losses, we have one on strength to take your losses also, but coping with losses is about how you feel after it and the kinds of messages that you put in your mind after that. Okay, so this is where Tisha is now tapping one of those points that I showed you in the chart, and then having you repeat after her. And so you're actually in a video that you'll have access to. You'll be able, she'll say something, leave you a little space to repeat it to her on the video. Okay, so this is, I just want to give you an idea of how we apply. And those closets in the back is where I have my Donald Pliner shoes. As Fausto knows, I'm a crazy shoe guy. So now you have a choice. That's somebody that looks like he's been working out with a choice, one place or another. You can continue to do what you're doing, or you can really make a change. And I'm not asking you here to change your trading plan. I think if you've got a good trading plan and you know it, you can't follow it because of whatever reason, let's get together, choose the right path. Join me on this. Something called Excel. I want to say up front that Excel is a 5-week program that we offered for $997 up till last year. We didn't run it last year because I was in the middle of writing a book and so on. There's a number of things that happened. So we didn't offer it last year, and we won't be offering it this year for more action reasons. But Excel is really our premier program when it comes to fast change, because it involves both of these technologies in one shot. Now, I am not going to offer you I'm not going to offer you the live version of this today, Excel. What I'm going to offer you, instead of $997 in a group that what I'm offering you today is the recording of the first Excel program that we did, which I think was our best. This recording will first have an hour video of a session that we did with a group of a particular issue, like lack of patience. And if lack of patience is that week's issue, we did a group, we did some exercises, and then we give you the assets to train on that before the next week. What I'm offering you here is the entire recording of everything. You can do it on your own time. And because we're not personally involved, but you'll still get all the elements, it's a broken price that you won't believe, and I'll show you in a second. But this was a trade transformation program that was just 28 days. We were turning traders from lack of trading psychology and following the trading plan to ice in the veins. And this is the program that can do it. Okay. And what it involves, it was a 5 weekly meetings of which you'll have all in front of you with the moment you subscribe to this, and not subscribe, but buy it. There's no subscriptions involved. And then we give you work between the weekly meetings to do, the meditation to take. We give you access to that. We give you the EFT video to take, both on, say, on improving the patience. Let's say we're working on patience, so you get the meditation on patience, the EFT video on patience. We are solving the patience problem this week, okay? And then and then you're accountable to us the next week. Well, you won't get the accountability with this offer. You're going to have to be accountable to yourself, because I'm giving you all of the elements, and you'll do it on your own. Okay, I did this for Black Friday, and there are some that have moved almost all the way through already, and it hasn't even been in a week. They're really taking it seriously. So I'm going to offer you the recording of our first presentation of this 5-week program. And again, you've got the meetings. You'll have a recording of the meetings. You won't. These are the days and times we gave the meetings. You don't have to worry about that. But it'll cover things like, you see that form right here? There's also, on each of the weeks, there's a downloadable form, okay? And this one was about challenging negative thoughts. We give you a little worksheet with each one that you'll be able to download and so on. So hesitation to pull the trigger 1 week, lack of patience the next week, revenge trading the next week, fear the next week, running your trading as a business the next week. So this kind of progress, you can do it exactly as we prescribed it. Look at the video as if you were sitting there live with the others. Do the elements, the subconscious trainings every day, once a day for 8 minutes. Do the EFT session once a day for 5 minutes. Do that just as if you were doing it live, and stretch it out over 5 weeks. Just do it. Just do it. You're in control by having the recording of this. I think it really helps a lot of people, especially those that live in places like Australia or India or whatever, where the time space, you can't get it together, okay? That is a friend of mine. So again, accountability, which you'll be doing on your own, the 5 weekly meetings of which you'll have recordings of, the proven asset between meetings. In other words, you'll have the subconscious trainings, you'll have the EFT sessions and so on for you to work with. And of course, you'll make your friend accountable, or be accountable to yourself. This may be the toughest piece for you when you're doing it on your own, because I won't be looking you in the face on one of those Zoom boxes and saying, hey, did you do it? You're going to have to do it. You're going to have to do it on your own, because you're getting the recordings. I'm not offering you the live versions. Okay, this is what you'll have access to when you open up Excel. These are all the recorded sessions. I didn't include all 5 or 6 weeks of it, but I'm just saying that, say week 1, we worked on hesitation to pull the trigger, which is a big issue. The second week, we work on overcoming thoughts of fear and greed. So the first thing that you'll do is you'll look at the recording. You'll look at the recording. The recording will have 8 or 10 or 20 individuals, whoever was in that particular session. You'll have their little boxes, and you'll figure you'll be the 21st box, and you'll just sit there and you'll learn like we were teaching, as if you were part of the crowd, the Zoom boxes, okay? And then at the end, we're going to give you an assignment, and that assignment will give you a worksheet. And this week, it's going to be how to pull the trigger without hesitation every time worksheet. I'll give you, no time to go through that, but it's a worksheet that really simplifies things and has you think and act in the right direction. Then we'll give you the actual subconscious meditation, the training. You'll play it, you'll sit there, you'll take a few deep breaths before you start trading, you'll close your eyes, and 8 minutes later, you'll be done. And then after trading, or anytime during the day, you'll do the tapping. It's fun, really, and it's so effective. It's crazy. Yeah, you'll see Tisha, and you'll see why I fell in love with her. She'll be talking to you in the video, showing you where to tap, in what order, and saying, and you'll repeat after her, and it's fun. Okay, so you'll have all of the elements. And then week 2, you'll have another video. You can't see it down here, but it's here of the training. You'll have another special report that I gave. Instead of a worksheet this week, it was a paper that I wrote for an industry paper that I think could be real helpful, a guide to dominating the fear of losing, some of the things that we covered and maybe other things that we haven't. And you'll get the EFT version of the overcoming fear and greed. You'll also have overcoming thoughts of fear and greed in your subconscious training. So you're hitting from an Eastern standpoint and a Western standpoint. This is the way to get things done. Okay, this is the way to get the result that you want. Okay, Norman and Tisha, I'm so very grateful for the evolutionary development that I've experienced through your mentorship. Through the Excel workshop, Norman and Tisha provided me with the cutting edge advantage I needed to turn all the frustration from the years of heartache and disappointment results to a professional strategy that I'm now implementing consistently as a wise, disciplined, patient. You can see where he got that from. That's one of our big expressions. You're a wise and disciplined trader. Patient, profitable trader, averaging between 150 and 200 a day over the past 2 weeks. This particular individual I thought was asking for too much at his level of trading. Now, and now he's arrived at a level, did very well. The evolution I've achieved by attending Excel workshop has molded my trading abilities from haphazard activity to specific systemized steps that when executed with discipline are now spelling out consistent profits. I'm happy to share with you that I'm well on the road to being, and he's very, Thomas, you'd love him, a truly wise and disciplined professional trader. So he's thanking us. And here's Lee, who said, often traders get wrapped up in indicators. Up here, these are the actual, I'm just, you can't read this, so I'm printing it out here. These are the actual emails that were sent. Often traders get wrapped up in an indicator, patterns, moving averages, time frames, and the like to try to tweak their process ad nauseum. The true holy grail of trading is truly the mental component. It's likely the missing piece for you too. This 5-week Excel course has helped me develop a daily routine designed to improve my confidence and hone my ability to deal with losses. The subconscious training, EFT exercises have been immensely helpful. Any trader who does not work hard on their mental approach is doomed to failure. And Norman and Tisha have the exact program that you need to hone this key area of trading performance. Thank you, Lee, for the better explanation that I could have made. And finally, Andrew, who said, I believe that developing the mindset of a professional trader is the holy grail of trading. Not any of the numerous trading plans out there. Having worked with Norman and Tisha in the past, I know they do an excellent job of addressing the mental and emotional issues that many traders struggle with. So when they announced their Excel program, I know they would. I knew they would deliver, and I noticed significant improvement in my trading performance in only a few weeks. It won't take long. You won't have to go through all the material. You'll see the 6 weeks that I showed you. Start with the one that's your issue. If it's patience, start with that one. If it's you can't pull the trigger on, and you know you should, start with that one. If you're over trading, start with that one. Start with the one, and you will see immediately, not immediately, but within that week, you're going to see the difference, and that will inspire you to really move through the other parts of the trading. I highly recommend you to join Excel, especially if you believe that you're getting in your own way, and it's not your trading plan or lack of better trading plan that's holding you back from success. And these people are really, they're wonderful people, and not because they were. Especially the last guy, he was a little bit out there when we first, but man, has this honed him into the focus, and it will for you too. All right, the Excel is a 28-day program that again, you're getting the recording so you can manage it on your own time, no matter where you live in the world, okay? We offered it for, well, the first one was more than this, but the second one we offered for $9.97. But I made a Black Friday. I'm holding over that special. So I'm calling it for us here the Black Friday holdover special, which is the replay of the initial Excel where all of these testimonials came from the initial one. Okay. I have others, but I wanted to show you ones from this particular one. I'm going to give you 80% off, $197 to seriously approach your mental capabilities and freeze them in a state where you can be a focused, responsible trader. Okay, I don't know how to better say it. I think we've said it a million different ways, but for $197, you're going to get exactly what everybody got for $997 for this Black Friday holdover special. You just have to go to thedisciplinedtrader.com/Excel. And I'm sorry you've got to use this coupon code. You don't even really have to remember. When you get to this site, this page, you'll see it again repeated, BFR 2024, thedisciplinedtrader.com/Excel, and use that code for the 190. And it's one time. This is not a yearly thing. You'll have it for life. You'll have it to refer to as long as you need to refer to it. So I wanted to give you all of that. I know that I talked pretty fast, but I try to give all that I could, Fausto, for this because of our relationship. We've been together a long time, and I've always appreciated your idea of what moves the market and the big players. It just makes total sense. And I've always made total sense to you. So I thought I'd do something special to you today.
Norman, you don't talk fast. You're from New York. We all talk fast because we're always in a rush. We got to make sure we just tell you how it is, and that's it. So it's nothing. Don't worry about it. I love every minute, but I love having you on. You can see how charismatic and how unbelievable Norman is about his passion to kind of teach more of the discipline. One of the very few people actually teach a course on the discipline stuff. But Norman, thanks for having me, and Merry Christmas, and we'll see you. We'll hope to see you next year.
The best to you and yours, and thank you again for having me.
You too. You too. All right, everyone. So we got about 5 minutes. We're going to have Jesus Nava coming on from Trade Station, our keynote speaker here. Looking so forward to have him on. But as you get a chance, if you want to check out Norman's stuff, like I said, he's one of the, he's been around as long as I have, probably even longer, actually, believe it or not. But he looks amazing for his age. I asked him the other day, I'm like, Norman, how old are you? Like 60? He's like, no. I'm like, I think he said he's 80. He looks like he's like 50. But takes care of his body. Look at him.
80 is a little strong. Let's go with 75. That's almost 76. I'm getting
76. All right. So we're getting close there. So Norman had to come there and show you what he looks like. See, Norman, look at that. Unbelievable. Well, love it. I love every minute of Norman. That was great. Appreciate it. But everyone, once again, going back and talk about the market, what's happening really quick for everybody, what's going on. So, listen, it's a typical December. Dow is down 14, S&P is up 52. But what's really going to be fun about talking with Jesus going to be here is I was with Jesus down at the summit down in Florida. And what a great summit it was. They were the main sponsors of it. And the big thing we were talking about was AI. And we're going to have a bunch of presentation people that were speaking at the AI event and at the Crossroads Summit, actually, is the proper summit name for it. And also, he was doing a mastery course down there. And also, we're going to talk about Bitcoin, and Bitcoin, obviously, just hovering over 10,000. I know we popped up that link over there if you guys want to watch my video on it really quick. Depending on social media where you are, if you follow on Instagram, TikTok, whatever it is, YouTube, any one of them, you're more than happy to go check them out. And you'll see I did a big video on a 95,000 major support level on Bitcoin, and it is bouncing there. But what's nice about Jesus is that Trade Station is really getting a lot more involved on their options platform. Oops, sorry about that. Their options platform, and he's going to talk a little about that. He's also going to talk about that they're coming out with a new layout of their Trade Station platform. Looking forward to that too. And we are going to be one of their alphas, which is one of their only few people, as an alpha, beta, and, and then obviously the full version. So we're going to be showcasing that on the Cyber University trading room, and we're looking forward to having that there. But yeah, it's going to be just great having him on and talking about it as our last keynote speaker here at the Cyber Expo for the Cyber Expo Spectacular of 2024. So, but regarding about the market, everybody, just talking about a couple of things that are moving. I know some of you are students or in our trading room, and you'll see that there are a couple of good stocks that are still making some big moves this morning. Not that much in the market, but, iBit is moving up pretty well, making a big comeback to crypto from 56 up to 57.5. That one is just doing fabulous. NVIDIA is finally making a little bit of a comeback, being up about 4.5. And obviously the one we were talking about with Melissa is Tesla. Since she's came on, you heard what she said. She didn't do she made this great call and an option call of selling at 400. And sure enough, she's kicking herself in the ass, because Tesla made a big pop all the way up to a whopping 418. So listen, great traders never buy at the bottom. We never sell up on top. We always sell in between. That's how Tesla's always work. I'm going to be at the summit in Florida this winter. Oh, well, good. Well, James, it's great that you're going to be there. Is that the one that's going to be down in Trade Station? So listen, I know they host these events all the time. They have these mastery ones, and it's always good to be one of their part of that concierge department and so on. But Jesus was definitely going to cover a little bit about that stuff, but he's got some really cool stuff he's going to show you. But anyway, why not just introduce him right now? I know I see him standing there waiting patiently. So just a quick little intro about Jesus. Now, I know Jesus I've done probably more events with Jesus than probably any speaker's been here, because we've been we've done so much for TradeStation as being a very well partner of, and then them being a partner of Cyber Trade University. But, they're one of the foundations of day trading, and just excited to have him. But just tell you a little bit about him. He's the director in client training and education at TradeStation. Jesus has been with TradeStation since 1999. Now, let me explain something to you. We're going in 25, so he's been there forever. And during that time, he's been helped thousands of traders to understand the markets and making the most of the most powerful tools that TradeStation has to offer on their platform. Jesus started his career, just to let you know, all the way down at the bottom as an account manager at TradeStation on the international division. From what I know, hopefully I'm right. And quickly he moved up on the management tool to client service department. Over the years, he's trained brokerage firms, support teams on every figure of the stocks, futures, options, advanced platform features. His deep knowledge of the trading and the need of traders has made him a invaluable resource for the trading community and for TradeStation. And it's just been exciting just to hear him. Now, as director of client training, Jesus focuses creates his learning and his materials and delivers his training to traders worldwide. His mission is to help these traders gain the confidence and to improve their results using the TradeStation advanced trading tools and features. So please join me to give him a warm welcome to Jesus Nava. Thanks for having me here, Jesus. I know it was last minute to have you on here, but thanks for being here. And let's just share your screen, and stage is all yours.
Thank you, sir. I appreciate that great introduction. And from the get-go, I have to apologize for my voice. I think I have a little bit of a cold, but it's great to be here joining this event. And I do have to appreciate, all the years that I've had an opportunity to work with Fausto. Fausto's a great guy, great educator, and a great trader. So it's good to be, part of this event with him. So thank you for that. Let me go ahead and share my screen just to make sure that you guys can see it. Just a moment. That should come through very quickly. Okay, there we go. And when Fausto and I talked last time during the masterclass a few weeks ago, he said that it'd be interesting to talk a little bit about options and some of the tools around options trading that TradeStation has to offer. So I created this presentation titled Strategize Options Trading with OptionsStation Pro, where we're going to take a look at some of the tools that you can use on TradeStation in terms of analysis, also in decision making and trading when it comes to placing trades right on the TradeStation platform. But before we get started, usual disclosures, just as any other broker, we need to disclose that examples and symbols that we use are for educational purposes only. These are not recommendations of TradeStation. Also, active trading is not suitable for everyone, especially when it comes to trading options, which carry a higher degree of risk. And also, past historical performance is no guarantee of future results. If anybody needs additional information on disclosures, you can go to www.tradestation.com/important-information, and you'll find a ton of information on disclosures there. Okay, I'm going to switch over to my TradeStation platform and start to talk a little bit about options analysis. I'm not sure, this is data that I don't have, but I'm not sure how many people here already use TradeStation. I know that, Fausto brings in a lot of TradeStation clients. So if you are already using TradeStation, these are tools that you can use and utilize right out of the box. And if you're not part of the TradeStation family, this is just a presentation to show you what, TradeStation is capable of doing and some of the things that we can help you with as well. I shared with Rich a file, which is a zip folder that has a couple of workspaces and a couple of custom studies that I'm going to showcase today. So if anybody is using TradeStation, he will just make sure to share those with everyone here so that you can have them and keep them. Just eventually, if you join the TradeStation family, you'll have them so that you can also use them on your platform. Okay, so here on this particular workspace, I have the S&P 500 here on the right-hand side. So this is a list of all the stocks that make up the S&P 500. And over here on the left, I have a chart that is linked to the radar screen. So I can very quickly click on any of the symbols that show up here in my, well, these are not linked. I lied. I thought they were linked, but they're not. They can be easily linked by just clicking on that S at the very top. When you see that S light up in a particular color, as long as they're the same color, they're communicating with each other. So I can click now on any of these symbols like Airbnb, and then you can see the chart update to that symbol. It makes it very, very, very simple to do. Now, the couple of indicators that I have here on the bottom left, these two right here, are indicators that use two forms of volatility. We have implied volatility, and then we have historical, which is also referred to as statistical volatility. Let's explain how historical or statistical volatility, which is simpler. Historical, or also called statistical volatility, is based on the price activity of the security. For example, we're looking at Airbnb right now. So we see how the prices have gone up and down, and that magnitude of price movement up and down is what is measured as volatility. When the prices move more, of course, it is said that is increased volatility. And when the prices are kind of trading within a channel, of course, volatility drops. So that's, in simple terms, what statistical or historical volatility is. It's just a measure of where the prices have been historically, how far they've moved up or down, and it's measured in relationship to historical prices. So to have a sense of if volatility is high or volatility is low. In terms of implied volatility, which is totally different, implied volatility uses options data in order to determine what the volatility of the security may be going forward. So we're talking about two different types of volatility here. One that is historical or backward looking. It looks at all the price movements in history and measures volatility. And then there's one that is implied, and it's forward looking by looking at the options pricing. So there's a relationship between implied volatility and historical volatility that every options trader needs to take a look at. This indicator that I have here in the middle, we title it IV range percent. And what it measures is where implied volatility is at the moment compared to where it's been in the past. In this particular example, we're looking at 100, and you can see the 100 here in parentheses. We're looking at 100 historical trading days, identifying what the highest implied volatility was and what the lowest implied volatility was, and then telling you where the current volatility falls within that range. So if you look at the volatility, or the implied volatility right now is at 12.38, that is 12% of that range. It's very, very low compared to where volatility has been in the past. So it's a very interesting indicator because it does give you a measure of how options are priced, meaning the following. If historical volatility is higher than implied volatility, then it is said that the options are overpriced. In this sense, for example, implied volatility is very low. Actually, that's the indicator right here at the bottom, where you have the comparison between the implied and the historical. You can see that the red line is the implied, and the cyan line is the historical. Those are the two volatilities that we talked about. And whenever you have the implied, in this case is the red one, below the historical, it is said that the stocks are going to be underpriced. And it's a very clear concept to understand once you're looking at an option chain. Let me show you an example. This is Airbnb, right? Let me go here to my Option Station Pro and pull up another symbol. I was looking at an example because I'm going to jump over here to this other workspace to show you some examples on how we can look for bullish stocks where we can establish options positions. When I was doing a scan earlier this afternoon, this stock came to the top of the radar screen, super microcomputers. And I'll show you how do we do a scan and how did we get, a notice on this particular stock. But SMCI is the symbol for super microcomputers. And this indicator, as you can see over here on the right-hand side, is underpriced. When I pulled up super microcomputers inside of Option Station Pro, this is what I saw. All right, this is super microcomputers. You can see the stock up here. You can see that this is the option chain of the options that expire January of next year, 2025. So there's still about 37 days until the expiration of this option group. Now take a look at the bid and ask prices of these options. On the call side, we're talking about $5.25. On the put side, we're talking about $4.70. Now, these are the prices where implied volatility is calculated. Now, if you look at the theoretical value of these options, is over here on the left-hand side. Theoretical value of the call is $10.53. And on the put side, if you look at the theoretical value, is $10.03. So it does clearly imply that these options are underpriced based on the comparison between implied volatility and the statistical and historical volatility. So when it comes to deciding, which options to trade when you are bullish, you would want to focus on the ones that are underpriced because there's potential for those options to gain value. The same happens if you are selling options. You want the options that are overpriced because there's potential for those options to drop in price. We always want to be on the right side of the market. So having a sense of knowing or having a sense of which options are underpriced, overpriced, or neutral, I think it's something important that every options trader needs to know. The implied volatility calculation is also reflected here on the left-hand side. Everybody sees where it says the 103.76 right here on this row. This is implied volatility. What it does, it takes all the options prices, well, not all of them. It takes, there's a calculated formula that goes into, the option chain, looks for certain options, and then calculates a value that is the implied volatility. That's why it said that it's forward-looking, because based on this number, this 103%, it is implied that the security or the underlying will move $10.34 plus or minus. Everybody sees the number in parentheses. So there's an expected move based on that implied volatility. And that is the reason why it said that it's forward looking, because there is a probability that this security, which is super microcomputer, is moving up $10 or down $10 from its current price, which is significant because the price is only priced, or the security is only priced at $38. So a $10, we're talking about something, close to the 20% movement. Now, how long is that movement going to take, supposedly, or, theoretically? Of course, 37 days until the expiration of the options. There is a ton of information here in Option Station Pro that can help you make informed decisions as to which securities to trade and which options to trade. Now, let me go back here to my trade station so that we can take a look at another example. So we looked at these two indicators. We looked at, implied volatility range and see where the volatility or the implied volatility is at this moment in comparison to the past. In fact, let me go ahead and load up the symbol that we were looking at. SMCI, is it? Yes, super microcomputer. If you take a look at SMCI, you can see that implied volatility is at 20%. So it's 20% of its 100 trading day range. So it's rather low. So in terms of options, you're going to see that these options are relatively cheap. This indicator right here is kind of split into 5 different sections. I'm not sure if you see the dotted lines in between, but any implied volatility that falls on the very bottom section, it's going to be represent cheap options. Once you go above that, that's moderately cheap. Right in the middle is neutral. Then you have moderately expensive, and then at the very top you have expensive. That's when you find options that are going to be overpriced, and for the most part, that's the prime prime state where traders are looking to sell options because they implied volatility is high and prices are expected to drop. And you can see here the relationship between implied and statistical, and you can see that in this particular statistical is much higher than the implied. So for super microcomputers, we're talking about options that are underpriced. Now, of course, that's very clearly displayed here on the radar screen. I don't have super microcomputers here, but if I go back here to the bull call spreads, you can see that super microcomputers is underpriced under this IV Compare study. Now, how did we come about this super microcomputers? Well, we use the scanner. The scanner is right here at the bottom. The scanner does allow you to scan through hundreds of different stocks and find the ones that are meeting certain criteria. In terms of a particular option strategy like the bull call spread, that's why the scan I named it bull call spread. We're looking for opportunities to establish a bull call spread. I'll explain what a bull call spread is in just a moment if you're not familiar. But what we did here in the scan, let me go ahead and customize it so that you can see some of the filters that we applied. Here are the categories. The first thing is description. So we want to see the name of the corporation. That just lets you know, what's the corporate behind it. Not only an acronym, but you can see, the corporation's name. Then we have the last traded price. We're looking for stocks that are over $15. That'll help us drop any of the penny stocks or stocks that are lightly traded. So that's why we have that filter on price. You can make that price anything you want, by the way. And in terms of volume, we're looking at a 3-month historical volume average, and we want that to be greater than 100. Well, this is 1 million. So we're looking for trading activity. We're looking for the stocks that we want to trade. We want those stocks to have liquidity. So volume is something that's really important to filter by to make sure that we're able to get in and out swiftly. There's nothing more frustrating to a trader than wanting to get rid of shares and nobody wants to buy them, or wanting to buy shares and there's nobody to sell them. So if you focus on securities that have high liquidity, high trading activity, then this is less of a concern. It doesn't mean that you have a guaranteed execution, but it's less of a concern. Then we're looking at percent change. Look at this filter. We're looking at percent change for the past 4 weeks to be greater than 20. With this filter, we're looking for momentum. We're looking for stocks that have appreciated in value and are showing us a bullish characteristic. In addition to that, we have 2 different RSIs. Let me open one of them, because the first RSI is a daily RSI. Notice how the interval is daily, meaning that it's using daily candlesticks, and it's looking at the RSI value to be somewhere between 40 and 70. Why 40 and 70? Because we don't want the security to be oversold, because that's just an indication that the security is probably going down. We don't want the security to be overbought either, because it may have lost all of its momentum already. Of course, a stock can remain in an overbought state for a prolonged period of time. But in this particular scan, we're going to avoid anything that is overbought, assuming that they've reached their top and they're about to drop. So we want stocks that are somewhere in between 40 and 70, which is kind of a sweet spot for RSI, meaning that there is potential for the security to go up. Of course, at that sweet spot, there's potential for the security to go down. And that's why we couple this with, the percent change momentum, because these are stocks that are appreciating in value already. And in terms of the RSI, they're not overbought yet. So there's room for improvement to the upside. And then there's a second RSI that is on a weekly interval, meaning that it's calculated on weekly candlesticks, and we want that to be greater than 40. So not only are we looking at a medium term, because we're looking at 14 trading days, a medium term RSI, but we're also looking at a weekly RSI, and we want that to be greater than 40, or at least have some bullish momentum. It is said that any stock that is bullish usually keeps itself above 40 on the RSI study. I do have a third one here, but sometimes if you add a third one, the scanner becomes a little bit too restrictive and it doesn't throw any results. This one right here is looking for a 60-minute RSI, and it's looking for it to be less than 30. But now it's a little bit contradictory, but we're looking for is a pullback. So yes, overall, the stock is bullish, but all of a sudden, you know, in an intraday chart, we see a dip in prices. The stock is oversold because it's less than 30, but there's potential that the stock may continue in its overall direction, which is bullish. So it's a small pullback, and sometimes, you know, capturing those small pullbacks may improve your trade efficiency. Now, I'm going to run it without it, and then I'm going to run it with it to see what type of results we get. But when I found super microcomputers, this is exactly what I did. I just ran the scan. It calculated, you know, all those filters for me, the RSI calculations as well. All right, let's wait until that finishes. It's at 99%. There we go. And what I did is I clicked on all the symbols. There's a total of 60. I copied them, went here to my radar screen. Let me remove the ones that are here. I'm just gonna delete the ones that are here. Okay, where you see that I'm blank on my radar screen, and I just pasted, Control V. So it pasted all the symbols in here. The first thing that I did is I wanted to see which one had the most open interest. So I double clicked. It sorts in ascending order. I double click one more time, and it sorts in descending order. And guess who's at the top? Super microcomputers. That's that's how I found this symbol. And it's just an example. Doesn't mean anything. I haven't looked at super microcomputers just to make a more informed decision. But I do know that it came up in my scanner as a bullish stock that was showing a little bit of bullish momentum. If I were to turn on that other filter, let's go ahead and click on customize, turn on this third RSI, which is the pullback piece of the filter. I'm going to run this. Okay. Since we added an additional filter, it may take a little bit longer to calculate, although it's only calculating on 62 symbols. You choose 62 symbols right here. But it may find that there's no results. You know, maybe a lot of these symbols, although I'm looking at, yeah, you see a lot of these RSI, most of them are overbought. I'm not sure if it's going to find anything that's oversold. Although this is an overbought on a daily interval. So it says no symbols met the selected criteria. And that's one of the reasons why I turn it off for some of the scans that I do. But sometimes, you know, I run it with it because it may present an interesting opportunity where you have these overall bullish stocks that are kind of dipping a little bit and then probably continuing in the same direction. So it may provide a more efficient entry point. But without the filter, we get the list, and this is the symbol that came up, which is super microcomputers. Now, in terms of what to trade, so one thing is to understand, you know, what's your position on a particular security? Are you bullish? Are you bearish? So now, what is it that you can trade, and what are the possible outcomes? You know, I can definitely, you know, buy 100 shares of SMCI. How much is it going to cost me? Well, the last traded price is $38.26. So if I put in a trade for 100 shares, it's going to cost me around $3,800. Pure math, right? You multiply the last traded price times 100, move the decimal place, and it's about $3,800. Or we can buy a call, right? We know that if you buy a call, there is bullish potential, and you don't have to dish out the $3,800. So if I go here to my Option Station Pro, and I'm looking at the calls here that are priced under the January expiration, maybe I want to hold this option for a few weeks or maybe 30 days before it expires. I know that I can buy a call. If I buy a call, it's going to cost me $5.30. I'm going to click on the asking price to show you something interesting. Well, first of all, as soon as you select a call, which in this case I did, it highlights the whole row for me. There's a line or a red line that shows up on the strikes. This red line is showing me where profitability begins. As you can see right now, it's red. So any price around 38 would still generate a loss for me. Why? Because this is costing me $5.35 per share, or $535. So if you look over here on the trade bar, you can see that the maximum loss, which is over here on the right-hand side, is $530, which is the price that I'm paying. Well, the price is right here on the limit price, but because it keeps on changing. But if I shift this to 535, here's my maximum loss is $535. That is a transactional cost that I need to recover. So in order for me to be on the green, this price or this security needs to increase at least by $5.35. Where should it go? Well, let me go ahead and increase the strikes here for a moment. I'm going to show 20. Take a look. We can see where the line turns green. It's right after 43. Why? Because you do have to add the $5 to the $38 that the stock is trading at the moment. It needs to go past 43 in order for you to start making money. This is also visible here when you go to analyze the trade. I'm going to click on analyze here, and this draws a graph for me. Now, the graph is very telling. Let me go ahead and squeeze the prices here. The prices of the underlying are right here at the bottom. Graphing an options position does tell you a lot about where profitability is and how much the price needs to move in order for you to be profitable. We have the prices of super microcomputers right here at the bottom. 38 is the last traded price, 38.40. That's where the yellow line is. By the way, the other two yellow lines are hypothetical scenarios of what would happen if super microcomputers would be down 5% or up 5%. So this is very good for you to create these hypothetical scenarios, or more like a sandbox. What would happen if? Because the if is very important, and we need to be aware of the risks if the price were to move up or it were to move down. Now, the three lines that you see here in the graph is the value of this options position at different times the blue line is at expiration. Do we know what the expiration date is? Right here, January 17th. You see the expiration over here on the top right corner. The green line is somewhere in between. You can see that right now, the green line is set to December 23rd, and the white line is today. It says now. Days to expiration is 37. So in reality, if you look at the value right now, yeah, the price of super microcomputers does not need to go all the way up to 43 in order to be in the green. Where does it need to go? Well, is exactly where that white line crosses over the negative or the zero line. The zero line is right here. As soon as it crosses the zero line, you're in positive territory. So yes, at expiration, the price of the underlying needs to be above $43, but there is time value in the position that accounts for some of that. So notice that today, the stock only needs to move up a little bit higher for you to be on the profitable side. In fact, if you look at this price slice that says if the price goes up 5% to $40.27, there is a theoretical profit of $112. So that's if it happens today, which is interesting, right? Of course, your plan is to hold this position for a little bit longer. And let's say, for example, that we want to hold it until the end of December. Now, December here is December 23rd. We can adjust that if we want to. I can go here to the settings of Option Station Pro, to the graph, and I can say the green line, as I slide this little slider left and right, you're going to see how the green line changes in the background. Let me move this over so you can see it. You see the line moving? You also see the date changing here. I'm not sure when the last trading day of December is, but I'm going to check right now. Is December 31st. It's a Tuesday. I think the markets are open the 31st. I expect the markets to be open the 31st. So let's say, for example, that we want to hold this option until the 31st. So I'm going to just slide it until I see December 31st up here and then close it. Now, if you look at my price slices, they're all set to the now line, but I can click on this drop down for plot and say, set those to plot number 3, which is my green line. Notice how the text here turns green, an indication that I'm looking at the valuation of the green line. But notice that if Supermicro computer goes up 5%, and I'm holding on to that until December 31st, I'm still losing money. So it's very telling that the time component or the time value of that option diminishes. There's a time decay that occurs on these options that we have to be aware of. You know, if we hold it until December 31st, maybe it's too late. There's only 17 days until expiration, which is very little time value. The stock or the underlying security would have to move more in order for me to make any profits. Now, of course, I can change this. I can change, these prices. I'm not saying that it's going to go up to $40, but let's say, for example, that I drag this to, say 45. Maybe I think it'll go up to 45. Excuse me. So if I drag it up to 45, I can see the behavior. I can see that if SMCI goes up to 45, would make a theoretical profit of $294. Now, on an original investment of $535, how much return is that? I have my calculation right here, so we're just a small calculation. $294 divided by 535, which is the additional investment, gives about a 54% return on initial capital. Pretty massive, right? Pretty incredible. Now, of course, this is if all the ducks align, and if what I'm looking for actually materializes, which is the stock goes up to 45, I'm holding the call until December 31st, and I realize this profit. Okay, but then again, I didn't have to dish out the $3,800. In fact, the $3,800, let's say, for example, the stock goes up to 4,500 minus the 3,800 investment. That's about a $700 profit divided by the original investment, which is 3,800, gives us about an 18% return on initial capital. So even though we're bullish on both trades, buying the shares of Supermicro Computer, it makes sense that the options trade would provide or would generate a higher return on initial capital if our assumptions would come true, and if everything turns out exactly on both scenarios. Okay, some things to think about, and in terms of a bull call spread, which is the original topic of this presentation. Let me show you how that works. Let me go back here to the option chain, because a bull call spread, it's an option strategy that is also bullish, but it does reduce the cost and reduces the risk. As soon as you're reducing the cost of your trade, you're automatically reducing your risk, and it's something to think about. For example, if I were to buy the 38 call, but at the same time I were to sell the 43, see, or maybe even more, maybe the 45, because we think the price is going to go up to 45, but not any further, because selling options is something risky, and we all need to be aware that if we are selling an option and the price is not in our favor, is on the other side's favor, we can get assigned. An assignment is a big risk that we all need to be aware of. But in this case, I can sell the 45 call in addition to buying, the 38 call, as I said originally. But take a look at the price here. The price is different because I am paying for the 38, but I'm receiving money for the 45 because I'm selling it. So my cost here, my maximum loss, went down from 535, which is by just buying the call, to 242, which is buying the bull call spread. Of course, it also limits my profits. Let me go ahead and analyze this bull call spread and see what type of return I would get. Let me go ahead and analyze this. Okay, so now here at the bottom of my Option Station Pro, I have both the vertical and the single. Let me go ahead and uncheck the single so that I just see the vertical. And on the same scenario, if the price were to go to 45, by December 31st, I would make a profit of 175. Now, if I take that 175 and I divide it by the original investment, which is 242, it gives us about a 72% return on initial capital. So again, that's just, if all this hypothetical scenario would actually turn true, which, you know, it has to be taken with a grain of salt and some, you know, realistic stand. You know, how likely is for super microcomputers to go up to 45? You know, we know that based on the pricing, when we went here in the option chain, there's an expected move of $10. There's an expected move of $10. Of course, that expected move doesn't give you direction. That's why it has a plus or a minus. So the same probability that you have of super microcomputers moving up $10 is also the probability that it has moving down $10 based on the implied volatility. If it goes down $10 from 38, that means that the price would drop to 28. Let's go ahead and take a look at that, what that would generate. I'm going to turn this and drop it here at 28. At $28, you can see that your theoretical P&L here will be $217 at that date, December 31st. It's not the maximum loss here. The maximum loss is 242. That's the maximum you would lose at any given point. But it's interesting that I can use all these tools to measure and see what is the likelihood of an options position to turn a particular profitability. So there's three scenarios that we talked about here. We talked about, you know, placing placing a trade on the underlying asset, on the shares, like buying the 100 shares outright and, you know, dishing out the $3,800. We talked about just buying the call, which is also bullish, and only paying $535 for that call. It also has, you know, profitability if the price goes up. But then we talked about the bull call spread, which is a multi-leg option strategy. It's called a spread, and you're able to reduce your cost, increase the return on initial capital if it goes in your favor, and, you know, reduce the risks at the same time, because the maximum risk here would be 242. Although, again, be aware of the assignment risk, because where we don't live in a perfect world, you know, things do happen. And if you get assigned, you do have to be prepared to what that represents, okay? And we also looked at a couple of indicators. Let me go back here to my trade station. We looked at implied volatility and how does it stand in comparison to the last 100 trading days, and how does implied volatility compare to statistical volatility, which allows you to determine if you know, options are underpriced or overpriced. Let's see. Are there any questions? I'm not sure if the audience can send questions, but wanted to maybe open up the floor for a few questions if there's time. And also the link that is shared right there in the chat, of course, gives you access to that zip folder. It contains, you know, those two workspaces that I have here on my trade station, and it has those custom indicators that you would need. And this is what you need to do if you're a TradeStation user. This is what you need to do. You need to download the zip folder. Once you have it on your computer, go in there, and before you open up the workspaces, double click on the ELD. The ELD is going to contain the custom easy language, these two indicators that I'm showing here on the chart. If you open up the workspace before the indicator, it'll generate an error and it'll say, hey, it has been deleted, or something that is, you know, confusing. So make sure that you double click on the studies. I think I call them masterclass IV studies or something like that. You double click on that file. Let me show you what it looks like when you double click on it. When you double click on that file, this is what pops up. This is the import wizard. Notice that it has indicator checked. When I click next, it has the three indicators, IV compare and IV range percent. Why are there two IV range percent? Because one is for charting and the other is for radar screen. It gives you the same information. The benefit of having in radar screen is that you can rank. But then if you finish through this wizard, it'll give you all those indicators that we see here. Let me show you how cool the radar screen indicator is, because I don't think we looked at it. You know, this is yeah, right here, the IV compare. There's a couple columns right here that I want to hide. For example, this implied volatility, it says implied all the way down. I don't need it. The same for statistical. It says statistical all the way down. It's just letting you know which color is which. So red is implied and blue is statistical, but I can just look at the column headers up here as well. So if I right click on that header, go to studies, and I'm going to click on show hide plots, and I'm going to hide statistical volatility and implied, at least the labels. I'm going to click OK, and you can see how everything just condenses a little bit more. The nice thing about having an indicator like this is that I can rank symbols that are part of a sector or an index. Right now, I have the S&P 500 index, and I can sort by the ratio between the implied volatility and the statistical volatility. If I double click, let me double click, it'll sort in ascending order. So it goes from the lowest to the highest. Notice that you see the ones that have the most difference between statistical and actually, I think I removed the column that I didn't want. Let me go back in here. What I wanted to move was statistical, and I wanted to leave this one. Okay, there we go. That way we can see statistical and implied volatility. You can see that implied is 30%. Statistical is 91%, almost 3 times as high. So this 66%. So implied volatility right now, it's about 66% of the statistical volatility. What does that mean? That the options are going to be underpriced. If I double click on this column header one more time, it'll sort in descending order. And you can see, for example, K. K is Nava, and you can see that it's 769%. Why? Because its implied volatility is 35%, when statistical is 4%. So what are you going to see? Overpriced options. Let's go and take a look at that symbol in Option Station Pro. Let me go here to Option Station Pro for a moment. My options, let me load K. You can see the prices of the options right here. Sometimes if there's not a lot of trading volume, you may get some values that are skewed. For example, here we have NE, which doesn't have enough historical data to calculate correctly, but the prices here are lower than the theoretical value. So it means that they are cheaper. So if I go back to TradeStation, you know, that's one of the examples that, you know, the data doesn't really help us determining if the prices are underpriced or overpriced. I was going to say the same thing, you know, this 769% just seems odd, you know, like an anomaly. And it just means that there's not enough data for it to do a fair comparison. But let's go here and take a look at Nike, for example. Nike says it's overpriced. We see that the ratio is at 92%. Statistical is much lower. So I should see options that are more expensive. Let's go ahead and take a look. Let's pull up Nike here. All right, so yeah, you can see, for example, options here, the calls are $4.70 when you see the theoretical value at 3. So we're seeing that the options are much more expensive than what they should be. So these are overpriced options in terms of Nike. So when an options trader comes and looks at this and says, well, if I'm bullish Nike, you know, it's tough, because then you're saying I'm buying something that is already overpriced, something to think about, right? All right, that's it. So I didn't want to take more time than what I had. I think I had 45 minutes to myself. I'm not sure if there's anything else that I should be showing Fausto, but these are the type of things that I wanted to show you here, and the technology that we have at TradeStation.
Yeah, Jesus, regarding about the platform, about the options. So when did you launch the options platform? Is this a newer version, or when's
It's
this been
not.
out?
This is the same version that we've had for years.
Okay.
Yeah, Fausto did mention that we are working on a brand new trade station. It's an overall trade station platform that is going to eventually replace the desktop and other of our platforms, but that's not ready for consumption yet. So
I did see it. I was very impressed. That thing looks really slick and really, really nice. I'm looking forward to you do the alpha version of it. But if you're a student at Cybertrade University, you'll be able to showcase it. It's, like I said, it's pretty much the same thing. Not the same, but just a cleaner version of it. I did have somebody that did email us that was asking us some questions regarding about that layout. We did follow up with them. We did send it to them. And if you are looking, was it Anthony? This was the link. I'm currently looking for Jesus says that there was a link for the trade station set up to load into my platform. I'm not sure if it's on the YouTube page showing Jesus. He said, can you please send me the email link? Yeah, we did send it to Anthony. And if anybody has any questions regarding about getting that, just send me an email at fausto@ctucorp.com and we'll get you that link. I think it was a link that you sent over, Jesus, to Rich.
Yeah, I sent him the zip folder. Correct. Yes.
Yeah, that's what it is. Gillis just said the same thing. How do I get the ELD folder for option scanner and indicators?
Yeah, and Gerard, just to clarify, the SMCI example is just a symbol that showed up on my scanner, and I picked it just at random. I really didn't do much analysis. So if you're asking me if I'm personally bullish on SMCI up to $45, no. I would have to do a little bit more analysis there just to see if it's actually going to play that way. But it's just a hypothetical example that we showed here. Yes.
When we were at the summit in Florida, we were talking a lot, Jesus, about about the Bitcoin stocks and stuff like that. And I know that now that I don't know if people know this, but now you can trade a lot of the crypto stocks, not just crypto, just more of the ETFs that are out there. What are you seeing out there on IBIT? Because Bitcoin's been doing really, really well today on the options calls. So you could just show us a quick little example of what you see on the options on that.
I haven't looked at, I'm not even sure if TradeStation supports, the options on Bitcoin. I know that it's a new product and it's been recently approved. Let's look it up, because I know that the symbol would be BTC USD, right?
No, IBIT.
IBIT?
Yeah, that's the ETF version of it.
Okay. So there we go. We have the options on the trust, on the ETF. I really couldn't comment. I really don't follow these options, so I don't really have much to say about them. I know that a lot of people are following Bitcoin, and it did reach that $100,000, value.
101 now.
It did a big dip, though. I saw a comment here about you doing a video on having a dip on Bitcoin. It went down to 95 all of a sudden, right?
Yeah, I did a big video yesterday on it because it had a major support at 95. Really, 91 was the big one, but it just shows you how volatile it can get. But you know what? You don't have to trade Bitcoin, you could trade the ETFs. There's so many of them out there, but it is here to stay. What was not awesome was that people don't know this, but now they just launched the options on it. So, which was great. And, and you can start trading against it because there are a lot of people that want to trade those stocks. And we hardly been talking about them that much, Jesus. Just recently after this, the whole Trump rally that came in that made the market really take off. So I think everyone needs to understand you got to pay attention what's hot for the industry. If it's COVID, if it's financials, if it's AI that we've been talking about. You got to just, as traders, as been there and seen it and been through everything I've been through all these years, you have to kind of pay attention to what's moving in the market. Because you could turn your eye. Next thing you know, you're holding the bag and you get crushed.
Yeah, correct. How does that IBT move in relationship to the BTC USD? Is it very correlated?
Very, very, very similar. Very similar. You could see the order. You can't. What's nice about it is, that I'm really big on the TradeStation platform using the matrix, and it does got really nice iceberg orders out there, big block orders at certain price ranges. But yeah, listen, it's a lot of people betting on it going down, but I haven't seen it. It's like every time it backs off, it just keeps making a big pop. You know, like today, it's doing up really, it's moving up really, really nicely.
I can see that. Yes.
Yeah. Yeah, it's moving, and it's moving side by side with Tesla too. I mean, we're up 5%. I bid. That's a lot. It's, you know, what's the high on that? 59.
Yes.
Yeah, 59. So we're almost there. We're almost there. But Jesus, thank you so much for being here. It's always been a pleasure. It was so great seeing you again. And you guys run such a well organized operation at Trade Station, and the events that you do is just absolutely great. And I highly recommend. We'll let everybody know when they're doing another event. But I really, I've never been to a better, more, fun, great food, great entertainment, great staff, great locations, great everything. I mean, having at the Miami University was just absolutely just a great experience in its own. And just look forward to the upcoming masterclass that you guys do. And we'll let you guys know when they're hosting them again. So it's always nice to meet. You always have to meet. It's always nice to be there face to face. I mean, these webinars are great, but you know what? When you're there and you're there face to face and you get to talk on the side, it just really makes things so much more educational, and makes it more, it makes a better experience of why you want to do business with Trade Station. But if anyone wants to know how to get a Trade Station platform, we showcase it in our cyber group trading room, and we've been showcasing it since the day we started this trading room. Just email me and we'll get you a nice little demo of that also. All right.
Great deal. Well, thank you for having me, Fausto. It's always great to share with them.
No problem, Jesus. And don't go anywhere. We're going to pick up where we left off right here. I'm going to be teaching a little bit more about the Trade Station platform. I'm going to show you a couple of techniques. We'll talk about some stocks that are moving today, what's going on into this close, how to use it. We'll talk about the level 3 and level 4 and all that good stuff. But thanks for coming, Jesus, and we'll see you soon.
Bye, everyone.
All right. All right, traders. So let me just get my PowerPoint up and running. We're doing great timing here, and maybe we'll get you out of here a little bit earlier and, get you to trade the close of the market. So let me just bring this up really quick and share my screen right here. All right, there we go. All right, can everybody see that okay? Just give me a chat back. All right, Gillis, thank you very much. Everyone else, hope everybody's not sleeping. Hope everybody's been paying attention. I know that it's a long day, but you know what? Great speakers, great content. You got to learn before you can earn. I always tell everyone this: the stock market is not going out of business. So anyway, let's talk about the capitalizing of Bitcoin at 100,000 price surge. I'm a day trader. People always ask, what does a day trader have to do about Bitcoin? Listen, some of us are in our 60s, 70s, 80s. And I thought this is for 18-year-old kids. Where am I getting involved in it? Well, listen, when you have companies like BlackRock, if you watch any of my videos, me being on NASDAQ doing presentations, I remember just last year, a year from today, I'll never forget. I was talking about it consistently with NASDAQ. I did those presentations. You got BlackRock. If they get this thing approved, this ETF, the market's going to make a big move. Listen, these are the biggest, brightest, most powerful people in the world. You heard Melissa saying it, Armo talking about it. The reason why she lives in New York, she's hanging out with billionaires. She sees them. You're not going to beat them, but you could join them. And that's what it's all about. So I think everyone has to understand a little bit more about what is the whole thing that's going on with this stock and where is it going? Okay. Well, first of all, before I move forward, just a huge thank you to all the educators that are being here for this week. And by the way, we are not done. Our keynote speaker, Michael Cow, is going to be here tomorrow. So it is a 2-day event. So please keep in mind, we're going to be here for 2 days. We still got to catch up on that. But so far, I'd like to thank all the educators for being here for today. Now, like I said, everything, always a quick little risk disclaimer. I know these things are boring, but just remember, it's all varies. There's a high risk in trading. Please be very smart and wise before you go out there and trade, because you could lose a lot, and you got to learn before you can earn. And that's why we're here. So anyway, quick little poll. Just want to ask everyone a question. Does anybody here own Bitcoin or a ETF or anything that has to do with the Bitcoin market? Abdul, you do. Okay. Anybody? Nasha, you do. Eric, not you. Okay. XRP, you're doing pretty good with the XRP. That thing is doing really, really well. Listen, some people don't realize there's a lot out there. I own BTC and other big other coins. Okay. All right. Is anybody give me a no? We got over 100 people in here. Anyone here that doesn't have it? Don't be embarrassed. Don't be scared. It's okay. You know what I mean? Just be honest, because what you're about to learn, this trades like any other stock out there. Okay. All right. Now, the next question is what we're going to do before we go into questions. Let's go look at the live markets. So you can see here is that IBIT is one of the, I own this stock myself, and I sold it. I bought it back. I sold it, bought it back, you know. So it got very, very hairy here. You can see here on the long-term chart that when the elections were over on this day, you could see here the next day on the top left-hand corner, you see on 11:05, this is the ETF of IBIT was trading at 39. And you could see where it just literally took off, even if you missed it the next day. I mean, it went all the way to $44. This is what we call a Fausto flag, which is called consolidation. All right. Broke all-time highs. Boom, shot up over here to 50. And it's just nonstop. It's like every day is just a new adventure. Now, I'm going to show you something called level 4, which is this right here. And right here, you're looking at Bitcoin. And we're going to talk about all these things right here. We're going to talk about all these orders. We're going to talk about where are the Bitcoins, where's the resistance levels. You can see it right now. It's trading at 100,000 and 100. Okay. We're going to talk about the support and resistance levels. We're going to talk about, you know, where's the highs, where are the lows, all that good stuff. But the main thing that I kind of teach here at Cybertrade University, for some of you know me, is I teach you what's called the right of the chart. Okay. A lot of people like to focus on the left. I'm going to teach you the right. So let me bring this back down and let's talk about the Bitcoin. So Bitcoin broke over 100,000. I don't know if I will even say this month, but even today. Now, have any of you here subscribed to my channel on YouTube or Instagram or TikTok or X? Any of those? Anybody here subscribe to it? Just give me a yes or no. Because I did a really big video, and I'm going to show you the video while we're here. Okay. All right. So I have some staff here. Could you guys put the link over there? All right. Hold on one second. All right, hold on. We got John Seville that's logged in. Just give me one second. All right, traders. So really quick, I just want to show you the video I posted on Bitcoin. I'm just going to go on Instagram. It's the same video on all of them. Instagram. There we are. Here we go. And let me just go to my profile. Here's all the reels that we got. Something went wrong. Let's go up again. Reload page. Oh, that's weird. All right. Let's go to YouTube. Looks like Instagram's having a little problem here. All right, so here's the shorts. And here's the latest video that I posted right here. Okay, so I want you to just watch this video really quick. All right. So in that video, as you're watching it, it shows you how it went from 100,000 and went all the way to 95,000. There was literally about 500 Bitcoins there looking to be bought. And then all of a sudden, over 700 actually, and it got filled. You can see that number dropping and you see those orders. So that was called something called refreshing. So that person obviously had more orders to buy. So no matter if you're trading Bitcoin, if you're trading or any other stock out there, they all trade the same thing. Now, the reason why I want to talk about Bitcoin, because you know what? That's the big news that's going on right now. That's really what's going on. So let me now, I posted a link up there. Hold on one second. And everyone, there we go. So there's the link if you guys want to watch it. And then you can basically make sure you subscribe to the channel and everything else. All right. So let me X out of this and go back to the link right here. So do you think it's going to go up to 200,000 by 2025? I'm just curious. Do you guys think it's going to hit 200,000? Anybody here think so? I love asking this question. Yes, yes, yes. We got one no. How about everyone else? Eric's got a little smirk, you know. Higher. All right. All right. I'll get that one. Okay. All right. Well, listen, the same people who said that, they're saying it's going to probably go 200,000. You could see the news is everywhere. And it's like, okay, is it still too late to get in? Well, let me explain something to you a little bit about myself. Okay. I've been doing this for 35 years. And I was the biggest skeptic about Bitcoin. My son came up to me one day coming from college. He said, Dad, all the kids in school are telling me to buy this Bitcoin at five. You bought it to buy it. I'm like, I don't buy penny stocks. I mean, just I have nothing against them. I just can't see what's going on. Well, anyway, make a long story short, he went out there and he bought the stock at $500. I'm like, you bought a penny stock at $500? What are you, a complete moron? You know what I mean? So, and this is like, when it was $500, it was probably maybe 5 years ago, 4 years ago, some crap like that. Well, anyway, he always was telling me about it, pushing whatever it is. And I'm like, listen, I've been doing this for long enough. I've seen everything. And I don't know what the hell this thing is. It's like an NFT or whatever it is. You're buying. What are you buying? You're buying air? You know, what are you buying? You know? So not to go over the history of what it is, but anyway, he sold it at 5,500. And he's like, you see, Dad, I'm a better trader than you. I'm like, listen, you got lucky. Okay. At the end of the day, you got plain old lucky. But as a trader, what you've learned is that being a trader, COVID, who would ever think in 100 years that we would have a virus crisis? Okay. Who would ever thought that the banks will go out of business with the financial crisis? Okay. If I told you that, you'd be like, that will never happen. It happened, you know? So the thing is, nothing really, shocks me. But the reason why I'm trying to get to over the course of all these years of trading, you have to learn and know why these things happen. You got to know, you got to be prepared for it, because if you're on the wrong side, you're going to get hurt. Listen, we've been talking about the elections for 3 months now. Okay. And everyone here must be so sick and tired of hearing about the elections. And unlike some of you couldn't hope to wish it would get here fast enough. Right. And some of you, were huge Harris fans, and some of you are huge, Biden fans. Some of you huge Trump fans. And you're like, oh, if Trump's get elected, the market's going to crash or it's going to go up, whatever it is. But if you got to listen to the experts, you really got to listen to them, and you got to see the trend. And the thing I always tell everybody is this: I don't care what side of the political aisle you're on, but if you take things personal, you're going to lose everything. If you hated Trump and I tell you, okay, well, the market's going to crash. I said, oh, really? You know better than Wall Street? Short the market then. Short it. Short it. Obviously, you know more than Wall Street because you're from Main Street. Short it. Okay. And guess what? How did that work out for you? And then there are people who say, you know what? Oh, if he gets elected, market's going to rally. Okay. Well, who won that game? Well, it's like basically going about Bitcoin. I've been doing this long enough. I've seen all walks of life. I've seen what things happen. The big difference is what you see of a lot of the people that are here is that we survived these things. We survived all these different markets. And if you could survive it, you could do this for the rest of your life. It's one of the best jobs, but you got to learn how to play the game. You have to surround yourself with good people that play the game. You want to trade with people that are better traders than you. I was always taught, my dad always say, don't be the smartest person in the room. Okay. You don't want to be the richest person in your town. All right. You got to, because you know what? You just reached the limit. So you got to surround yourself. So what I'm going to cover today is I'm going to talk about how to follow the big money. Okay. And that's where that comes about. So following the big money, I want to start off with we're going to talk about Bitcoin today, and I'll talk about IBIT. Now, with the stock IBIT, you could see right here that from 1 to 10, what the market cap is. Gold is number 1, Apple, Nvidia, Microsoft. I mean, look at Bitcoin where it is. It's more than silver. It's a $1.8 trillion. I think it's even more than that now after seeing what's happened lately. But it's just amazing how big these companies are. I still remember Apple when it broke $1 trillion, the first $1 trillion company. Okay. Well, look how old Apple is and look how old Bitcoin is. It's probably the youngest out of them all of them there. So I don't know too much about Bitcoin. I really don't care about it. I'm not looking to teach you, but what I'm here to teach you is how to get involved and how to trade the markets using level 3 and level 4. So Coinbase obviously is an exchange. You can't just open up a brokerage account, like TradeStation or any of them and say, hey, I want to trade, Bitcoin. You have to go to these specific exchanges to trade them. Now, regarding about trading them, these stocks have done really, really well. They've done great, due to the market. But there's more to it than just, understanding about the Bitcoin market and everything else. It's all about following other exchanges like BlackRock launching the ETF on it. Now, getting back to that video I told you, we'll post a link up there, but I was on NASDAQ many of times talking about it. I said, listen, when you have one of the most powerful brokerage firms launching an ETF, it is not going anywhere. It's here for good. It's here to stay. And when that happened, you could see it right here in February. The Bitcoin was at IBIT was at $25. Okay. And you could see over the course of the year, it's literally almost tripled in value, which is not bad. There's the link right there. But you know what? It gets better than that. Look at Mark Slayer. Okay. The CEO of MicroStrategies. This guy is a lunatic. This company has nothing to do with anything that's to do with crypto at all. But he's like, I don't care if we sell iced tea. I don't care what I'm taking the money of our profits and we're going to go out there and we're going to buy Bitcoin. And you know what? It made the stock's value go from 50 to 500. So you didn't have to trade Bitcoin to make money on it. You could have traded some of these stocks like MSTR, Hood, another one of the largest Bitcoin holders in the stock. What does Robinhood have to do with it? You probably heard of Robinhood because of GameStop. Remember GameStop? Roaring Kitty, when that whole thing. And then Robinhood came and all these kids were trading on the brokerage firm Robinhood. Well, the guy wasn't a dummy. He didn't care about being in the brokerage industry. He took all that money and all that profit. He just bought Bitcoin. And you know what? They're not making money because of their trading department, charging 18-year-old kids to trade. They're making money because they own a shitload of Bitcoin. Okay. And not only that, but there are other stocks you could have traded. Mara, CLSK. These are mining stocks. There are just so many things out there you could trade. But the best way to see these stocks is what I'm going to talk about right now. I'm going to talk about something called order flow. Okay. Now, you could apply this towards anything you trade. Amazon, Google, Microsoft, NVIDIA. Once again, all the videos you watch from me all have to do what I'm going to show you right now. So let me explain to you what it is and how it works. And I can tell you this, what you're about to see is going to be so disturbing. You're going to see like, wow, you could actually read the right of the chart. Yes. And that's the power of doing this. So how do we read this data? Well, before I move forward, let me ask everyone a question. Does anybody here have NASDAQ Book Viewer level 3? Anybody here have it? Just give me a quick yes or no. Gerard, you have it. Okay. Elaine, everybody. Good, good, good. Well, listen, I'm going to ask questions because I want to make sure a lot of you are paying attention. Hopefully nobody's sleeping and walking away. All right. I know, and some of you have your chat to private. All right, good. So a lot of you have it. Good, good, good. All right. So let me show you how to utilize it. So basically, let me get my crayons out here and do some drawing. All right. Let me get some here. Okay. So you have your buyers and you have your sellers. And there's a lot of them. And they're at every single price. So you're probably looking at how you pay attention to this, how you know one's versus the other. Well, the big thing is this. If a stock's going down, okay, we're looking for buyers. And when you look down here, the biggest buyer is right here, 123,000. Now, there are buyers at every single price level. So some of you would be like, well, which number do I pay attention to? The biggest one. Because when a stock goes down and it hits the biggest one, which is $54, that's why you go from 12 o'clock at 54 all the way to a whopping 56. Okay. And wondering like, oh, how did I not know and bought it there and whatever it is. It has nothing to do with the past. It's all about reading the future. And the future is, where are those future orders? And there's your order right there. Big block order at 54. Now, the same thing goes. Let me just clear this out. And same thing goes for resistance levels. What makes stocks go down? Sellers. So as much as you might look at the past is not indicative of the future unless those same sellers that were in the past are in the future. So if I'm looking and I own Google, okay, and I want to take a profit because good traders always look to take profits, I need to see where the resistance level is. And right here, you could see how the stock went from 186, hit 185, and came all the way back down to 182. Why did it stop here at 185? Why not 200? Why not 187? Why 185? Well, resistance makes sellers. Sellers are located on the right. The biggest seller you see here is at this price right here, which is 185 for 87,000 shares. And there are 341 orders that make up the 87,000. Now, you see there's 300 share sellers, 100 shares, 250, yada, 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 yada. Okay. I don't care about any of those. Those mean nothing to me. You got to remember, the whole world trades every single stock out there. Every brokerage firm have orders out there. I mean, some of you own stocks I probably never heard of, or maybe 95% of people never heard of. But there are orders out there. But it's the big ones that we're looking for. That is what you call program trading. Those are what we call the algorithms. All right. So when you put a limit order out there, you're being aggregated with all those other orders out there. That is what we're seeing. So to think about this for a second, fellow traders, you're seeing every single order out there that is trading. So let's go over a couple of examples this week that made some big moves. PLTR. Okay. Made a big video on PLTR. If you haven't watched it, definitely watch it. Good short. Back in August of last year, the stock was trading at $20. Okay. August, September, October, November, December. This stock had not stopped since August from $25 to $75 a share. Okay. Now, when's it going to stop? I mean, because how many times have you let's be honest. You ever sometimes feel like you sell your winners too soon and you hold your losers too long? And like, damn, I wish I held this stock a little bit longer, or I probably wouldn't have sold it. Well, the thing is this. Not only did it keep going up, eventually it will come down, right? And it did. There's always going to be profit taking. And you could see how the stock just this week went from 81 down to 72, actually in one day, which is pretty volatile, right? You ever been in one of stocks like that? They're like, my God, how could that happen? Well, I could tell you this. I was one of those suckers. Okay. Well, I owned it all the way from 60. So, but I was like, oh my God, I'm like 81. I'm like, I just lost half of it in a day. Okay. So being a good day trader or trader in general, you got to have a game plan. And the game plan is, what do I do? Do I sell it here? I mean, do I take it out? Well, I got to see where the street is at. I got to see where Wall Street's at. I got to see where the buyers are located. And if I look over here where the buyers are located, you'll see on the buyers column, there's a big buyer right here for 150,000 at 71. Now, there are buyers at every single price level. But it looks like I'm going to have to hold the stock another $1 before it gets to the biggest price. Now, I already held it from 87. What the hell's another $1, right? So what do you think is going to happen when we get down to that price, fellow traders? It's going to hit it. And what do you think happens next? It goes right up. That is the power of having a game plan. And not only that, it didn't hit it once, okay? It hit it twice. Once and twice. So it came all the way down, hit it, went back up to 73, probably had a bunch of sellers out there, came back, tested again, went right back up. Now, some of you here might call this a double top, a triple bottom. I don't really care about any of that crap. I know what that actually means. Everyone has a whole philosophy about it. It's not about, double tops, triple bottoms, teacups and handles, and peaks and valleys. Let's just keep it simple. It's a buyer and a seller. Okay. That's really what it comes down to it. Now, let's look at another example. Tesla made a similar move, made a big run up, and it's still running. And you know what? You see Tesla run from 220 all the way to 380, another stock that did unbelievable from the November 4th elections. I mean, Elon Musk, if you don't know him yet, I don't know where you're hiding. I don't know if you're hiding on a rock, but I think everybody knows who Elon Musk is now. So Tesla stock has just been killing it, right? But the thing is this, some of us keep looking at it like, is it too late to buy? Or maybe I'll buy on the retrace. Well, listen, the stock did back off. Okay. I mean, listen, everyone's looking to take a profit at some point. And sure enough, it went from $440 and came all the way back down in one day to 380. And like, here comes the crash. Now it's going to tank. Okay, well, listen, where there's a tank, there's a buyer. And if you look right here at 380, you're talking 100,000 shares are going to be bought at 380. Now, when you look down on the buy list, I mean, there's not too many 6-digit numbers out there. I mean, you got some 5 digits, but they're not even that much. They're only like 10,000, 16,000, a lot of 2,000, 3,000. You're talking 111,000. How much money is that? How much money is that? 11100. Let's just do simple number, right? Times 380. Talking over $4 million worth of stock. Am I right? No, I spelled that's wrong. That's not right. I didn't add up right. 111,000 times 380. That sounds right. 42 million. There we go. I missed a zero. I know. Thanks, Gillis. So, it's $42 million sitting there on the floor. You think you're smarter than the $42 million and the 1,000 shares, the 1,000 orders that are out there? What do you think is going to happen when we get to that price? Hit it at 11, 11:30, 12, 1. Boom. Eventually, thing just went right up to 390. Okay. Does anybody know where Tesla is right now? 419. Okay. So when you saw the stock back off and like, oh, this is the crash, this is the bang right here, right? And sure enough, everything has to go up before they can come down, because that's what we were looking at right here. Went up, hit the buyers, went up, hit the buyers, went up. And I'll be honest with you, I'm not seeing anything. I'm not seeing it dropping anytime soon. All right. Now, how about resistance levels? So Tesla goes up, it pops again, right? Well, listen, there's always profit taking going to show up. Where do you think resistance levels are going to be? It's not going to be some Fibonacci or MACD or an SMA. It's going to be a big seller. So you had 128,000 to be sold at 408. Now, you heard, just getting back to Melissa earlier, you heard it because she was talking about the options and she screwed up herself. She didn't know it was going to hit 400, that soon. And the thing is, you got to have a game plan. Great traders always look to take profits. All right. So here you have the stock went from 390 all the way to 408 in one day. I don't know about you, in an hour. I mean, that's a lot of damn money right there. I mean, you're talking about literally almost 20 points. 20 points is a lot in a movement of stock like that. On 100 shares, not even 1,000, on 100 shares, that's a $2,000 profit. That's a $500,000 salary right there. Who doesn't want that job? Okay. So, I mean, granted, you could see it went from 480 all the way down to 398. I mean, I know it went higher. I just showed you it did. But we didn't talk about sellers getting taken out, did we? Abdul's a question. Can you show us an example of this in the stock and it gaps up, planning in a trade? Well, Abdul, obviously being a student, I can't show you that right now, but we'll cover that in class. Okay. All right. Does anyone here use ChatGTP or AI? Anybody here use any of this stuff? ChatGTP or AI? Well, if you're not, you will. And regardless about not using it, let's look at some of the stocks out there. AI stocks have taken off also, same reason. Okay. You could see stocks like AI, all of them. Now, where do people want to sell a stock like the AI stocks? Got to have a game plan. Okay. Because AI has been the big news out there. AI, quantum stocks, all those things have been doing great. PLTR is an AI stock for that wise, that stock also went up, military, cybersecurity, AI. But you just got to have a game plan. And when you have a game plan and you want to be able to get out, you got to know where the sellers are. So as we're looking for sellers, 300,000, 45. Now, I don't know about you, fellow traders. Do we really need a chart to tell us that we're going to hit a big resistance levels at 45? What do you think? Yes or no? Right. No, you're not. You could see it clear as day. I mean, not only that, but you're talking about, the stock is only trading at 42.20. You literally have about another $3, almost less than $3 away from that big resistance. You don't think we want to have a game plan to get out there? All right. I mean, that's really, that's what the big failure rate in trading is all about. Well, what do you think happens? Goes from 37 all the way to 45 in one day. And you know what? It took a little time. People that realized that he ain't moving. I'm not moving. I'm not moving. I'm not moving. 10, 15, 20, 30 an hour. Boom, comes back down. And guys like, well, let me try one more time. Okay, 43 comes back to 45. You're like, damn, the guy's still there. And you know what? You think we're the only ones that see that? Think about this for a second. How many of you here would make smarter and better trading decisions if you knew those orders were out there? Do you know 99% of the people don't see that? The only 1% see that are our students at Cyber Trade University and the market makers that trade on Wall Street. Wouldn't it be nice to see where the buyers and sellers are in a house that you're looking to, buy or sell? Well, the stock market, you can. Now, who here would like to get Book Viewer? Who would like to sample it out for a little bit? Anybody here want to try it out? All right, this is what you need to do. I want you guys to email me right now at Fausto at C2 Corp. So while we're here, bring up your email right here and just type in Fausto. There you go, Fausto at C2Corp.com. And just write NASDAQ book. And also make sure you give me your name, because I know some of you here I don't even recognize. Yeah, I want to call you by your first name. Fausto right there. And just hit send. All right. Can everybody do that right now? Hit send. And I will get it in my inbox. There I go. There's my email. Fausto. There we go. NASDAQ book. All right. Do that right now, and I'll send it all to you. Now, in this email that you're going to send me, I'm going to send you 2 videos, about 5 minutes long. By the way, this is NASDAQ's website. This is not mine. I don't own this. I'm not selling you somewhere a third-party software. You have a seat on the exchange, okay? You're going to see every buyer and seller out there. So what I'm going to give you is 2 videos, 5 minutes long. It's going to show you where to purchase it, because I want to make sure you don't buy the really expensive one, because you don't need it. And then also what it's going to do is going to show you how to set it up, because the defaults they give you is just totally a waste. Okay. Logan, I got yours. Latha, I got yours. No problem. I'm going to send it to you. Anthony, John, I got your email just now. Okay. And like I said, what's the worst thing that could happen? You go to the exchange, you play around with it, but you could see the value of it. So just keep in mind, I've been doing this for 35 years. For me to get this data, I had to be licensed. I had to be a Series 7 licensed broker, okay? Now they eliminated all that. Now it could go to the general public. So why you would not want that, I have no idea. Logan, I just got yours. Bill, there you go. Look like everyone's paying attention. There we go. I see you guys are starting to email me. Samushi, I got yours. All right, good, perfect. All right, good. So it looks like you guys are paying attention. A lot of people like it. Good. All right. So as you guys are filling that out and emailing me, let me talk about something else that's out there. There is something a little bit higher called level 4. Now, level 4, basically envision this. You have everything in level 3, but now you're going to have it on a heat map. So you're going to start seeing it as in just more clear on a chart. So you can see those orders out there. So the other one, you're seeing the raw data. This one, you're getting to see it on a chart. Now, I'm going to show you how to use it, but I'm not going to show you where to get it as of right now, because you know what? It's going to be overwhelming. I don't want to lose anybody here. I want you to get it. I want you to do this as inexpensive as possible. Okay. I don't want to scare anybody, get nervous, but once you understand the real data of it, then you'll understand, oh, now I understand why they use this. I understand why they use that and all that good stuff. All right. So let me explain to you what we got going on here. So Bitcoin had nearly a 1,000 Bitcoin to sell at 100,000. So you can see right here, here's the current order book. By the way, I got a couple more people who emailed me. Frank, I got yours. Okay. Frank from the Netherlands. Oh, wow. Very interesting. Good to meet you. Bill, I got yours. Alan, Hewitt. Nashia, got yours. Bill, yeah, look, you can see everyone emailing me right now. Thomas, Roy, Bill, good. I'm actually a little shocked. I'm not getting everyone. Well, I know we have a lot of students here, but I would think we'd probably get close to 100 emails right now. Who wouldn't want this stuff? Who would not want to see it on the exchange? Do you know when I started, I had to pay, it cost over $1 million to have a seat on the exchange? Is anyone here who pay $1 million right now to get that data? Well, guess what? Doesn't cost that. It's free now. They got rid of all those people. So you want to learn how to make money, fellow traders? You got to have a seat on the exchange. Okay. And you want to have a seat on the exchange? Here's your chance of doing it. Let's get back to Bitcoin really quick. Let me show it to you, because now you could see it on futures. You could see it on options. You could see it on crypto, not just on stocks. Okay. So imagine, let's say you don't have to like Fausto, I don't really trade Bitcoin. I trade futures. You know what? You could see it on futures. They're like, oh, okay, what about stocks? You could see it on stocks. We're going to check that out on stocks too. But the thing is this, when you have $100 million of something that's looking to be sold out there, why would you not want to know that? Why would you want to question that? Bonnie, you know what? Just email me. Don't send me your email. If you want that, don't put it in a chat. Just copy and just send me that email. Oh, I just get yours, Bonnie. There you go. You're from Germany, right, Bonnie? Is that you? Okay. I just saw you just email me. All right. So anyway, you see, when you're looking at a chart and you see how Bitcoin and you see the people talk about the candlesticks and the green ones and the red ones and all that stuff. And then you're wondering, why is it going down? And when is it going to stop? Oh, this is the big crash. Listen, when it comes to that, there's always going to be buyers and sellers at every price. Program trading rules, okay? But what I want to show you is how it's going to work for you. Because getting back to Bitcoin here, you could see that there was 100,000 shares. Here's 100,000. Oops, let me show you. Okay, there we go. There we go. So you see right here, see how thick that line is? That was around 10 o'clock this morning. You see that green ball right there? That is an indication of that's a buy. That's what's called time in sales. That means somebody executed all those shares on the offer. What happens when somebody buys a bunch of shares on the offer on the sell side? That means somebody wants it. That's called a demand. And that's why the stock went from 100,000 and now we're all the way up to an all-time high today of 100,140. Okay. Now, regardless about Bitcoin, what I want to do right now is this. Could anybody here give me a stock? Any stock. And we're going to look it up and we're going to see if you could tell me where. I want to see what you're thinking. Okay. We're going to have some fun here. PGR, NVIDIA. Actually, NVIDIA is pretty good. I like NVIDIA. NVIDIA's got good support and resistance levels. Okay. So let me bring up NVIDIA. NVDA. Okay. Here's NVIDIA. So looking at NVIDIA, all right. Stock right now is trading at 139. Okay. All right. So with that said, hold on a second. And I'm bringing this over here so I can bring it up. Could anybody tell me where is support and resistance levels on NVIDIA? Let's see if you guys could figure this one out. $150. Okay. So I'll draw a trend line. You said 150, right? Okay. Anyone else? Well, we're at 140, Bonnie. So we're looking at resistance. What else? 144. All right. You're saying right there. Okay, it's 144. Too small. Okay, I like it. You said that, so I'll zoom a little bit closer. How about that? Does that help? I'll move a little bit closer. All right. Does that help? Okay, good. All right. Where else? $144, $145. Okay, so 145 is right there. All right, anybody else? Anyone else? We're going to get there, Gil. So I'm not going to get there first. First of all, right now, we're going to see where everyone thinks. Now, by the way, if you can't answer this question, don't take this the wrong way. You should not be trading. You should not have a stock dictate and tell you where it's going. You should know where it's going before it gets there. You need to read the future, okay? Don't be looking at the rearview mirror. Look in the front of the mirror, okay? You want to see what's coming up in the future? Well, guess what? You could see the future. I'm going to show you how to read the future. So what I'm going to do right now is I'm going to come over here, and I'm going to bring you level 4. All right? Now, let's see what we got going on over here. We got 1.5 million shares looking to be sold at 150. You got 700,000 shares looking to be sold at 145. Okay. You got another 400,000 shares looking at 130. So, how do you feel right now? One of you guys said 144. Do you see sellers at 144? I don't see any sellers at 145. I mean, there's sellers out there, but the real big seller is at 145. And the really, really, really big seller is at 150. Right here is 930. You see how this is all empty? This is called program trading. So you get to see the orders exactly when they open up. And at 4 o'clock, you'll see when they exactly cancel. That's all program trading. All right. Now, let me ask everyone a question. Did I lose anybody? Everyone's following along? Okay, we're going to do one more. Give me another stock. Let's do one more. SMCI? Maybe. Apple. PLTR. PLTR we have up here already. PLTR. We'll look at that one. Okay. So PLTR. Okay, so everyone here tell me, where's the resistance levels on PLTR? Where's the big block orders out there? 73, 75. Okay. Yeah. You see the line, right? 75, 73. And where's the support levels? Where's the supports? Yeah. 70 and 68. Okay. So let me just zoom out here a little bit. Look what happened this morning. It went from 73, went all the way down to 68, which we know is support levels. And then it went up, held here. Another buyer shows up at 70. And now we're kind of peaking here around 73. And if it breaks 73, it's going to go to 75. Now, here's the dumb question. Did you need an indicator to tell you that, Bill? Did you need to look at the Fibonacci to tell you that? You just picked the number out. You know what? You guys are doing such a great job. I'm going to show one more. All right. Let's look at Tesla, because that one's been flying, right? Where's Tesla? Let's clear this out. You could do this on any stock. Any stock. All right, it's got to load the data. It takes a little bit. All right, let me go back a little bit further. Let's go 6 hours, get some more data here. All right, so I don't know if Tesla's going to be a good one because it's breaking all-time highs. But you could see right here, big block orders are looking to be bought right around here, 173. I mean, I'm not seeing anybody till 450. Do you? There's no, I mean, there's sellers everywhere, but not even a lot. Could you imagine this thing going to 450? You know, that could happen. That could happen. Well, Bill says I'm not familiar with these types of charts. Bill, you're not looking at a chart. You're looking at a software. You know, you're basically seeing the orders in the future. Okay. The things that you always wanted to know that existed. And that's what we're looking at. Apple, we'll look at that. Some of you said where Apple is. Let's look at, just go check out Apple. You want to know where the orders are in Apple? Let's go see. So here's Apple. So you can see Apple's been having a really good move. 225. Things been on a nice run up. Hit a price just under 250. Now starting to come back down. Now we're at 246. I mean, it's been a great swing trade, but you know what? 250. I don't know what that means. I know what that means. Look at all the red lines. 250, 251, 252. All the red lines are at right around the 250, 250, 251. Would you see any buyers out there? No buyers. All the way down to about 240. But there's a shitload of them hovering around 250, 251. So no wonder why this stock never went past 250 today. Wouldn't you like to knew that you were able to see the future of those orders? Okay. That's the difference between being a trader and an analyst. Okay. Now, this is why Cyber Trade University has been endorsed and sponsored by more brokerage firms than any school in the industry. Benzinga, NASDAQ, Metastock, Charles Schwab. I've done presentations for every one of these brokerage firms. Okay. We've been sponsored by all these brokerage firms. All right. Because, and believe me, they do their homework. All right. And it's not just a Fausto show. We have a full staff at Cyber Trade University, several instructors, customer service, technology people. We've been doing this for 35 years. We love what we do. We take care of our customers, but we keep things simple. Now, not only that, but if you do your homework and look us up on Google, we're probably the only school that you would see that has a 5-star rating on Google after 35 years. Okay. People love what we do. They love talking about us. We don't ask them to write about us. They go out and do it on their own. But if you want to read the reviews, I think you highly recommend you should do that. Now, if you want to learn more, okay, this is what I want you to do. Follow me on YouTube, okay? And we'll post the link up there. You can go to Cyber Trading U, or if you're a fan of Instagram or TikTok or Telegram, whatever it is, at least follow us on YouTube, okay? But they're all great. We post every day, okay? We do a lot of shorts. We don't do as many longs as we used to because the attention span of people don't want to sit there for 20 minutes because you're doing it right now. But if you want to see that quick speed, I mean, I think that one works out pretty well. But this is what I want you to do. If you like what you see, I'm going to offer all of you a 1 week in our professional trading room. Okay. So if you're looking you want us to elaborate a little bit more on this and be like, you know what? Could you show me how to use this? Can I see the traders in the room? Can we watch what you're doing in pre-market? Well, all you got to do is click on that link. We're going to post the link up there, or you could take your cell phone, you could scan that QR code, and you could register immediately. Okay. So depending on what you like to do. Now, listen, I could only teach you enough for 45 minutes, but I can imagine what I would teach you in a week. For $9. And the reason why we're asking only $9 is because, you know what? We want to make sure we know who you are. We just don't let everybody in the room. We're not looking for free people. So, and I feel like sometimes you got to have a little skin in the game, you know? Now, this is what you're going to get for the $9. You're going to get live audio commentary. Okay. We do all day. You're going to have access to all the traders in the room. You're going to see all the trades, all the iceberg orders, all the examples, all that good stuff. You're going to also have access to all the training webinars that we have, all the podcasts that we do, all this great stuff. And at the end of the week, if you feel like, it's not my style, listen, I'll give you $9 back. I don't need your $9. Okay. I'm just looking for serious people that want to learn how to trade. I'm not going to want to waste my staff time to talk to you on the phone and do these walkthroughs with you, but we do take trading very seriously. We take customer service very seriously. So, but we're not asking for $9,000, $9 million. I think everybody here could afford $9. So imagine what you learned in a week. Imagine what you will learn. You learn in here in less than an hour. Imagine you learn here in a week. Okay. So all that stuff you're going to get. And one other bonus I'm going to throw in there for you. If you register, everyone here, I will actually do a free coaching class with you. I will personally talk to you on the phone. Okay. And let me tell you why. Some of you here are going to want to have some serious questions, and, you don't want to just talk to anybody. You might want to ask me personally. And you know what? There's no one's going to be very more honest than me. Listen, I am looking for traders that I could be part of my team. I'm always looking to recruit new traders because eventually you're going to learn so well and you'll move on and, maybe teach your own kids, so we're always looking to recruit new traders and we got to have that conversation. So everything you're going to get here from pre-market trading to all the way to the after hours, all day long, we're going to be trading with you. All right. One person was asking me about the trading room. Can I see it? Yes. So the room right now, we do have it open. I do have it here somewhere. Oh, there we go. I'm going to go to my portal page. And they're talking right now. You'll see here's a portal page. I'm just going to log in. Here's my name. And here we are. So you could see right here, we have Josh right now. Actually, he's silent right now for a second, but he's actually showing you the execution system. He's trading. You can see all the traders right here. Let me just scroll this up on the right. And yeah, these are all the traders right here. These are all the traders around the world. Look, Florida, Texas, Ontario, Canada, Quebec. A lot of Canadians in here. Arkansas, Chicago, Tampa. A couple of people overseas. I know there's some people overseas here. And you could see, like, here we are with showing the stocks that we're trading, all that good stuff. We're putting alerts. He's speaking. You could hear him. But we're doing live commentary. All this for $9. All right. So does anyone have any questions? Any questions so far? Like I said, everything that we talked about, if you want to learn how to use the platform a little bit better, you want to trade about it, take a shot. Now, regarding about a couple of questions came across here. How much money do I need to trade? Listen, $9. That's all you need. Don't worry about a brokerage account right now. Don't worry about how much money you need. This, you know what? This might not be for you. Okay. And the $9 is peanuts. It's the time that you got to put into it. So before you worried about like what kind of brokerage account I should open up, should I do this first or whatever? Listen, it's fresh in your mind. Just get through this first. We'll worry about that second. That's not that important. Okay. The other question is, do you show the live trades? Yes. So you're going to see live trading in there all day long. But the thing is this, we really don't focus on just showing you what's moving. Part of our education is more teaching you how to think for yourself. Remember, you have to hit the button at the end of the day. Okay. And that's the power of that. Any other questions? Any other questions out there? Oh, so when you do register, everybody, very important. We have 5 questions we get to ask you, just like going to a doctor's office. Do you have high blood pressure? When's the last time, do you have a fever? Any medication you're on? But I'm just kidding. But no, really, we kind of ask those kind of questions. Who's your broker? What kind of trading? Who trained you? The more you let us know a little bit about you, the better we can advise you, make sure you're making the right decision. The next page you click on, you're going to make an appointment. We're going to do a walkthrough with you. You'll make your appointment with me. I would recommend you do it 2-3 days after you're in the trading room. And then by the time, at least you get a little bit feeling what we're doing in the room, so we can kind of answer your questions more great detail. All right. And then you can find out if you want to move forward or not. But it's a good way to start. What was the other question that I had that came across here? When could I start on Monday? Okay. Yes. Listen, just lock in the rate now. You know what I mean? I know the holidays are coming around. If you want to wait after the holidays, but the thing is this, worry about that. Just lock it in. Tell the education advisor when you're ready to start it, and we'll get it from there. Okay. But while you're standing here, it's fresh in your mind. Just let's get it out of the way. All right. Any other questions? A couple of people I just want to do a couple of shout outs with. Roy from Nevada, I just got your registration. Welcome aboard. To Cal, I got your registration. Welcome aboard. Who's this? Lucy, got yours. Welcome aboard. And Mike from Chicago got your registration. Welcome aboard. All right. Any other questions, fellow traders? I know it's a long day. I know we had a lot of great presenters. You know, we should definitely try a little bit of everyone else. Remember, we still got all day tomorrow. We got our keynote speaker that's coming tomorrow. And please make sure you come listen to him. I think you guys have some great questions. Probably one of the better options traders I know in the industry, Michael Cal. I mean, definitely look him up. He's on CNBC every day, almost every day, but very, very big contributor. And you know what? He is so honored and privileged to be here. Okay. He loves talking to people like you. He hates seeing people lose money. He's seen my training. He's here because he believes on what we do and believes that, you guys need to do things the right way, but you gotta learn before you earn. Very important. Okay. Any other questions, fellow traders? Scott, I got yours for the book viewer. Yo Ching, I got yours. Ravi, I got yours too. Matt, William Rosevale, I got yours. Welcome aboard. I'll get that sent out to you. What was this? Patel, got yours. Eric, got your registration. Welcome aboard. All right. Any other questions, fellow traders? All right, then. So listen, I will be back here tomorrow. Look forward to seeing you all here. Thanks for sticking around for the whole day, but we're not done yet. We just got another big day event coming up. Let's get ready for tomorrow. And listen, lock in your rate right now. Lock in your times right now, because tomorrow everybody's going to want to register and you don't want to lose your time slots. I know we're going to the holiday season, and, there's no better time learning than now. You see what's happened with a lot of these stocks. You see what's happened with Bitcoin. You see what's happened with Tesla. Tesla just broke 422. Okay. You got to learn. You got to learn before you can earn. But is it ever too late to learn? No, it's not. It's never too late. Stock market's never going to go out of business. You and I guarantee, will die one day. And I guarantee stock market's not going to go out of business. But you got to learn how to play the game. All right. And the right thing is, imagine you could see the right of the chart now. See where those orders are. Thanks, everyone. Good to see you, Gillis. Thank Gustav. See you then. Bye-bye. See you all tomorrow at 10 a.m.